Hello CMA final students, transform your CMA final direct taxation and international taxation paper with our marathon classes. This marathon is exclusively meant for December 2024 attempt because after that there will be a change in the Finance Act. Recorded by renowned faculty CA MV Ramachandra sir, having 17 plus years of rich teaching experience. Here is an outline of the chapters covered in these 9 hours of detailed marathon. In this marathon, we covered all the important concepts which will help you in quick revision of the entire subject in these last few days of preparation. For timestamps, please check the description of this video. To get the maximum benefit, try to watch in the same order and in the normal speed so that you can assimilate what you are watching. We have not extracted this marathon from pre-recorded classes and we have not recorded them in recording theaters. We captured them during live face-to-face classes where more than 70 students were physically present. So classes are taught in 100% English. Exclusive marathon material in which the faculty has taught these classes is available for free download in our app. If you like this video, then hit like so that YouTube can recommend this video to more number of needful students. If you feel this video to be useful, please don't forget to share it with your friends so that they'll also get benefited from this video. So after watching this video, please do share feedback on this video in the comment section, which will inspire us in creating more content like this. Here is the procedure to download the free marathon material. First of all, you need to visit the Google Play Store from your Android mobile. Install our Android app, Mastermind's online classes. Of course, as on today, we don't support Apple devices. So by giving your mobile number and other details, you need to sign up. In the home screen, click the 3 horizontal lines icon in the top left corner and select the free material option. Now click the document tab. Open the folder CMA Final Marathon Classes for December 2024 and navigate to the Direct Tax Laws and International Taxation subfolder. So in that subfolder, you can find the direct file. So you can click it and you can open it using Acrobat Reader or some other PDF reader apps. So once you open it, now you can share it or download it, or you can even take printout of the same. Very soon we will be uploading the marathon videos for all the remaining subjects of CMA final as well. Once we upload the video, if you want to receive a notification from the YouTube, then please do subscribe to this channel and don't forget to press the bell icon. Now you can start enjoying the marathon video. All the best, my dear students.
Good morning, one and all. Today we are going to start the topic CMA Final Direct Tax Marathon Classes. This class is meant for only for this upcoming examination. Now first I would like to start important chapter, A category chapter, that is DTAA, Double Tax Avoidance Agreement. Out of this chapter, compulsory we can expect one 6 marks question, the 2 practical question, 99.9 we will get practical question, 1% there are chances of appearing of theory question. Let me introduce this chapter, that is DTAA. Very important chapter. Follow. Friends, persons 2 types. First one is resident, second one is non-resident. Incomes also 2 types. One is Indian income, one is foreign income. Now, if you are a resident, you are liable to pay the tax on your Indian income and also foreign income. If you are a resident, you are liable to pay the tax on global income. Correct na? Yes. Whereas, if you are a non-resident, you are liable to pay the tax only on Indian income, but not liable to pay the tax on foreign income. So, friends, Indian income is taxable in the hands of resident as well as non-resident, but foreign income is only taxable in the hands of resident, but not taxable in the hands of non-resident. So ultimate conclusion is as follows. In the hands of residents, global income is taxable. In the hands of non-resident, Indian income only taxable. But here only one problem. No, the problem is as follows. Some persons will have the income in abroad. Suppose Virat Kohli, he played the match in Australia and he got the income in Australia, that is, let us say 10 crore. In Australia, he already paid the tax of 1 crore. Balance 9 crore he has taken and he came back to India. Now, India is a country of resident, whereas Australia is the country of source. But friends, so many countries are collecting the tax based on 2 principles. One is source rule, one is resident rule. Oh, you earn money in Australia, therefore you are supposed to pay the tax in Australia. That too, you are a resident in India, therefore you are liable to pay the tax in India. Correct? Yes. That means same income is taxable twice. That is called as double taxation. To avoid double taxation, Government of India wanted to introduce one concept that is called as double tax avoidance agreements. For that purpose, they want to grant the relief. Okay, see the word. Now, income is taxable based on two rules, that is resident rule and as well as source rule. As for resident rule, you are liable to pay the tax in the country where you are a resident. As for source rule, you are liable to pay the tax where you are earning the money. Correct now? Yes. So in order to avoid double taxation, the reliefs are given as follows. Number one, bilateral relief under section 91. I repeat, bilateral relief under section 91. Now 90. Now let's discuss the topic, that is relief. Friends, relief actually two types. One is bilateral relief, second one is unilateral relief. Bilateral relief will be granted under section 90, whereas unilateral relief will be granted under section 91. What are the reliefs we are going to? Friends, now see the first relief, that is bilateral relief under section 90. Otherwise, another relief is also there, that is bilateral relief by specified association under section 90A. If there is no such agreement, then the relief is called as section number 90. Friends, first see the topic, that is very important topic for exam point of view, that is bilateral relief. That is under section 90. Friends, our Indian government as well as foreign government, these two countries, they will enter into one agreement. That agreement is called as DTAA, Double Tax Avoidance Agreement. So as per this agreement, they will grant some relief. That relief is called as bilateral relief. That relief is covered under section number 90. So sometimes what happen, our Indian government will give the permission to specified associations of India. Specified associations of India. These specified associations of India will enter into agreement with some other specified associations of foreign country. After that, our central government also adopt this agreement by publishing in official gazette. Now that is also DTAA. As for the DTAA, they will grant some relief, that is called as bilateral relief under section 90 capital A. Now student may get the doubt, sir, what is the difference between section 90 as well as section 90A? Friends, section 90 is nothing but bilateral relief granted as per the DTAA entered by central government with foreign government, whereas section 90A is nothing but our Indian government has given the permission to some specified associations of Indian territory to enter into agreement with foreign territories. Okay, now both are almost all same. Only the difference is our central government may enter directly, then that is called as section number 90. Now central government has given the power to someone else, then that is called as section number 90A. But in exam point of view, there is no much difference in the things, so leave it. Next number, sometimes agreement won't be there, then our Indian government alone will give the benefit, that is called as section number 91, unilateral relief. Okay, chalo. Now first let's discuss the topic called as bilateral relief under section number 90. See the word, India is collecting tax based on two rules. What is the rule number one? Resident rule. What is the rule number two? Source rule. Now friends, income is taxed in two countries. One is country of residence, second one is country of source. Then that is called as double taxation. Now for that purpose, central government may enter into agreement with foreign government in order to avoid double taxation. For this purpose, they wanted to give double taxation agreement relief, that is called as bilateral relief. Bilateral relief will be given by satisfying two conditions. Condition number one, the income must be taxed in more than how many countries? One countries. It must be taxed at least in two countries, and that too there must be agreement between country of source and country of residence. If agreement is there, then only that is called as bilateral relief. Friends, if there is no agreement, Unilateral relief. So in exam, first you have to check the question carefully whether agreement is there or not there. If agreement is there, that question is related to section number 90. If agreement is not there, then the question is section number 91. Okay, chalo. Now friends, bilateral relief will be given in two ways. Number one, exemption method. Number two, tax credit method. What is exemption method? If you pay the tax in one country, automatically such income is exempted in India. Or if you pay tax in India, automatically that income is exempted in foreign country. So I will take one example. Virat Kohli played the match in Australia and he already paid the tax in Australia. Okay. After that, he remitted the balance amount to India. So friends, tell me, the balance amount 9 crore whatever he remitted so far is already tax paid in foreign country or not? Yes. Now immediately what we have to do, we have to check the agreement entered by Australia as well as India. Now follow the agreement. As for the agreement, suppose if they follow exemption method, you know what? If the income tax is paid in one country, automatically that amount is exempted in other country. Suppose Virat Kohli already paid the tax, therefore that income is exempted in India. Chalo, that's all. Next number, tax credit method. What is that? Whatever the tax you have paid, that will be allowed as credit and it can be adjusted against tax payable in another country. Example, now Australia versus India, suppose they are following exemption method, then outright it is exempted. Just now we covered. Okay, now yes. Sometimes what happen, they won't follow exemption method, they will follow tax credit method. So whatever the tax he paid in foreign country, that will be allowed as credit against tax payable in India. Okay, that is called as tax credit method. So which method they will follow, that is different story. Okay, now friends, examiner's favorite question, theoretical question, objectives of DTIA. For what reason our Indian government may enter into agreement with foreign government? This is very important question. Now objectives of DTIA. Number one, first one, to avoid double taxation. Already same income is taxed in two countries, then that is called as double taxation. To avoid double taxation, government of India will enter into agreement with the other country. That is one of the objective. So see the first objective. What is the objective number one? For granting relief for double taxed income. So that is first one. Second one, encourage foreign direct investment. Friends, when there is no double taxation, automatically foreign companies also wanted to start their investment or wanted to manufacture in other country. Correct? Yes. The best example, Apple. Nowadays, Apple company wanted to start manufacturing of iPhones in India. That is the reason. One of the advantage is nothing but to encourage FDI. Next number, recovery of taxes. You know what? Some people will earn money in India. After that, they will abscond and they will take the shelter in abroad. Example, Vijay Mallya. He earned a lot. After that, he gone to some other country. Now, my point is how to collect the tax right now. That is the answer, DTIA. Suppose India versus England, DTI is there. Automatically, we can request England people to please collect the tax and remit to us. Correct now? Yes. Last one, exchange of information. Whenever DTIA is there, whenever agreement is there, both the countries keep on exchange the information. So these are the main objectives of DTIA. Tell me what is the objective number one? To avoid double taxation. Next one, encourage foreign direct investment. Next one, recovery of tax, collection of tax. Last one is called as exchange of information. Next one, another exam question. Sometimes what happen, no, there will be conflict between provisions of the act and terms of DTIA. Example I will tell you. Start. Sometimes as far as income tax act is concerned, provisions of the income tax act is concerned, dividend is taxable. Correct? Yes. Exam question, dividend taxable. But as for DTIA, suppose they entered like this. Now dividend is not taxable. Now tell me, there is a confusion, no? there is a confusion between Act versus DTA. Then what is the answer? Answer, whenever there is a confusion, whenever there is a conflict, now we have to follow the most beneficial things to the SSA. Now tell me which is beneficial, taxable or not taxable? Not taxable. So answer is always most beneficial things will prevail. That is nothing but DTAA. Now I will take another example. Follow. One day Narendra Modi government enter into agreement with the foreign government, American government, Trump. Okay. Now the rate for foreign companies, let us say 25%. Okay. Now the rate agreed between Mr. Modi as well as Trump is 25%. But as well as for Income Tax Act is concerned, the rate is 40%. Correct now? Tell me, then which will prevail? 40% will prevail or 25%? Answer, whenever there is a conflict, then you have to follow the most beneficial. Obviously, 25%. Correct? Yes. But in next budget, suppose Nirmala Sitharaman ma'am changed the figure as for Income Tax Act is 18%. Then tell me which is applicable, 18 or 25? Then 18. So moral of the story is very simple. When there is a conflict between provisions and Income Tax Act provisions and DTAA, automatically the most beneficial things of SSC will apply. Next one exception is there, GER. GER means General Anti-Avoidance Rules. Even though these are beneficial or not beneficial immaterial, GER provisions as it is applicable. I repeat, GER provisions are applicable. So I wanted to break the ice. Very simple. Follow. When there is a difference of opinion, when there is a confusion, when there is a conflict between provisions of the Act versus DTAA, tell me which is applicable? Most beneficial. Generally, what is most beneficial? DTAA. Correct? Yes. Next one. When there is a conflict of opinion between GER versus DTAA, then which is prevailing? Answer is GER. Okay, fine. Next number. Another point. The rate specified in DTAA shall not be increased by any surcharge and any health and education cess. Example, Modi and Trump, they sat across the table and they discussed one figure. Let us say American companies are taxable at the rate of 28%. Come on, for this 28%, shall I need to add surcharge? No. Shall I need to add health and education cess? No. Whatever the rate specified in DTI is final. Okay, na? Fine. With this, we done with the topic called as bilateral relief. Now, friends, how do you know whether it is a bilateral relief or unilateral relief? Agreement is there between country of resident and country of source. Next one. How many methods are there? Two methods. One is exemption method. Second one is tax credit method. Exemption method means if income is taxed in one country, automatically exempted in other country. What about tax credit method? Tax paid in one country will be allowed as credit and it can be adjusted against tax payable in other country. Chalo. Next one. What are the objectives? Number one, to avoid double taxation. Number two, promote FDI. Mutual economic benefits will be increased. Automatically, foreign direct investment will increase. Next one, collection of taxes. Next one, exchange of information. Next, when there is a conflict between Act and DTI, which will prevail? Most beneficial. GER versus DTI, which will prevail? GER. Enough. Next one, the rate specified in DTI is final. No need to increase by any other things. Correct now? Yes. Next number, treaty shopping. What is treaty shopping? Now, resident of third country has taken the advantage of agreement entered between two other countries is called as treaty shopping. Treaty shopping is not invalid, not illegal. Now I want to take illustration. It will take 1 minute. Follow. Already France as well as India entered into an agreement. Immediately what happened? One Italy person simply he will float a company in France and he will take a benefit of this agreement. Come on. Resident of third country has taken the advantage of agreement entered between two other countries is called as treaty shopping. Treaty shopping is not invalid, is not illegal. Okay, fine. Next number, another topic. Friends, this is already given in the DTA agreement itself. What? If any foreign company is taxed at a rate higher than the rate at which domestic company is taxable, in that case, such foreign company is not treated as least favored. Now, example. Now, Reliance Industries is a domestic company. Domestic company is taxable at what rate? 30%. Next one, foreign company generally taxable at what rate? 40%. Generally 40%. Correct now? Yes. One day what happened? Our central government now entered into agreement with American government, USA government, stating that all USA companies are not taxable at 40, taxable at 35%. Now tell me friends, now here American companies are taxed at a rate higher than the domestic company. Then can you say that these American companies are least favored? No, no. Okay, fine. This is the another point. Next one. Your examiner's favorite question and important topic, that is called as permanent establishment. I repeat, permanent establishment. Friends, permanent establishment means a fixed place of business. I repeat, fixed place of business. And it includes the following. Number one, branch office. Number two, any office. Number three, warehouse. Number next, sales outlet. Number next, factory. Number next, place of management. Number next, oil mines or else any gas stations or oil wells, anything are covered. Okay. Now very important topic. Permanent establishment means fixed place of business, which includes BOW, SFMM. B for branch, office, now warehouse, sales outlet, factory, place of management, now mines, oil rigs, etc. Okay. Now examiner's favorite question is this one. What are the significance of permanent establishment? Very simple, follow. Non-resident, if he has PE, I repeat, non-resident if he has PE, then only that income is taxable. Oh, when the income is taxable, then only there is a question of double taxation. When there is a double taxation, then DTA applicable. So moral of the story, DTA applicable to the non-residents only if they have PE. This is the significance. Okay, now next point. If they don't have PE, come on, business income taxable or not taxable? Not taxable. When business income is not taxable in India, where is the double taxation? No double taxation. When no double taxation, DTA applicable or not applicable? Not applicable. Enough. With this, we complete the topic. What is PE and what is the significance of PE? Once again, what is the PE? Fixed place of business, which includes branch, office, warehouse, sales outlet, factory, and next one, mines, oil wells, like this. Next one, if non-resident has any permanent establishment, then only the business income is taxable. If non-resident does not have any permanent establishment, in that case, that business income is not taxable. Therefore, DTIA not applicable. Correct now? Yes. Next, very important topic, that is called as unilateral relief. Okay, very important. 99% examiner will ask this question only, that is a unilateral relief question. I request you all, please follow. Ready, start. Number one, sometimes we may earn the income from other foreign countries. Example, our friend Mr. Virat Kohli, he earned the income from Somalia. Okay, and he paid the tax in Somalia also, and he got the balance income of 9 crore, and he came back to India. Now, Somalia is the country of source, whereas India is the country of resident. Now, India is following both the rules. Therefore, that income is taxable there and here. Correct na? Yes. But this leads to double taxation. For that purpose, we need to grant the relief. Immediately what happened? We will check the agreement, whether Somalia entered agreement with India or not. Answer, yes, agreement is there. Tell me, if agreement is there, then that is called as double taxation agreement is there. That means bilateral relief will be granted. Maybe exemption method or tax credit method. Correct na? Suppose there is no agreement between India versus Somalia. In that case, there is no DTAA. When there is no DTAA, now foreign government will not give any benefit to you. Correct na? Yes. At that time, our Indian government will say like that, yes, I will give the benefit. That is called as unilateral relief. First, you have to read the question carefully. You have to underline with the pencil whether agreement is there or not there. If there, section number 90 bilateral. If not there, section number 91 unilateral. Now, what are the conditions for unilateral? The person must be Indian, resident. Number two, the income must be foreign income. Kada income must accrue arise outside India. That too, the foreign income shall be taxable in India. Taxable in India as well as taxed in foreign country. So that must be foreign income. That too, it leads to double taxation. And last point, agreement is there or not there? Not there. Oh, when there is no agreement, bilateral relief under section 90 not at all possible. Then only one is possible. What is that? Unilateral relief under section 91. Let's start the computation of unilateral relief. Your examiner's favorite question. Compulsory will get this question. Okay. Number one, how to do the question. First one, step number one, compute total income including foreign income. As for Indian income tax provisions, you have to take. As for Indian income tax, why I'm saying Indian income tax, you while calculating house property income, I need to deduct municipal taxes or not? Yes. I need to give standard deduction or not? Yes. I need to deduct interest on housing loan or not? Yes. But to confuse you, examiner will say like this. In that foreign country, Australia, there is no question of deduction of municipal taxes. Immediately student will get the doubt. Shall I need to take the deduction or not? Answer I am telling you. Step number one, compute total income as per provisions of Indian Income Tax Act. Step 2, calculate the total tax as per Indian Income Tax Act. Step 3, new step, calculate average Indian tax rate. What is the formula? Step 2, total tax divided by step 1, total income. That's all. 3 steps I told you. Step number 1, total income. Step 2, total tax. Step 3, average tax rate, total tax divided by total income. Over, sir. Next, another topic. You have to same way you have to do another thing. Foreign income, foreign tax, and calculate average foreign tax rate. Okay, but generally examiner will provide this rate. If not, we have to calculate dash divided by dash. Foreign tax divided by foreign income. Now enter the dragon. Very important point here. Unilateral relief under section 91 is equal what? Foreign income which is subject to double taxation into lower of average Indian tax rate or average foreign tax rate. Out of this, whichever is higher or lower, whichever is lower shall be taken. Okay, na? Fine. So, this is only slippery area. Please follow. Now, I will take one question here. Follow. Now, our friend Naveen is a book author. Okay, his books are very popular in America. So, he sold his books in America. That is 10 lakh is the income he received. In India, his income is 5 lakh. Ready, start. I want to solve this question. Everybody, help me out. Point number 1, Indian income. How much? 5 lakh. Next one, foreign income. How much? Wait, Mr. Naveen is a resident. That too, with this country, America as well as India, there is no DTA. Example, there is no DTA. Tell me, if you are a resident, Indian income anyhow taxable, foreign income is also taxable or not? Yes. So this 5 lakh and as well as 10 lakh taxable. Now tell me, what is the gross total income? 15 lakh. But friends, 80 capital QQB deduction will be allowed or not? Yes. Now with respect to royalty income received on books, 3 lakh maximum deduction will be allowed or not? Yes. Tell me, after that, my total income is how much? 12 lakh. Friends, now step number 1 completed. Total income. How much? 12 lakh. After that, step number 2, total tax. Let us say 4 lakh. Okay, example sake 4 lakh. Step 3, average tax rate we have to calculate. Average Indian tax rate. Tell me, what is the answer? 4 divided by 12. How much? 33.33%. Example. After that, step number 4, average foreign tax rate. Examiner, suppose he provided how much? 10%. Step 5, you are unilateral relief under section 91. Now, whichever is lower rate we have to take. Indian average rate or average foreign tax rate, whichever is lower. This is Indian rate is 33.33, foreign rate is 10%. Whichever is lower means 10%. Into which income we have to take, this is the question. Answer, don't say foreign income, that is wrong. You have to take foreign income which is subject to double taxation. Student doubt, sir, what is the meaning? That means the foreign income which is taxed there and here, the common point only we have to take it. What is the common point here? Here, common point is actually foreign income is how much? 10 lakh. But 10 lakh taxable in America, correct? USA, taxable figure is 10 lakh. But in India, the taxable figure is not 10 lakh. How much? 7 lakh. Because you have taken deduction of 80 QQB 3 lakh, right? Therefore, net figure, what is the common figure only you have to take it, correct? So this is the slippery area. So don't take 10 lakh, 7 lakh only you have to take it. But so many students will do one mistake in exam. They will take by default 10 lakh as a foreign income. Wrong. You have to take foreign income which is subject to double taxation. That means after deduction of what? Permissible deductions, under after adjusting permissible losses, net figure only you have to take. But I want to tell you one open secret. What is the foreign taxed figure? Indian taxed figure, whichever is lower only you have to take. Correct? Yes. Into average Indian tax rate or average foreign tax rate, whichever is lower. After that, net tax liability is equal, come on, total tax liability minus unilateral relief under section 91. Then this is the final answer. Friends, with this, we done with the chapter called as DTAM. But out of this, some topics are most important. I wanted to highlight that one. First one, section number 91. Problem is important. Problem. How to solve this problem? Friends, if you want to solve this problem, first you should know tax rates. After that, you should know, come on, deductions. Okay. After that, you should know computation also. How to calculate house property income, how to calculate PGBP income, how to calculate other sources income, that things also you have to know. Then only you can calculate total income. After that, you can calculate tax liability. After that, you can calculate average Indian tax rate, average foreign tax rate. After that, unilateral relief. This is important. Next one, as far as section number 90 is concerned, practical question chances are very less. They will ask theoretical question. The theoretical questions are as follows. What are the objectives of DTAA? What is that? Number one, to avoid double taxation, to encourage FDI, collection of taxes, exchange of information. Correct now? Yes. Another question, what is PE and significance of PE? That question minimum 5 times they asked in the examination. PE means any person having fixed place of business in India, that is called as PE, but it is a inclusive definition. Branch, office, warehouse, sales outlet, factory, mines, oil rigs, all are covered. Okay, that is another question. So next another question is as follows. When there is a conflict between Act versus DTI, which will prevail? The most beneficial things will prevail. And the last question, working notes are important. Compulsory you have to write the working notes. No working notes, no marks will be awarded. Therefore, you have to write working notes. This question is compulsory question. Therefore, you have to write proper notes and proper working notes. Slippery areas are as follows. While solving the problem under section 91, sometimes he will give more than one country. He will give like this. Virat Kohli got the income from Australia as well as he got the income from Somalia also. Then tell me how to solve the question. Country wise or consolidated wise? Answer, we have to solve the problem country wise, but not consolidated wise. Another question he will ask. He has income from 2 foreign countries. With one country we have agreement, with other country we don't have agreement. Then how to solve the question? With the country where we don't have agreement, then we have to solve section number 91. With the country where we have agreement, that we have to solve as per section number 90. So these are the topics. Okay, na? compulsory question we can expect out of this chapter. This chapter is DTAA. So this is the ultimate discussion of this chapter. Follow. The DTAA entered between country of resident and country of source. Yes or no? Yes. Yes. Then relief will be granted under section 90. That is called as bilateral. Bilateral relief two types. One is exemption method. One is tax credit method. Next one. If the relief is not granted as for 90, section 90, then it will be granted as for section 91. Then that is called as unilateral relief. How to calculate unilateral relief? Number one, foreign income which is subject to double taxation into lower of average Indian tax rate as well as average foreign tax rate. Friends, another important chapter, A category topic, that is equalization levy. Please follow. Here the pairs are as follows. Number one, resident, or else or are another fellow non-resident who has P. If these two people are making the payment to non-resident who does not have P, okay, the two, they are making the payment for the purpose of services. The services are two in number, that is called as online advertisement. I repeat, online advertisement, or else next one is digital advertisement or digital marketing. Okay, for the two things purpose, if any person like a resident made the payment to non-resident who does not have PE in India, or else non-resident who has PE is making the payment to non-resident who does not have PE in India, the two for the purpose of business or provision purpose. For the purpose of your business or provision, the two, the payment must exceed 1 lakh. Must exceed 1 lakh. The two, the payment is made only for the purpose of online advertisement or digital marketing. In that case, the payer is required to deduct the amount at the rate of 6%. Then that is called as equalization levy. If you have not deducted, suppose if not deducted, in that case, P&L debit will be allowed or not allowed? P&L debit will not be allowed, not allowed. Next one, if you deducted the same, the two, the non-resident, whatever the full amount received from you is not at all taxable. It is exempted under section 10 subsection 50. Okay, fully exempted under section 10 subsection 50. Don't worry, I will take one complete example here, then you will understood better. Our friend Mr. Ashok, he wanted to start one coaching tuition point. Okay, for that purpose he wanted to give advertisement on YouTube, or he want to give advertisement on Google. Now follow. Now Mr. Ashok is a resident. Now that too, Ashok, he wanted to make the payment of 2 lakh rupees to Google, or he wanted to make the 2 lakh rupees to Meta for the purpose of online advertisement on Facebook or Google Page or YouTube. For this purpose he paid 2 lakh. Now tell me, payer is whom? Resident who has PE, correct? Or else payer is non-resident who has PE. Next one, we are making the payment to whom? Non-resident who does not have permanent establishment in India. That too, this is for his business or professional purpose only he paid. The two, payment exceeds 1 lakh. The two, specified services. Only two services are notified so far: online advertisement and digital marketing. In that case, payer is required to deduct at the rate of 6%. If not deducted in this P&L account, the 2 lakh rupees will not be allowed as deduction. Not 6%. Come on, 100% will not be allowed as deduction. 100% disallowed. The two, if you deducted and in your accounts it is allowed as deduction, and in the hands of non-resident recipient it is fully exempted under section 10 subsection 50. Okay, chalo. That's all, topic completed. But students should know the point. Sir, what is the relevance of this? Honestly speaking, in the hands of non-resident who does not have PE in India is not liable to pay the tax. Already you covered in DTA chapter, non-resident does not have PE is not liable to pay the tax on business income, correct? Not taxable, honestly speaking, not taxable. Then how it is? Answer very simple. If you give advertisement on local channels, you are liable to pay the tax or not? Yes or no? Suppose you are making advertisement on YouTube and Meta, really not liable to pay the tax. Really. Now there is no question of equalization. Kada? That is the reason so many residents requested government of India, please do some favor. Immediately, government they announced like this. Okay, chalo. We wanted to introduce special levy. Special levy. Based on the special levy, non-residents who does not have PE in India are still liable to pay the tax, but they don't have PE kada. Now it is very difficult to collect tax from that fellows kada. That is the reason they requested local people. Who are the local people? Resident or non-resident who has PA. You both you have to deduct at the rate of 6%. Otherwise, punishment number 1, deduction will not be allowed. Punishment number 2, you have to pay interest and you have to pay penalty. Okay, that's all. This is the topic called as equalization levy. So once again, tell me, who are the payers? Resident or non-resident who has PA. Next one, who are the payee? Only one fellow, non-resident who does not have permanent establishment in India. Nature of payment, personal or business or professional? Business or profession. That too, the payment amount exceeds 1 lakh. That too, that payment is made only for 2 purposes, not for other purposes. Number 1, online advertisement and digital marketing. Now, what is the rate of equalization? 6%. Who has to deduct? Payer or payee? Payer. After that, that amount he has to remit to government. Otherwise, deduction won't be allowed. Now, again, quick revision follow. A payment made by resident or non-resident having PE to non-resident who does not have PE for specified services, online advertisement and digital marketing, where the aggregate amount of consideration exceeds 1 lakh for business or profession purpose, equalization levy shall be charged at the rate of 6% on the amount of consideration. Chalo. Next one. Again, payer, resident carrying BP, business or profession, or else non-resident carrying business or profession, that too has PA in India. Payee, non-resident who does not have PA in India. Specified services, only 2 services are specified. Number 1, online advertisement. Number 2, digital marketing or digital advertisement. What is the rate? 6%. What is the exemption limit? 1 lakh. If exceeds 1 lakh, then only this concept applicable. Now, section 10 subsection 50. The whatever the income received by non-resident who does not have PA, that amount is fully exempted, provided on that amount already dash has been paid. Equalization levy has been paid. Now, equalization levy concept not applicable in the following cases. Number 1, consideration less than 1 lakh, not applicable. Number 2, personal purpose not applicable. For example, our friend Ashok marriage. For his marriage, he wanted to invite all the people in Guntur. So he given advertisement on Google. Randy, come on, Jaldi Randy. Now tomorrow our marriage. Like this he announced. Come on. For that purpose, this equalization levy concept applicable or not? No. Next number, if the fellow is also having PE in India, he don't want to give advertisement on YouTube, he want to give advertisement on local city cable channel. City cable channel is a non-resident fellow, for example, has PE in India. Tell me, equalization levy concept applicable or not? No. Chalo. With this, equalization levy first part completed. Next one, what are the due date? You have to pay the amount quarterly. For first quarter, 7th of the July. Second quarter, 7th October. Next quarter, 7th Jan. Last quarter, don't say 7th April. That is what? 31st March. If anybody not paid, now in that case, the consequences are as follows. 100% amount will be disallowed. Under section 40 subsection A class 1B. How much amount will be allowed? 30% or 100%? 100%. And you have to pay interest at the rate of 1% commencing from 8th day onwards. Now I told you 7 days is the grace period. No, 8th day onwards you have to calculate the interest. With this, equalization levy first part completed. Now second part, last part, equalization levy part 2. Now important, yes, I request you all, please follow this diagram, then easily you will understood. Ready? Start. This is echo. Echo means e-commerce operator. Important, sir. This is the latest one when compared to the first one. First one is only applicable for two things. One is digital advertisement, online advertisement. Correct? Yes. But this is a separate topic. I request you all follow section 165A of Finance Act 2020. What is this? Start. Here, step number one fellow is there. The fellow is called as customer. I repeat, customer. I will take one example. Our friend Sai is the customer. He wanted to buy something on Echo, Amazon, not Amazon India, Amazon Australia. So he want to buy the same from non-resident e-commerce operator, non-resident, not Indian. I repeat, foreigner. Correct? Yes. Tell me. Our customer, Mr. Sai, will place the order to whom? Amazon Australia. Okay. Amazon Australia is a non-resident foreign operator. Correct? Yes. But only the condition is that Echo e-commerce operator turnover must exceed 2 crore. Let us say 5 crore. Okay. Now step number 1. After that, what happened? Step number 2, they will forward the order to local seller in Australia. Correct? So step 2. After that, step 3, the Australian supplier will courier the same to Mr. Customer. Kada? Yes. After that, customer will pay the consideration to Amazon, or else customer will pay the consideration to Australian supplier. Kada? Yes. Generally, we will pay the amount to Amazon only. Kada? After that, Amazon will remit the amount to supplier. Correct? Yes. Now, on this transaction, equalization levy is applicable at the rate of 2%. When non-resident e-commerce operator is making the payment to supplier on that payment, equalization levy is applicable at the rate of 2%. Now, please try to follow this topic. Who is the payer? Come on. Who? Non-resident e-commerce operator. Who is the payee? Non-resident supplier. What is the rate? 2%. What transactions are covered? Only one transaction. E-commerce supply. E-commerce supply of what? Goods or service or both. Correct? Yes. Last one. Condition. The Echo non-resident e-commerce operator turnover must exceed 2 crore. If all the conditions satisfied, this concept equalization levy 2.0 applicable. See the word on or after so and so date, equalization levy at the rate of 2% is applicable on the consideration received or receivable by e-commerce operator from e-commerce supply of dash 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 goods, services or both. To whom? To resident in India. I told you, Sai, resident in India, or to any non-resident in India, provided who has PA. Last one, any person who buys that goods or services by using our Indian internet protocol. Sometimes foreigners will come to India, Goa, Taj Mahal, like this. For the purpose, they wanted to buy something on Amazon. Okay, so they want to place on Amazon USA or Amazon Australia. While placing the order, they are using Indian internet. When you are using Indian internet and you place the order, automatically that is covered under equalization levy section 165A. Okay, so this is applicable not for all, only for e-commerce operator who is a non-resident, that too whose turnover exceeds 2 crores. But this is not applicable in the following cases. Where? Number 1, if the non-resident has PA. Now tell me, applicable or not applicable? Not applicable. Next number, he already covered under section 165. Already covered under section 165. Then are you again covered under 165A? No. Last one, the turnover must exceed how much? 2 crore. If less than 2 crore, applicable or not applicable? Not applicable. That's all, Nana. But one amendment is there. What is the amendment? Follow. Sir, this consideration shall not include royalty and fees for technical service. Reason number 1, royalty and technical services fees are covered under special tax provisions. 115A, like that. Kada? These are not covered under equalization levy. So equalization levy consideration does not include whatever the amount paid in the name of royalty, whatever the amount paid in the name of fees for technical service. With this, we completed two topics, equalization levy section 165 and section 165A of not income tax act, of what? Finance act, separate finance act. But what is the difference? Tell me here, who is the payer? Resident. Or are non-resident who has PE. Who is the payee? Non-resident who does not have PA. Who does not have PA. What is the consideration? More than 1 lakh. Exceeds 1 lakh. What is the purpose? For the purpose of business or profession. Not personal, business or profession. Next one. What purpose? You paid for two purposes. Number one, online advertisement or digital advertisement. In that case, what is the rate? 6%. Now, in this ad, that is exempted under section 10 subsection 50. Next one. Come to this topic 165A. What is that? One resident customer. Resident customer. He placed the order on what? Non-resident e-commerce operator whose turnover exceeds 2 crore. After that, he will place the order to foreigners. The foreigner will supply the goods to you. After that, he will make the consideration to him. After that, he will pay the consideration to the foreigner. Correct? Huh? Yes. On that, you have to deduct the amount at the rate of 2%. That's all. This is the section 165A. But here, two special points are there. Number one, royalty, whatever you paid is not covered. And number two, fees for technical services are also not covered. With this, we done with the chapter called as equalization levy. Friends, now we are going to start the topic transfer pricing. Very important chapter. Out of this chapter, compulsory we will get minimum 6 marks, maximum 8 marks. A plus category chapter. Very important chapter for CMA final examinations. Now first section, section number 92, that is introduction section follow. Income as well as expenditure as well as interest as well as apportionment of cost between two associated enterprises shall be computed having regard to the presence of ALPR TP. The reasons are as follows. Whenever there are associated enterprises are entered, automatically the prices will be manipulated. Correct na? For that purpose, whenever transaction entered between two associated enterprises, the two, if it is a international transaction, automatically government of India wanted to follow the provisions of transfer pricing. Okay. For this purpose, I wanted to tell you one formula. A, B, C. A for associated enterprises. Section number 92A. Section 92A. What is that? Associated enterprises. Section 92B. What is that? International transaction. Section 92C. Computation. If their parties are associated enterprises and the transaction is a international transaction, A is there, B is there, then automatically C applicable. What is the C? Computation as for ALPR TP. Okay. Now, one by one, please follow. Whenever close associates are involved in the businesses, automatically the prices will be manipulated. The prices will be tampered. That is the reason Government of India introduced the concept called as transfer pricing. Now see the word, all of you. Now transfer pricing main intention is as follows: to calculate correct profit. I never told you that high profit. I never told you that low profit. I told you that correct profit. Now for that purpose TP introduced. Now see the word, an income from international transaction shall be computed as for ALPR TP provided the parties must be associated enterprises and the transaction must be international transaction. Now anyhow, one by one we are going to cover. First section, section number 92. What is that? Income. Not only income, expenditure. Not only expenditure, interest. Not only that, allocation or apportionment of cost in relation to any transaction entered between in relation to associated enterprises. The transaction must be what? International transaction, and later on this is extended to specified domestic transactions also. In that case, that computation shall be made as for ALP or TP as for section 92C. I want to tell you the formula ABC. Section 92A, Associated Enterprises. Section 92B, International Transaction. Section 92C, Computation. Then only we can compute as for ALP or TP. Correct na? Yes. Now, see the word. There must be at least two parties. The two parties must be associated enterprises, and the transaction must be international transaction under section 92B, and the books must be maintained under section 92D, and the audit report must be given under section 92E, and computation shall be made as for section 92C. Now all the sections you can memorize here. A for associated enterprises, B for international transaction, after that D for documents, E for audit report, 92C, C for computation. Now here one by one points we wanted to cover. Please follow. Point number 1, TP provisions are applicable in order to collect correct taxes. Correct? Yes. Correct profit we need to calculate. Then only government will collect correct taxes. Chalo. But in one case, TP not applicable. When? If it leads to reduction of tax, if it leads to increase of losses, in that case TP provisions are applicable or not? No. Ma TP provisions must be favorable to government, not favorable to SA. See the word. TP provisions shall not apply in the following cases: if computation of income, or if computation of losses, computation of cost has the adverse effect on the income of the SA, it leads to reduction of income or it leads to increase in the losses, then TP provisions are applicable or not applicable? Not applicable. Chalo. Next number. First condition, section 92A. What is that? Associated enterprises. How do you know both are associated or not? For that purpose, you have to follow this condition. Number 1, first one, shareholding. Come on. What is the shareholding? One enterprises who holds at least 26% of voting power in other enterprise. I repeat, 26%. Suppose A holds 40% in B. Come on, both are associated or not? Yes. 30, yes or no? Yes. 27, yes. 24, no. Next number, common shareholding. See the word. Any person, any enterprises holds shares not less than 26% in each of other enterprises. Example ma, A holds 30% in B as well as 40% in C. Come on, same person has 30% in one enterprise, 40% in other enterprise. Now tell me, both are associated or not? Yes. Come on. Now shareholding 26%, common shareholding also 26%. Next one, loans. Now see the word. One fellow has given the loans to other fellow. Example, now Chandrakala, okay, and Battu. Fine. Battu Limited has financed to Chandrakala Limited. How much you know? Chandrakala Limited has properties of 100 crores. 100 crores. But you know what? Battu, you only given the loans of minimum how much? 51%. You have given the loans of 51% to Chandrakala. And Chandrakala is that rich only because of your Battu loans. Correct? Yes. Battu is only the main reason for the financial status of Chandrakala. Therefore, both are called as associated enterprises. See the word. Loans advanced by one enterprise to other enterprise is not less than 51% of book value of total assets. Last, another one, guarantee. Now you have taken the loan, but I only guaranteed to the extent of 10%. I only guaranteed 10% means, you know what? We have some relation that is called as associated enterprise. Tell me, shareholding 26, common shareholding 26, bank loans 51% of book value of total assets. Total assets book value into 51%. Next one, bank guarantee 10%. Suppose if you are not repay the loan, the fellow will ask me, okay, minimum guarantee given by me is equivalent to 10% of your total loans. Next number, management control. So I only recruited more than half of the board of directors. Suppose in your company 10 directors are there, 6 appointed by me. Tell me, I only appointed 6 directors means I have indirect control over your company, that is called as associated enterprises. And same common also same answer. I only appointed more than 50% in this organization and more than 50% in that organization. Then both are associated or not? Yes. Next one, know-how formula. Now how much uh, percentage, 100%. 100% of technical know-how financed by me to you, automatically both are associated enterprises. And raw material, 90% of raw material supplied by me to you, both are associated. Not 51%. I am telling you other condition. These other conditions relation is called as deemed associated. I repeat, deemed associated. Number one, shareholding not less than 26%. Next one, common shareholding not less than 26%. Bank loans 51%. Guarantee 10%. Raw materials 90%. Purchase of raw material 90%. Means one enterprise is depend upon purchase of raw material purpose other enterprises to the extent of 90% means they have indirect control. Correct na? Yes. Next one, technical know-how 100%. Management control more than half of the directors. Okay, common also the same. Next one, sales 100% of goods manufactured by me I am selling to you. Okay, sales 100% I am depend upon you, then both are associated enterprises. Next one, relatives. One is owned by individual, other is owned by relatives. I repeat, one is operated by individual, second one is operated by my relative. Automatically both are associated or not? Yes. Last one, HEF. One is owned by HEF, another one is owned by relative of that HEF or karta of that HEF, family member of that HEF. Both are associated or not? Yes. And last one, all of you, that is non-corporate. What is that? One enterprise at least has 10% of interest in other enterprise, like partnership firm, AOP, BY. No. In case of companies, I told you 26%, but in case of partnership firm, I told you only 10%. If I have 11% in other partnership firm, both are automatically have some kind of relation, that is called as associated enterprise. Now, if you want to solve any problem, first you have to check the condition 92A. What is that? Both must have one relation, that is called as associated. Some are direct associated enterprises, some are deemed indirect way, that is deemed. Direct means one enterprise holds 100% of shares in other enterprise, that is called as direct. But deemed means that is not direct. We are only assuming like this. What is that? Tell me, shareholding how much? 26. Common shareholding 26. Bank loans 51%. Guarantee, bank guarantee 10%. Raw material 90%. Next one, intangible assets 100%. Sales 100%. Next one, board of directors more than 50%, more than half. Next one, another topic called as in case of any individuals, no, other case, that is called as relatives. In case of HEF, others are relatives. In case of individuals, in other case of partnership firm, what is the percentage? 10%. Correct? Yes, that is the topic. Next one, 92B. What is 92B? International transaction. Already I told you the condition A, B, then only C. A for 92A. What is that? Associated enterprise. Next one, 92B. What is that? International transaction. What is international transaction? Very simple. Listen. The transaction ended between one associated enterprise to other associated enterprise. The two, at least one person must be non-resident. At least one fellow must be whom? Non-resident. The two both are what? Associated enterprises. Then automatically that is covered under section 92B. Example I will tell you, follow. Now that is called as Hindustan Unilever India. Hindustan Unilever India and Hindustan Unilever UK. Both are associated. You know why? 70% of shares of Hindustan Unilever India owned by Hindustan Unilever UK. 70%. Anybody? 70% means automatically both are associated or not? Yes. The two, what happen? One person must be non-resident, but the UK fellow is a non-resident. Whenever one fellow is a non-resident, automatically the transaction is called as, come on, what? International transaction. Whenever that is a international transaction, automatically 92B condition satisfied. Correct? Yes. A is there, B is there. Then automatically 92C. Then you know what? Computation must be done as per section 92C. That's all, Nana. This is the topic. See the word 92B. International transaction means transaction between two or more associated enterprises who are covered under section 92A, and either both or at least one person must be a dash non-resident. Chalo, with this 92B also completed. Now it is time for 92C. What is section 92C? Methods for computation of ALP or TB. Now that is first one is called as cup method. Cup method means comparable uncontrolled price method. Second method is called as resale price method. Next method is called as cost plus method. Next method is called as profit split method. Next method is called as transaction net margin method. Last method, any other method may be notified by CBDT in future. Now see the word, all of you. There are total 6 methods as of now. The method number 1, very popular method, that is called as what? Cost plus method or comparable method. Both are important. Out of that, cup method is most important. See the word comparable uncontrolled method, that is called as cup. Next one, resale price, cost plus, profit split, transaction net margin method, or any other method notified by the CBDT. Now start the topic. First method, what is that? Cup. Listen, when cup method applicable, you know, parallelly there is another comparable transaction. Example I am telling you, follow. Our Indian company I Limited, foreign company F Limited, both are having 70% of shares. Now tell me, 70% of shares means associated or not? Yes. The two, foreign company is a non-resident. Tell me, one person is a non-resident. So 92A satisfied, 92B satisfied. Then you have to follow 92C. Now 92C means methods. First method is what? Comparable uncontrolled price method. Now you know what? Indian company supplied motherboards to F Limited for the rupees, let us say 10 lakh. Okay. Whereas same things we supplied to local company called as L Limited for the rupees 15 lakh. Everybody in the class. Now for your relative you supplied for 10 lakh, for outsider you supplied for 15 lakh. Come on, what is your assumption? Which price is correct? 10 is correct or 15 is correct? My assumption is 15 is correct. So take the figure 15. That means price charged with unrelated party, that price you have to take, and you have to add sometimes and sometimes you have to deduct plus or minus adjustment you have to do. Then you will get ALP or TP. Now normally cup method is applicable only when there is a parallelly one more comparable transaction is there. Correct? Yes. Suppose isolated transaction only given. Isolated means only one transaction only given. No comparable transaction. Then cup method applicable or not? No. Suppose our friend only wrote the exam. Everybody absent. Only one student wrote the exam. Tell me, he only will get the rank or not? Yes. No comparison. Kada? Yes. So comparison is applicable, then only cup method is applicable. Correct na? Yes. With this, first method is completed. Second method, very popular method, that is called as cost plus method. So please recap your cost sheet. See the word. Whenever one enterprise manufacturing something, I repeat, manufacturing something, after that they are supplying to other enterprise. Oh, they only manufactured and they are only supplying to other enterprise. When you are only manufacturing and supplying only to other enterprise, not supplying to outsiders, then anyhow cup method not applicable. What is the next option? Cost plus method. Then you have to take, come on, direct cost, that is indirect cost. After that, normal GP. Normal GP in the industry, what is the prevailing rate, that you have to take it. After that, plus or minus adjustments, then you will get ALP or TP. Okay, and tell me, when cup method applicable, when cost plus method applicable? Cup method applicable when there is a comparable transaction. Cost plus method is applicable when we are manufacturing and we are supplying to associated enterprise. Kada? Yes. Can I follow the both the concepts? Yes, yes. I am only manufacturing, I am supplying to my associated enterprises, and as well as I am supplying to outsiders. These outsiders, anyhow, cup is covered. Kada? Yes. Then now I am manufacturing and I am supplying, therefore automatically cost plus method is also applicable. Our friend doubt, why you are following both? Yes, we will follow both. I will follow not only both, if possible, three things also I can follow. Okay, na? Yes. So now cup method applicable only when comparable transaction is there. Cost plus method applicable, I am manufacturing and I am supplying. Correct now? Yes. Now next one, all of you, another topic, resale price method. What is that? I am purchasing from someone else. Whom? I am purchasing from associated, but I am reselling to others. I am reselling to others. So see the word. Now associate enterprises 1, associate enterprises 2, they are supplying the goods, but he is supplying to outsider, stranger. Now tell me, what is your assumption? Now the price offered by associated is correct, or the price offered by outsider is correct? Outsider is correct. So this is called as which price? Resale price. Take the price, do plus or minus adjustments, and automatically eliminate the profit margin and eliminate the other expenditure. Then you will get the actual price. Correct? Huh? Yes. This is called as resale price method. Everybody in the class, when resale price method is applicable, tell me. Resale price method is applicable when you are purchasing from associate enterprise and subsequently selling to non-associate enterprises, then only it is applicable. Correct? Yes. Next number, profit split method. Friends, profit split method means we are one of the participant in the whole project. Okay. Example, see the word. One day, Microsoft USA got one particular project. Microsoft USA. You know what? Now, they got the offer for the purpose of computerization of UNO branches in Pakistan, as well as in China, as well as in India. Automatically what Microsoft will do, Microsoft will assign some work to Pakistan branch, will assign some work to China branch, will assign some work to Indian branch. Now that means India is one of the participant in that. Okay. In that case, we have to follow which method? Profit split method. For that, what you have to do? Calculate first total profit. After that, calculate proportionate work done by you. After that, calculate proportionate percentage of profit. After that, you have to calculate your cost plus your profit share. Then you will get ALP or TP. That's all. So profit split method is applicable when you are a participant in a particular project. Understood? Now, example I will tell you. You are the one of the participant in this. You are earning, you are doing 30% of your work. That's all. Finally, you received 420 crores. I repeat, you received 420 crores. Now, actually, Microsoft total project cost is 900, profit is 100. Your total budget is 1000. That is okay. Out of that, what is the percentage of work done by our Indian branch? 30%. Now, step number 1. Hey, Indian branch, tell me what is our cost? They told me, sir, 400 crores. Indian branch for this 30%, they incurred 400 crores. Step 2. What is the total profit in this problem? Total profit, 100 crore. What is the percentage of work done by India? 30%. Common sense, when you do 30% of work, you are deserve for 30% of profit or not? Yes. So how much it is? 30 crore. Kada? Yes. Now my point is, your cost is 400 crore, whereas your profit is 30. So how much you must receive? 430. But how much you have received? 420. Right or wrong? Wrong. Change the figure to 430. That's all. What are the steps I followed? No. Calculate total profit. Calculate percentage of work done by you and calculate proportionate profit. And your cost plus that proportionate profit is the ALPR TP. Correct? Yes. With this, we're done with the topic called as profit split method. Now I will give some combinations. Tell me which method is applicable. Number one, I am manufacturing and I am exporting to associated. Plus. I am manufacturing and I am exporting to associated as well as outsiders. Answer, cup applicable, cost plus also applicable. Next one, I am purchasing from associated and I am reselling to non-associated, resale price. I am one of the participant in the total projects. Profit split method. Correct? Yes. More than one method is applicable or not? Yes. Chalo. Next one, transaction net margin method is also there. Now you have to check the same transaction route level wise. You have to check the transaction. Okay. Next. Now 92C subsection 1 we completed so far. That is nothing but methods. Tell me how many methods? Total 6 methods. Number 1, cup, cost plus, resale, profit split, transaction net margin, any other notified method. Next one, more than one ALP possible or not? Yes. Few seconds back we discussed possible. In that case, what is the answer? Answer is arithmetical mean. I repeat, arithmetical mean. Now, but one condition is there. Government wanted to have tolerance of how much? 3%. Now, what is that? All of you see the word. The difference between what? Actual price and arithmetical mean does not exceed 3% of actual price. In that case, we don't want to bother about arithmetical mean. I want to take only actual price. Now, take the illustration, then you will understood better. ALP, I request you all, ALP 1 is 104. ALP 2, 106. Now, anybody in the class, when more than one method is applicable, then what method we have to follow? Average. Average means arithmetical mean. 104 plus 106 divided by 2. What is the answer? 105. But actual price how much you know? 100. Actual price is 100. Now, see the word. The difference between arithmetical mean and actual price how much? 5. 5% exceeds 3% of actual, does not exceed, then automatically it crossed the tolerance limit. Then you have to take what? 105. Correct? Yes. Reverse. Suppose this is not actual price is not 100. That is, let us say 103. 103. Tell me what is the answer? 105 minus 103. What is the difference? 2. 2% exceeds or does not exceed? Does not exceed. Therefore, ALP or TP applicable or not? Answer, ALP or TP not applicable. Okay. Next one, 92C subsection 3. Determination of ALP by assessing officer. See the word. In some cases, assessing officer himself he will determine the ALP or TP. Number 1. First one, SSE fails to follow most appropriate method. I repeat, cup method is there, resale price method, cost plus method, transaction net margin method or profit split method. Like that, 6 methods are there. But SSE has not followed proper method. Number 1. Number 2, SSE not used correct data. So data used is not reliable. Number 3, documents are not maintained. Number next, SSE failed to furnish the information as required under section 92D. Now in the 4 cases, assessing officer voluntarily will determine ALP or TP. That's all. What are the 4 cases? Tell me. Number 1, method is not correct, data is not correct. Number next, documents are not maintained. Next one, SSE fails to furnish the documents or information. In 4 cases, automatically assessing officer will determine the arm's length price. Next one, sometimes what happen, assessing officer will determine the ALP/RTP. In that case, what are the consequences? I will take the illustration, then you will understood better. Very important topic, follow. Twice they asked in the examination. Listen, our friend, one fellow Sai is a resident, and another person Mai, okay, foreign company, Malaysian company M. Now what happened? 70% of shares of Sai Limited held by Mai Limited. Everybody in the class, both are associated or not? Yes. The two, this fellow is a non-resident. So 92A is there, 92B is there. Then we have to follow 92C. And what happened? They are manufacturing and exporting. Therefore, cost plus method applicable or not? Yes. They told the figure of 100 crores. But whenever 92A, 92B is there, don't take the figure as it is. Compulsory we have to calculate as per the positions of TP. Now, lawmaker wanted to follow other methods. Okay, fine. A sing officer want to determine something. What? When data is not correct, if opinion like this, our methods are not correct, or else data not maintained, or books not submitted, in all the four defaults or any one of the default, Mr. Assessing Officer simply will determine the ALP or TP. Let us say he determine 120 crores. Everybody, actual figure offered by SE is 100, whereas ALP determined by assessing officer is 120. What is the treatment of the 20 crores? That is the question. Point number one. This 20 crore to that extent, deductions allowed or not allowed? Not allowed. Exemptions are allowed or not allowed? Not allowed. Okay, 20 crore outright it is taxable. Okay, now fine. That too, section 10A deductions also not allowed. Section number 10AA. And that too, other parties amount will not be recomputed. Example ma, now here 100 crore is the income of Sai. That means 100 crore expenditure of Mai. Correct? Now what happened? Assessing officer informed like this, sir, 100 crore is wrong answer. It should be 120 crore. Everybody in the class, immediately will you transfer, will you change the figure of Mr. Mai from 100 to 120? No, you should not change like this. Others figures will not be changed. Correct? Yes. Okay, see the word. Now the effect of ALP determined by assessing officer. If ALP computed by assessing officer under this section 92C subsection 3, then the income whatever increased by the assessing officer is not eligible for deduction under chapter 6A and not eligible for deduction under section 10A. And that too, other party income will be recomputed or not recomputed? Not recomputed. With this, we're done with the topic called as 92A and 92B and 92C, subsection 1, subsection 2, subsection 3, subsection 4, and we covered other section 92 also. Section 92, what is that? Introduction. What is that? Income, expenditure, interest, loss of international transaction or specified domestic transaction shall be computed having regard to ALP or TB. Next one, 92A, what is that? Associated enterprise. 92B, international transaction. 92C, subsection 1, computation methods. Subsection 2, more than one method. Subsection 3, determined by the assessing officer. Subsection 4, effect of income or expenditure whatever determined by the assessing officer. Next one, what are the remedies applicable? Remedy number 1, DRP. We will go to dispute resolution panel. Next one, or else we can go to appeals. That is first appeal, maybe CIT appeals or JCIT appeals. Next one, we can go for revision. No, revision means under section 263 or 264? 264, but not under section 263. With this, we're done with the topic called as 92A, 92B, 92C. Okay, chalo. Now, next section is 92CA. Reference to TPO, reference to transfer pricing officer. Now, see this one. Now, one fellow Sai is an associate enterprises to another company called as Mai. Now, what happened, Sai entered into one transaction with Mai and he got the income of 100 crore. But both are associate enterprises. that too international transaction. Therefore, we will not take the figure as it is. Okay. Now here, three remedies are available to the department. Department will do like this. Number one, they will accept the figure as it is. Step number one, accept as it is, or else now a sing officer only will determine the same. Section 92C subsection 3, determination of ALP or TP by assessing officer. Sometimes he is not that capable. In that case, he may refer the case to TPO 92 CA. Now our next topic is section 92 CA. Already in CMA twice they asked this theoretical question. Now who can be TPO when we can refer the same to TPO? That is the question. All of you please follow. Now the CBDT IT authorities are as follows. Number 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. First one is called as CBDT. Chief Commissioner, Commissioner, Additional Commissioner, Joint Commissioner, Deputy Commissioner, Assistant Commissioner, ITO, Tax Recovery Officer, and Inspector. Out of that, only few persons can act as a TPO. Number one, Joint, Deputy, Assistant, who are authorized by the CBDT. Friends, out of this, now joint, deputy, and assistant, if they got the permission from the CBDT, they can act as a TPO, transfer pricing officer. In that case, what happen? Assessing officer may refer the case to TPO. Then TPO shall compute only TP. He will never compute total income. He will compute only TP. TP means transfer pricing. See the word. Where assessing officer consider it necessary, he may refer the computation of ALP, only computation of ALP, not computation of total income, to the TPO with the previous approval of his boss, that is nothing but commissioner. Next one, TPO shall gather the information from the he will gather the information from the client. After that, he will calculate ALP. But this is the exam question. Friends, while computing ALP, if you come to know any other extra point, that extra point also we can determine or not. Yes. Example, assessing officer referred matter A, only matter A to TPO. But while computing matter A TPO came to know about another matter called as B. Come on, regarding that B, shall I compute ALP or not? Yes. Even though it is not referred by Mr. Assessing Officer, any point comes to your knowledge subsequently, that point also we will consider for determination of ALP or TPS or no. Yes, that's all. This is the topic called as now additional point. See the word. During the course before TPO, if any other international transaction which was not referred by assessing officer comes to his knowledge, then TPO shall consider such other transaction also. Next one, now once on the basis of information and evidence, if ALP computed, then he will pass the order. Assessing officer or ALP na, who will pass the order? TPO shall pass the order. Based on that order, assessing officer will determine the total income and pass the assessment order. So see the word. The TPO order is binding only on assessing officer, but not binding on the assessee. After that, he will just pass the TP figure only to the department. Then department will calculate total income. So in case of any mistake, shall we rectify or not? Yes. Next one. What are the powers of TPO? Same powers as IT authority. They can issue the summons, they can collect the information, and they can do the survey. So these are the points. Okay. Nana. With this, we completed. These are the sections. First one is called as section 92 completed. What is 92? Introduction. 92A completed. Associate enterprises. 92B. International transaction. C is subsection 1 completed. What is that? Methods. 2 completed. What is that? More than 1. 3 completed. What is that? Reference to, that is determination by assessing officer. 4 completed. What is that? The effect of ALP determined by assessing officer. 92 CA completed. What is that? Reference made to TPO. Past exam questions. Now, one matter referred to TPO, but TPO find another matter and he want to compute TP regarding to other matter. Yes or no? Yes. Another question. TPO has given one TP to assessing officer, but assessing officer don't like that one. You don't want to consider that into determination of total income of particular SC. Is it correct or not correct? Not correct. Compulsory, it is binding on the assessing officer. Next one, other point. SSC whether it is binding or not. It's binding on SSC or not? Answer no. Correct? Yes. Next one, safe harbor rule. I repeat, 92 CB, safe harbor rules. Babu, certain parameters already given by the department. If you follow the figures, automatically whatever the TP you determined, that will be accepted by department as it is. I will take one example. Suppose BPO people has to offer 18% net profit. Minimum 18% net profit they have to offer. Suppose our friend is doing a BPO business and he offered 22% profit. Anybody? It is as per in line with the department rules or not? Then no need to apply cup method, resale price method and all. Directly we will accept his figure as it is. Correct? Yes. See the word safe harbor rules. Safe harbor rules means circumstances in which income tax authorities shall accept the transaction price declared by the SSC, or else any income deemed to accrue arise in India declared by the SC, provided the margin or the income declared by the SC is not less than the limits prescribed. Whatever the department specified, you are also following the same. Then tell me, the figures will be accepted as it is. Correct? Yes. Then again, department will not compute any more ALPs or TPs. Your figures are final. That is called as safe harbor rules. With this, we done with the topic called as section 92 CB. Okay. Now the section so far we completed 92 introduction, 92A associated, 92B international transaction, 92BA that is not covered specified domestic transaction, 92D not covered. What is that? Documents. Okay. C subsection 1 methods, subsection 2 more than one, subsection 3 determined by assessing officer, subsection 4 effect of ALP determined by assessing officer, 92CA that is reference to TPO, 92CB safe harbor rules. Next topic 92CC and 92CD, that is nothing but APA, advance pricing agreement, important only for theoretical purpose. Okay, so that is called as 92CC as well as 92CD. Now see the topic 92CC and 92CD. 92CC that is nothing but advance pricing agreement. 92CD that is effect of advance pricing agreement. So please follow this one. Important theoretical question. Point number 1. Mukesh Ambani, okay, so is the MD of Reliance Industries. What happened? Mukesh Ambani every day is having so many international transactions with associate enterprises. Now every day he has to follow the cup method, resale price method, means it is very time burden and it is very what you call time consuming thing, and so much of energy is also wasted on that. Because of that reason, Government of India introduced one concept called as PA, advance pricing agreement. What is that? Very simple. See the word. With the prior approval of central government. I repeat, with the prior approval of central government, two persons can sit across the table. Who? SSC and department. I repeat, SSC and department. Department means higher authority. That is nothing but CBDT. With the approval of central government, SSC and assessing officer means CBDT, they will enter into one agreement in advance, that is called as advance pricing, TP, transfer pricing, That is the reason it is called as pricing agreement. Okay, APA means that is nothing but advance pricing agreement entered by SC and CBDT with the prior approval of central government. Now ordinary people cannot enter, only big shots only can enter, the two who are having a number of international transactions, the two with the approval of CBDT or with the approval of central government, with the approval of central government, and that too it is valid for a period of 5 years. Next one, if it is obtained by fraud or misrepresentation of facts, it will be the void or valid, void ab initio. So important topic, see the word CBDT with the approval of central government may enter into APA now in the following cases. Number one, arm's length price are specified the manner in which APA is to be determined. Now another amendment related to section 9 subsection 1 class 1 also we can enter into APA. Next one, what is the APA? APA means what? Agreement between SSC taxpayer and tax authority. What is that? CBDT. That too with the prior approval of whom? Central government. Now, what is the purpose of APA? The purpose is as follows. They will specify the method, which method to be followed, or they will specify the manner, which manner we will determine the ALP or TP. They will decide in advance. So, the method or manner will be decided by the central government approval. With that approval, SC and CBDT will decide. That's all. Now student doubt, sir, which one I need to follow then? 92C shall I need to follow or 92CC shall I need to follow? Which one I need to follow? Answer, 92CC will prevail over 92C. Next student doubt, sir, shall I need to refer the same to TPO? Yes or no? Answer, no. The reason, once you followed 92CC APA, then what is the need of TPO? TPO reference also applicable or not applicable? Not applicable. So now once you followed 92CC APA provisions, all other sections will not be applicable. Correct? Yes. So see the word. Now TP based on APA, if it is determined, automatically it will prevails over 92C computation and 92CA. So that's all. This is the point. Next one, it is mandatory or optional? Optional. Optional given to SCR department, SSC. That too, permission of central government is required. How long it is valid? 5 years. Next one, nature of APA. Everybody, it is applicable only for SSC and only for that particular transaction only applicable. Now my point is, SSC friend who is having same business also want to follow the same APA. Possible? No. It is applicable only for SSC who are the applicants. Correct? Yes. Now suppose one fellow Ablu, he only took the permission of central government and he entered with APA with CBDT. Okay. Now tell me, this is applicable only for Ablu, only for particular transaction. Correct? Yes. But whereas his brother Mr. Bablu, he also want to follow same APA. Possible or not possible? Not possible. It is applicable only for applicant Ablu. Kada? Yes. That too, it is not applicable lifelong for Ablu. It is only applicable for 5 years. That too, it is not applicable for all transactions of Ablu. Only applicable for only those transactions which are specified. Correct? Yes. How long it is valid? 5 years. Next one. In case of change in the law, change in the facts. Suppose Nirmala Sitharaman ma'am, she only changed the same in budget. Automatically, APA may not be applicable. Correct? Yes. Next number, if it is obtained by fraud or misrepresentation of facts, then it is treated as void ab initio. Then normal provisions will applicable in general. Correct? Yes. With this, done with the topic called as APA. Next one, effect of APA. What is that? Now before that, I want to tell you one concept called as rollback. I repeat, rollback. What is rollback? Now interesting, follow. Now here, Reliance Industry Chairman Mr. Mukesh Ambani, now he took the permission of Mr. Modi and he entered into agreement with CBDT, that is called as APA, that is valid for how long years? 5 years. 1, 2, 3, 4, next 5 years are applicable. But my point is, Mr. Mukesh Ambani wanted to follow the same for last period. Can I follow or not? Yes. Answer, it is possible only for last 4 years. But conditions are as follows. Condition number 1, last 4 years you can follow, but mandatory or optional? Number 1, optional. Optional, okay. Number 2, for that purpose, 2 conditions must have satisfied. Number 1, ROI for that period of 4 years, ROI must be filed in time. I am talking about past tense. In those days, long ago, you filed the return in time. The 2, the transactions are same. Whatever the transactions you done in those days must be the same as whatever the transaction you are doing for next 5 years. And the 2, now it not leads to reduction of income. It does not leads to increase of the tax, increase of the loss. In that case, can I follow APA for rollback provisions or not? Yes. And tell me what are the 2 conditions? Return must have be filed in time. In time. The 2, the transaction must be the same or different? Same. In that case, if you want, you can follow dash roll back. Now, if anybody want to go for rollback, and tell me what is the point of completed assessments? Completed assessments. Already assessment completed. What? Answer, cancel and do the assessment as per what? APA. Suppose some assessments are still pending. Okay. What is the status of pending assessment? Stop. Then restart as per dash APA. Correct? Yes. With this, we're done with the topic called as section 92 CC as well as 92 CD. What is CD? Effect of APA. Next one. Everybody, whether, see the word, APA applicable to third parties? No. APA applicable to new transactions? No. APA is only applicable to specified transactions. Next one. Next topic. All of you, please tell me. Rollback provisions are mandatory or optional? Optional. What are the 2 conditions? Return must be filed in time. Business transaction must be the same. If it is the case, again SSC has to file one modified return. Based on the modified return, a SING officer will do the assessment as per what? APA. Correct? Yes. But ultimately it should not result into reduction of income, does not result into increase of losses. But student may have doubt, sir, then why we will follow rollback provisions? Very simple. If you follow rollback provisions as for APA, automatically your figures are final. Correct? You no need to go to appeal and no need to go for further disputes. So that is the reason so many people who wanted to follow APA, they may go for rollback provisions also. With this, we completed section number 92 CC and as well as CD. Now these are the sections we completed. Let's revise. Number 1, what is 92C? 92 first, computation methods. 92 is nothing but introduction. 92A, associate enterprise. 92B, international transaction. C, computation. Computation methods. Section 92C subsection 1. What is section 2? More than one method. Section 3. What is that? Determined by assessing officer. Subsection 4. Effect of ALP determined by assessing officer. CA. TPO. Reference to TPO. CB. Safe harbor rule. CC and CD. That is nothing but APA, advance pricing agreement. Okay. Chalo. With this, done with the topic. Now our next topic is 92 CA. I repeat, 92 CA. That is nothing but secondary adjustment. Friends, see the topic, secondary adjustment, 92 CA, secondary adjustment in transfer pricing. Follow. Very important topic for theoretical concept of view, point of view. All of you. Number 1, here 2 members are there. First one Sai, second one Mai. Sai supplied the goods to Mai and he received the amount of rupees, let us say 100 crores. Now Sai and Mai both are associate enterprises. The 2 Mai is a non-resident. Friends, 92A is there as well as 92B also there. Automatically we will follow 92C. That is nothing but one computation. Generally, if SSC offered any figure, department may accept, or else department may determine TPO by themselves, that is called as determined by assessing officer under section 92C subsection 3, or else department may refer the same to expert, that is called as TPO, that is called as 92CA, or else another possibility is there for SSC point of view, you can go for APA, advanced pricing agreement, correct? Yes, under section 92CC or else 92CD. Sometimes what happen, simply you can follow what department says, that is called as safe harbor rules under section 92CB. So these are the different parameters, correct? Yes, but today's topic is secondary adjustment. What is that? Please follow. Here Sai offered the figure of how much? 100 crores. But assessing officer said SI 100 crore is wrong answer. It should be 120 crores. I repeat, 120 crores. Everybody in the class, what is the increment here? 20. That is called as primary adjustment. So primary adjustment means adjustment to the net profit. Adjustment to the net profit is called as primary adjustment. So far we done it. Okay, we did it as for cup method, cost plus method, resale price method, profit split method, transaction net margin method, or any other method notified by the government, that is called as primary adjustment. After doing primary adjustment, simply SSC has to pay the tax on 20 crore, correct? The two, for this 20 crore, deductions won't allowed. For this 20 crore, losses also not allowed. For this 20 crore, what do you call? Other person's figures also will not be changed, correct? Yes. Once upon a time, the provisions are only up to this. After that, Government of India introduced another topic, section 92 CE. What is that? Secondary adjustment. Sir, adjustment to the net profit. I repeat, adjustment to net profit is called as primary adjustment, whereas adjustment in balance sheet, adjustment in books, then that is called as secondary adjustment. How? Point number one. A assessing officer will ask you, hey Babu, you, whatever about the 20 crores, please remit the 20 crore back to India. For that purpose, you have to show it as a loans and advances. Asset side, you have to show it. Why? How much you received actually? 100. But as for this computation, you have to receive 120 kada. The 20 crore you have to bring back to India. Further, you have to show it as a advances 20 crore. Now, you have to remit the same within how many days? 90 days. If you have not repatriated to India within 90 days, then you have to calculate the interest. On the interest, you have to pay the tax also. You have to pay the tax also. This entire concept is called as what? Secondary adjustment. Secondary adjustment starts when primary adjustment ends. Correct? Yes. Now all of you see the secondary adjustment. Now first one, primary adjustment means adjustment to the net profit is called as primary adjustment, whereas secondary adjustment means adjustments in what? Books of accounts. In that case, that is called as secondary adjustment. In case of secondary adjustments, the conditions are as follows. Condition number one, you must repatriate the amount within how many days? 90 days. Now within 90 days, you have to repatriate. Okay. In the following cases, secondary adjustment will be done. Number one, first one, SSE, you only did the same on sumoto basis. Primary adjustment done by SC on sumoto. You only offered 100 crore earlier. Afterwards, he only told me, sir, not 100, it should be 120. SSE himself. Number two, determined by assessing officer. Sai offered 100, but assessing officer not satisfied. He only computed 120. That is second option is 120. Third one, APA. Mr. Mukesh Ambani offered 100 crore, but as for APA, the figure is not 100, the figure is 120. Next one, safe harbor rules. I told you, if you want to follow safe harbor, you have to offer minimum that much of profit, correct? Yes, or over and above that, kada? Yes, you offered only 100, but after that you realized that as for safe harbor rule, the figure is very less. So you only increased the figure. Possible? Yes. Next one, 90-90A. What is section 90? What is 90A? 90 means bilateral agreement entered by government. 90A means bilateral agreement entered by specified association. Later on, subsequently adopted by our Indian government by publishing in official gazette. Babu, finally you did dash primary adjustments yourself or assessing officer or APA or safe harbor rules or as per DTAA. In that case, you have to repatriate the figure within how many days? 90 days. So if you are not repatriated within 90 days, then you have to show it as a dash advance, and that too on that figure you have to calculate the interest. Now what is the rate of interest? For this purpose you have to check the what kind of currency it is, whether Indian currency or foreign currency. Now if it is a Indian currency, the interest rate is based on SBI. If it is foreign currency, then the interest rate is based on LIBOR. LIBOR means London interbank rate. Correct? Yes. Now see the word, all of you. If the currency is reported in Indian currency, then you have to take now SBI rate plus 3.25%. If it is as per foreign currency, then you have to take as per dash LIBOR plus 3%. LIBOR plus 3%. This interest you have to calculate, on that you have to pay the tax. But students should get that out. Sir, is it double taxation? Yes. The reason, SC offered 100 crore, but you only told me it is not 100, it is 120. On 20 crore, SSC paid the tax. This is called as primary adjustment. And that too, you have to repatriate that 20 crore within how many years? How many days? 90 days. Now that too, if you have not repatriated within 90 days, then you have to show it as a advance, loans and advance, and you have to calculate the interest. Again you have to pay the tax. How long? Lifelong you have to do like this. Already I paid tax once, and the second time I am paying the tax. Is it double taxation or not? Yes. For the purpose, recent amendment, Government of India introduced one concept that is called as, instead of doing secondary adjustment, go for additional payment of tax. What is that? 18%. Simply pay 18% tax plus surcharge 12% plus health and education as 4%. Okay, if anybody don't want to pay tax like this lifelong time, then simply you can pay additional payment of income tax at the rate of 18% plus surcharge 12% plus health and education as 4%. That's all. With this, we're done with the topic 92 CC, 92 CD, after that 92 CE. But one thing you can remember, 92 CE secondary adjustment concept applicable only if the amount exceeds 1 crore. Example, our friend Sai, he offered income of 100 crore, but assessing officer computed, no, it is not 100 crore, 100 crore point 2 lakhs, 2 lakhs, only 2 lakhs. Come on, the difference is how much? 2 lakhs. 2 lakhs is more than 1 crore or less than 1 crore? Less than 1 crore. Then secondary adjustment applicable or not? No. Secondary adjustment applicable provided the primary adjustment difference figure is exceeds 1 crore. Otherwise not at all applicable. This concept is important theoretically, not important practically, important for theoretically. See the word 92. What is that? Introduction. Okay. 92A associated. 92B international transaction. C subsection 1 methods. C subsection 2 more than one method. C subsection 3 determined by assessing officer. C subsection 4 effect of ALP determined by assessing officer. CA reference to TPO. CB safe harbor rule. CC APA. CD effect of APA. Next one CE secondary adjustment. Correct? Yes. With this, done with the topics. Next topic 92D. Friends, next topic is 92D. D for documents. See the word. If the international transaction value exceeds 1 crore, then compulsory you have to maintain the documents for a minimum period of 8 years. See the word. SSC entered into international transaction or specified domestic transaction, then he is required to maintain the documents provided if the transaction value, aggregate transaction value exceeds 1 crore. Now, if such information documents whatever he maintained, it must be maintained for a minimum period of 8 assessment years. And next one, once you got the notice from the department, compulsory you have to submit the same within 10 days. Within 10 days from the date of notice. In some cases, they may extend the time up to maximum of 30 days. So, this is the topic related to section 92(2)(d). D for documents. So, if your international transaction or specified domestic transaction exceeds 1 crore, then you have to maintain for a minimum period of 8 years. That too, now you have to submit the same to the department within the 10 days time. Otherwise, sometimes it may be extended by another 30 days. And next one, if anybody fails to submit the same, you have to pay 2% of transaction value as a penalty. See the word 271G, failure to submit the information. In that case, you have to pay the penalty at the rate of 2% of transaction value. See the word 271AA, penalty for failure to maintain books of accounts, penalty for failure to report the transaction, penalty for maintain correct information, or penalty to submit the information. In all the cases, same answer. What is that? 2% of transaction value. But here, if you fail to submit master file, in that case, the answer is 5 lakh is the penalty. Otherwise, 2% is the transaction value. Next one, another topic, 92E. What is that? Report of CA. Chartered accountant report should be submitted. See the word. Every SSC to whom the provisions of TP applicable, that SSC compulsorily required to obtain one certificate from a practicing chartered accountant in form number 3 CEB. Okay. Now that too, you have to submit the same on or before 30th November of the assessment year. If anybody fails to do so, then he has to pay the penalty under section 271 BA. How much? 1 lakh is the penalty. I repeat, 1 lakh is the penalty. So 92E, that is nothing but TP report, transfer pricing report. Now friends, the total sections are as follows: 92, after that 92A, 92B, after that 92BA, next one 92C subsection 1, subsection 2, subsection 3, subsection 4. After that, next one is called as 92CA, next CB, next one CC, next one CD, next one is called as CE, next one is called as another number D, after that next number is called as E, next one is called as 93, next one is called as 94A, last one is called as 94B. This is the syllabus. After that, penalty sections also there, 271AA, next one 271BA, and 271G also there. Now all of you, 92 I told you, that is nothing but introduction. 92A, associate enterprise. 92B, international transaction. BA, that is nothing but specified domestic transaction. C subsection 1, methods. Subsection 2, more than one method. Subsection 3, determined by assessing officer. Subsection 4, effect of ALP determined by assessing officer. CA, reference to TPO. CB, safe harbor rule. CC and CD, APA. CE, secondary adjustment. D, documents. E, audit report. Next one, another topic is called as 93. Okay, not important topic. Anyhow, clubbing provisions related to non-resident, not that great important, but we will cover. Now, follow the topic, very unimportant topic, that is 93, transfer of income to non-resident. Please follow this example. Our friend Mr. Ashok, he don't want to pay the tax. That is the reason he transferred the property to his Russian friend called as Andrea. Okay. In that case, our SSC wanted to escape from payment of tax. In that case, now Government of India introduced one section that is called as section 93. What is that? Transfer of income of whom? Non-resident. So here the conditions are as follows. Please follow the topic. Number 1, Babu, any resident, I repeat, any resident or any non-resident, they are the transferers. What they did, they transferred any income. That income may be related to dash mobile or immobile or tangible or intangible, whether located in India or located outside India. They transfer to whom, non-resident. The two, they have one condition also. Whenever they want to take it back from the foreigner. In that case, tit for tat, that is a pakka binami transaction. Therefore, that income will be clubbed in the hands of transferer. Okay, I will take one example. So many people, they will transfer the property to their foreign relatives or their foreign friends. In that case, now if government find that it is a binami transaction, how do you know binami transaction? See the word here. Now transferer transferred, and he only have one particular right. You know what is the right? In future, he can take back the property. If you are able to take back the property in future, that is a binami transaction. No, then income on the particular transfer is clubbed in the hands of transferer. Okay, these are the condition. Number one, there is a transfer of asset to whom? Non-resident. That too, due to such a transfer, the income of such asset is became payable to Mr. Non-resident. Transferor acquired the power to enjoy the income whether immediately or in future. If you transferred permanently, no problem, but you are transferring with a another power. What is that? In future, we can take back the property from your foreign friend. In that case, it is a binami transaction. Income of such a transaction is clubbed in the hands of transferer. Okay, fine. So this is the chapter called as section number 93. Not at all important topic. Next one, it is time for section number 94A as well as 94B. Follow. Now 94A, that is nothing but NJA, notified jurisdictional area. Very simple topic. It will take only 1 minute. Follow. In this world, there are total 195 countries as recognized by UNO. 195. Otherwise, 198 countries are there. Okay, but recognized by UNO is only 195. You know what happened with some countries? India does not have DTIA or India does not have any cordial relation. Now that country as well as India does not have power to exchange of information. I repeat, does not have power to exchange of information. In that case, some countries notified by government of India as a NJA. Come again. NJA. What is that? Notified jurisdictional area. Now what happened, this is a advantage to some people. What some people will do, immediately they will go to that countries. Which countries? India does not have proper agreements for exchange of information. They will go to that country and they will start their establishments there. Okay, after that they will have transaction with that countries only. But India unable to get the data kada. Yes, now that is a loophole for so many people. That is the reason government of India introduced one concept that is called as NJA. Raja, if you have any transaction with persons located in NJA, now you and that fellow are treated as deemed associated enterprises, and the transactions will be treated as deemed international transaction. You no need to check 26% voting power, no need to check 90% of purchase of raw material, no need to check 100% of intangibles, no need to check bank guarantee 10%, no need to check anything. If you entered any transaction with persons located in NJA, by default you are a associated enterprises, and by default the transactions are treated as international. Already I told you friends, whenever A and B is there, automatically 92C applicable. So in exam, if they mention the topic called as NJA, you no need to discuss. Simply do the problem as for 92C. Correct? Yes. But one more point. What? If you make the payment to any person located in NJA, compulsory you have to deduct the TDS. How much rate? Answer, rate specified in the act are 30%, whichever is higher or lower. Higher. So rate are 30%, whichever is higher. And last but not least, if you receive any amount from person located in NJA, you Indian, you have to explain the source properly. If you are unable to explain the source, then it is treated as income. It is treated as income. It is pakka taxable. What some people will do, namesake, they will take the loans from persons located in NJA. They will take the loans from the persons located in NJA. The two, they will not explain properly. If you are unable to explain properly, we will assume that that is a loan or income. Obviously, when I treat it as a income, it is pakka taxable. So this is the topic called as NJA. Now tell me friends, what is NJA? Who will notify NJA? Central government. What is the basic condition for that? India does not have agreement for exchange of information. Now in that case, so many people will go to that country and take the shelter. Best example, Swiss Bank and India does not have proper agreement for exchange of information earlier. That is the reason Indian politicians or Indian criminals, they went to that particular place and they opened bank accounts. That bank is not giving the information to our Indian government. So many people, they are keeping their block money, foreign block money in abroad. So no one is paying tax properly. We cannot get the data also. That is the reason government notified the territory as a NJA. If you enter any transaction with NJA, I will assume that you and that fellow both are associated, both are deemed associated, and that too, I will assume that the transaction between you and that fellow is a deemed international. The two, I will compute as per ALP or TP. Correct? Huh? Yes. Chalo. But here all the provisions are applicable, but tolerance limit not applicable. What is tolerance limit? 3%. That is not applicable to those people who are located in NJA. For example, our friend Sai, he entered one transaction with NJA person. Tell me, automatically I calculated 2 ALPs. Now arithmetically mean I calculated. So tell me, 3% variation is not there. Still, I need to follow ALP or not? Yes. I no need to give any benefit to persons located in NJA. With this, we're done with the chapter called as 94. Yeah, what is that? NJA. Next topic, 94B, bar on interest. What is this? All of you please follow. So many people want to take the loan from the associated enterprises, and they will pay the interest. For that purpose, Government of India introduced this beautiful concept that is called as 94B. What is that? Follow. Now here one fellow Sai Limited, another fellow My Limited, 70% of shares held by My Limited. So both are associated, and My is a non-resident, therefore international transaction. One day what happened? Sai has taken the loan of 100 crore, and that they paid 70% interest. They would have 70% interest. That means 70 crore is P&L debit. Now because of that, automatically profit will come down. Correct? Yes. Now nowadays, Government of India introduced one concept, 94B. What is that? Babu, if you take the loan from your relative, means your associate enterprise, in that case you cannot pay unlimited interest like this. You have to pay interest whichever is lower. Small a, small b. Small a, what is the actual interest? How much in my example? 70%. Or you have to pay how much? 30% of EBITDA. E for earnings before interest, tax, depreciation, amortization. Earnings before interest, tax, depreciation, amortization into how much percentage? 30. Whichever is higher or lower. That figure only you have to take it. Suppose this company Sai Limited interest paid is 70 crore, whereas their actual profit is only, let us say 20 crore. Only 20 crore. Tell me, now interest 70, whereas 30% of EBITDA is 30% of 20 crore. What is that? 6 crore. How much is allowed then? Whichever is lower, 6 crore is only allowed. How much is disallowed? The excess amount will be disallowed. What is excess? 70 minus 6. How much? 64. This 64 crore interest will be disallowed, and it will be carry forward for a maximum period of 8 years. it will be allowed in next subsequent 8 years when there is a shortage. This is the concept called as 94B. So memory code B for bar on interest. Bar on interest. Okay, chalo. But this section is not applicable if the associate enterprise is engaged in the business of banking and insurance. Their main business is banking and insurance. Then not applicable. Okay, chalo. Now I wanted to extend some more points here. Sai as well as Mai both are associate enterprise. Now Mai is in the business of bank and insurance. Anybody in that case, whether these provisions are applicable or not applicable? Not applicable. Correct? Yes. Next question, another point. Mai has given the loan to Sai. Then provisions are applicable or not? Yes. Second one. Sai has taken the loan from another fellow called as Dwarka Mai. Okay. I repeat, Sai has taken the loan from whom? Dwarka Mai. Dwarka Mai is an outsider. There is no relation between Dwarka Mai and Sai. Anybody? 94B provisions are applicable or not? Answer, not at all applicable. So moral of the story, 94B is applicable only when you have taken the loan from your associate enterprise. But one small doubt. He has taken loan from third party. In that case, 94B provisions are not at all applicable. But guarantee given by Mai to Dwarka Mai. I repeat, Mai has given guarantee to Dwarka Mai. After Dwarka Mai only given the loan to Sai. Now tell me, 94B provisions are applicable or not? Yes. The reason is indirect relation is there. Therefore, 94B provisions are applicable. Last question. We have taken loan of 100 crore, but Mai Limited has given guarantee to Dwarka Mai Limited only for 80 crore. Everybody in the class. 94B provisions are applicable for entire 100 crore or only for 80 crore? Only for 80 crores. The reason, compulsory there must be associated enterprise relation, whether directly or indirectly. Here indirectly is there with respect to only 80 crore. 20 crore is given personally, correct? Yes or no? Therefore, for 20 crore, the provisions of 94B are applicable or not applicable? Not applicable. With this, complete the topic called as section 94B. Okay. These are the total sections as I told you earlier. 92 intro, 92A associated, B international transaction, C subsection 1 method, subsection 2 more than one method, subsection 3 determined by assessing officer, subsection 4 effect of ALP determined by assessing officer, CA reference to TPO, CB safe harbor rule, CC CD advance pricing agreement, CE secondary adjustment. Next one, D documents, E audit report, 92F definitions, 93 income of non-resident clubbing provisions, 94A and JA, 94B bar on interest. Next section, 92BA. What is that? Specified domestic transactions. Yep. Here, same company may have different entities. Let us say one entity is eligible for 10AA. Second entity is located in DTA. DTA means domestic tariff area. 10AA means, SEZ. Everybody know that SEZ generally are not subject to tax, whereas DTA are subject to tax. That is the reason some people what they are doing transfer internally. Example, SEZ is a power generation company. We are purchasing power from DTA. We are purchasing power from SEZ to DTA. And that too, we are making very high payment. Intentionally, we are making high payment. In that case, both are local companies, domestic companies only, whether TP applicable or not. Once upon a time, answer is no, TP not applicable. Subsequently, Government of India introduced one section, 92BA, that is applicable for certain domestic transaction, not for all, only few transaction. That is the reason it is called as specified domestic transaction. But I never told you like this for international transaction. All international transactions are covered. But as well as specified domestic transactions means only limited number only applicable. That too, if the transaction value exceeds 20 crores. Once upon a time it was 5 crore, but after that they changed the number to 20 crore. What is that? See, now one entity is covered under 1080 IA. 80 IA means eligible business. Other entities are not eligible businesses. The transaction between these two are subject to ALP or TP because both are called as specified domestic transaction. Example, friends, one company is covered under 80 IA category. 80 IA means, you know, infrastructure companies, correct? Yes. Infrastructure companies are providing some services to non 80 IA companies. Now, you know, 80 IA companies are tax holiday companies. 100% of profits are not at all taxable. Okay. Whereas non 80 IA companies are pakka taxable. Therefore, what they will do, they will transfer some properties to this fellow, or they will create some kind of income source in this company, and they want to escape from the tax. Okay, for that purpose, Government of India introduced the concept called as specified domestic transactions. If the transaction value exceeds 20 crore, then the following transactions are treated as specified domestic. Number one, transaction between those entities located under 80 IA category, or else those transactions which are covered under 10 AA. 10 AA means, you know, SEZ. Next one, those transactions entered between those companies are following section 115 BAB. What is 115 BAB? You know, some companies are taxable at what rate? 30%. But those companies who wanted to follow 115 BAB are taxable only at the rate of 15%. 115 Bob companies are taxable at the rate of 15, whereas other companies are taxable at the rate of 30. What these people are doing, you know, they intentionally wanted to increase the profit in Bob company, and they wanted to decrease the expenditure in other companies, so that they ultimately wanted to pay less amount of tax. In this case, if you enter any transaction with those companies who are under 115 Bob, in that case, automatically if the transaction value exceeds 20 crore, compulsory I need to compute as for APA or as for ALP or as for TP. So these are the transactions called as specified domestic transactions. So friends, this is the complete chapter of transfer pricing. Out of that, the important core areas are as follows. Number one, 99% they will give one problem. 99%. That problem is related to practical one. 99% that is a cup method or cost plus method. I repeat, cup or cost plus. This is important method, cup as well as cost plus. Number two, after that, case law oriented questions they will ask. Case laws oriented. I already told you the TPO order, whether it is binding on assessing officer or not. They may not ask directly like this. They will float a particular case law and they will ask you whether yes or no. Now that is case laws oriented question. Number three, some theory questions also they will ask. Theory questions. Okay. Example, what is the penalty if SSC fails to submit TP report? What is the penalty? How much? 1 lakh. So 271 BA. Like that, you should able to answer these points. Very important chapter. Without this chapter, you will never get the question paper. The reason is very simple. CMA Institute already classified the weightage for direct taxation and classified the weightage for international taxation. In international taxation, the major important chapter is TP, and the second important chapter is DTAA, and the third important chapter is non-resident. Minimum 8 marks, minimum 8 marks, minimum 8 marks you will get out of these three topics. Minimum 8. Worst case 6 marks, 6 marks, 6 marks. Okay, so this is the compulsory weightage of these chapters. And some more chapters are there. Bar, that is board for advanced ruling. Compulsory question we can expect out of this chapter, minimum 3 marks theoretical question. Minimum 3 marks. Okay. And the next one, some more chapters are there. PGBP. If you learn PGBP, you can solve total income computation questions. Minimum weightage is 18 marks. Minimum 18 marks. For that, you should know PGBP and you should know math computation also. Then automatically you can get a minimum 18 marks. And next one, Black Money Act. The weightage of this chapter, minimum 3 marks. Black Money Act. And capital gain. In capital gain, section 50 capital B, that is a slum sale. That is a very important chapter, very important problem. Anyhow, out of these topics, what I want to say is TP is important. What you have to do? First, open your running notes or author book, whatever the book you want to study, first study. Don't leave anything. First read. Number of times you have to revise. After that, open past exam questions. Scanner. Okay. Latest one, not old one. Scanner. If you don't have scanner, open any author book or any book at your end. You can open and solve the problem with the calci as well as pen and paper. You can solve. But no need to revise all the problems every time. Out of 20 to 25 questions, minimum at least 7 questions keep on repeating. Okay, so what you have to do, you have to take the highlighter and highlight the keyword. Okay, and some questions are very tricky questions. That questions you have to choose as a PFP, problem for practice. That problems you have to solve. And one more point, one more secret, if you solve 20 questions, I'm challenging you, the same questions will be repeated, the pattern will be repeated. Okay, that is the reason compulsory take the problems for these A category chapters. Take the problems and do the problems. Don't do problems FIFO mode. Do the problem LIFO. Last in first pro. Like that you have to solve. Example, if you open transfer pricing, first question given in 1996, if I am not wrong. The questions are like this. What are the methods of computation of TP? 6 cost plus profit split. Second question also the same. Third question, TP is not applicable if it leads to reduction of income. Comment. Answer, yes. Student, what he will do, he will study the first 3 questions. So automatically you know the answer, gada. Then he will feel, unnecessarily I am wasting my energy on this chapter. So immediately he will leave the chapter. Okay. That is the reason what you have to do. Go to the last one. 2024 June exam questions you have to open. 2024 November exam questions also you can open. CMA, CA final or something you can open and solve the question. Automatically you will find some blurriness. You will find some water from your eyes. That is called as tears. It is, I think it is in salty taste, I think so. Okay. So immediately what happened? Wipe it off and again do the problems. Like that you have to do. Okay, now fine. With this, done with the chapter called as transfer pricing. Friends, see the next topic, very important topic and small topic. SEZ, section number 10AA, special economic zone. Please follow this one. Now, once upon a time, UPA government introduced this concept. This concept we borrowed from China. Generally, what happened in India, certain areas are overdeveloped, but certain areas are underdeveloped. That is the reason government of India wanted to develop these kind of underrated areas. For this purpose, they notified the same as a SEZ, special economic zone. Now, other than this SEZ, entire India is called as DTA, domestic tariff area. Suppose if you manufacture in SEZ, if you do services in SEZ, you no need to pay GST, you no need to pay customs, you no need to pay excise, and you no need to pay service tax, and you no need to pay income tax also. These are the benefits they wanted to offer for those people who wanted to have business transactions or manufacturing activities in SEZ. The reason is very simple. So that what happen, these areas automatically will get development, correct? Huh? Yes. Now automatically the burden on developed areas will come down. That is the reason once upon a time in the year 2005, UPA government led by Dr. Manmohan Singh, they introduced this concept called as special economic zone. But some conditions are there. What is that? Condition number one, it is applicable to all SSEs being manufacturer or service providers. I repeat, only manufacturers or service provider. But sorry ma, not applicable for traders, not applicable for wholesaler, not applicable for retailer, not applicable for business people. Only applicable for manufacturers or producers, and applicable for service provider. Means ultimately you have to do two activities, either production or manufacturing. Next number, the unit must be located in which area? SEZ, as notified by the central government. Now central government recognize the same as a SEZ area. In that area you can locate the same. Okay, and the conditions are as follows. You have to start your unit on or after 1/4/2005, but you must start operations at least on or before 31st March 2021. Come again, on or before 31st March 2021. Nana, we are in 2024. If you want to start this one right now, not applicable. So you must have started the production before 31st March 2021. And the two friends, this is applicable only for those SCs who started industries or service entities in which area? SEZ area. But don't close the old one and don't start the SEZ unit. It should not be formed by splitting or by closure of old unit. Number one. Number two, it should not be transferred by transfer of second hand plant and machinery. Second hand plant and machinery permissible or not permissible? Not permissible. If you want, maximum 20% of total value of plant and machinery can be a second hand imported plant and machinery. Okay, so only 20%, to that extent you can import from abroad if you want. But one thing for sure, whatever goods you manufactured or whatever services you rendered, compulsory you have to do export. I repeat, you have to do export. The two, the amount must be received within how many months? 6 months. Must be received from within the time period of 6 months from the end of relevant previous year. So 6 months is the time period. And one important amendment, a return must be filed within the time. I repeat, return must be filed within the time specified under section 139 subsection 1. So moral of the story, if you make late filing of return, I repeat, belated filing of return, whether deduction allowed or not allowed? Not allowed. See the word, no deduction will be allowed in case of late filing of return. And the next one, your books must be audited by practicing chartered accountant. In that case, you are eligible for deduction for a period of how many years? 15 years. I repeat, for a period of 15 years. So far, what are the conditions you covered? Tell me. Your unit must be located in SEZ area as notified by central government. That means you are a SEZ unit owner. You are a manufacturer or producer or service provider. You have to export the same to foreign countries, and in return you have to receive convertible foreign exchange. The two, you have to receive convertible foreign exchange within the period of 6 months from the end of relevant previous year. I never told you 6 months from the end of export. I told you 6 months from the end of relevant previous year. Your previous year 31st March. 6 months means 30th September. Correct? Yes. Next number, return must be filed. The two, return must be filed in time. Correct? Yes. Amendment. Next one more beautiful point. You are not only manufacturing, production also covered. Student out, what is the difference between manufacturing and production? Production includes manufacturing also. Okay, manufacturing means conversion of raw material into finished goods. Because of that reason, you should able to produce one new product with new name, new usage, new characteristic. This is called as transformation test. If transformation test is passed, that is called as manufacturing. But I am not talking now about manufacturing, I am talking about production. Surprisingly, it includes agriculture. Oh, if you do agriculture in SEZ area and if you export, then also you are eligible for deduction. But aquaculture, agriculture, everything is covered. But anyhow, manufacturing, production as well as service providing also covered. But it is eligible for deduction for first 5 years. 100% of export profits are allowed. 100% of export profit. Next 5 years, 50% of export profit. Last 5 years, not 50%, least of the following is allowed. How much? 50% of export profit or amount transferred to SEZ reinvestment allowance reserve. Last 5 years means 11th, 12th, 13th, 14th, 15th. Each and every year you have to create one reserve and you have to transfer the amount to that particular reserve. If you do like this, then only you are eligible for deduction for last 5 years. Student doubt, sir, total profit or export profit? Only export profit. So export profit formula, total profit into export turnover divided by total turnover. Student doubt, sir, SEZ can have local sales? Yes, SEZ can have domestic sales also, but they will not get any deduction with respect to domestic sales. They will get deduction only with respect to export. Not entire export, only those exports whose proceedings received within the period of 6 months. Okay, na? Yes. Next one, another topic. What is the export turnover formula? Very simple. Export turnover means only export receipts which are received in 6 months time. If you received in 7th month, 8th month, no, that figure will not be considered. Example, I supplied for 120 crores to foreign countries, but I received only 80 crores. 40 crore I have not at all received. Anybody in the class? Now deduction will be allowed for 80 crores or 40 crores or 120 crores? Only for 80 crores. The 40 crore is eligible or not eligible? Not eligible. See the word export turnover formula. Export consideration brought to India in convertible foreign exchange within 6 months from the end of relevant previous year. Less out of that, some reasonable expenses which are incurred in foreign currency will be allowed. Example, telephone charges, freight, insurance, these kind of things only will be allowed. So conclusion, export profit formula is equal, what is that? Total profit into export turnover which is received in the period of 6 months divided by total turnover. I want to take one illustration, follow. Now my total turnover is total export turnover 120 crore, but I received 80 crore only in time. I received only 80 crore only, 40 crore I have not received. This is export turnover. Domestic turnover is, that is, let us say 100 crore is the domestic turnover. Total turnover is 220 crore. Okay, total turnover. My total profit, let us say 10 crore. What is the formula? Answer. What is the profit here? 10 crore into, what is the export turnover? 120, but don't take 120, you have to take only 80 divided by what is the total turnover? 220 or only 80 plus 100, 180. What is the answer? 220. So whatever the amount you have not received within 6 months must be deducted from export turnover, but should not be deducted from total turnover. So that is the point. Next one, deduction under section 10AA should not exceed total income. Okay, does not exceed total income. Next and last one, whatever the amount you transfer to SEZ reinvestment reserve must be utilized for two purposes. What is that? Purchase of new plant and machinery. That too, the new plant and machinery should be put to use within the period of 3 years. Now ultimately you have to use the same for the business development purpose, but you should not use for dividend declaration or you should not use for purchase of asset outside India. Only you have to purchase one plant and machinery, the two for production in India. The two that must be kept to use within the period of 3 years. Suppose if anybody misutilized, it is taxable in the year of misutilization. Suppose anybody not at all utilized within 3 years, automatically it is taxable in the 4th year. That's all, ma. With this, done with the topic called as section 10AA. But there are some other points. Number one, If you want to claim 10AA, you should not eligible to claim deduction under section 35 AD. But in one CA final examination, one time they asked one question. SC want to take both. Can you take it or not? Answer, no. But for different businesses, can I take it? Yes. For one business 10AA, for another business 35 AD, I can take it or not? Yes. But for same business, you should not take. That is important point. Second one, there are two places. One is SEZ, one is DTA. Come on. 10AA deduction is only applicable for SEZ, not applicable for DTA. The two 10AA is applicable for SEZ only for exports, not for total turnover. Correct? Yes. Next number, last number, services rendered outside India, that is eligible for deduction under section 10AA. But I developed software in India. After that, this software we transferred via different modes, whether eligible for deduction or not. That is the question. I request you all follow. Now one day, Venkatesh and Trisha, these two members went to Australia and they developed the software. They developed the software and they received foreign currency and came back to India. Everybody, it is called as export or not? Yes or no? Answer, some people doubt it is not an export because export means you have to do the same in what? SEZ. After that you have to give the package to foreign country. Kada? That is called as export. But here Trisha and Venkatesh, they only personally gone to Australia and developed the software there and came back to India. It is not an export. This confusion was there. But later on CBDT has given one circular. In case of software, on-site development of software is very common, correct na? Therefore, if you develop software in your SEZ location, after that you transfer to foreign country is also eligible for deduction, or else your team people only went to that foreign country and developed software on-site and took the foreign currency and came back, that is also eligible. Okay na? Na. It is only applicable for software, not for manufacturing. Okay. Can you say, sir, I will go to foreign country, I will manufacture, there only I will give the delivery, there only I will give the delivery and I will take the money and come back. Can I call it as a foreign currency? Can I call it as a foreign remittances? No. Can I take the deduction under 10AA? No. This is applicable only for SEZ software services. Correct? Yes. With this, done with the topic called as section 10AA. What is that? Deduction for SEZ units. Section 10 means exemption, no. But section 10AA means not exemption. This is a deduction. That is the reason it should be deducted out of total income. Okay, na? Fine. Friends, next topic is AMT, alternative minimum tax. Friends, there are two concepts. First one is called as MAT. Second one is called as AMT. MAT is applicable only for corporate assessees, that is companies, whereas AMT is applicable for non-corporate assessees other than companies. Now, non-corporate assessees means we know that is nothing but individual, HUF, AOP, BOI, AJP. Next one is called as LLP as well as partnership firm. So other than companies, AMT provisions are applicable. So anyhow, if examiner asked you to calculate tax liability, I repeat tax liability, compulsory we need to follow 5 steps. Step number 1, that is nothing but compute total income. Step number 2, compute regular tax. I repeat, compute regular tax. Step number 3 as well as step number 4 are as follows. Step number 3, we need to calculate adjusted total income. I repeat, adjusted total income. Step number 4, we need to calculate AMT, alternative minimum tax, at the rate of 18.5% on adjusted total income we need to calculate. After that, what happened? Total tax liability, whatever the net tax liability is nothing but, come on, regular tax or AMT, whichever is higher. So if examiner asked you to calculate tax liability, compulsory we need to do two computations. Computation number 1, regular tax. Computation number 2, AMT. Both the taxes we need to calculate, and out of these two taxes, we need to calculate whichever is higher. Now, how to calculate total income? This is normal provisions only. Number 1, salary, house property, PGBP, capital gain. After that, other sources. After that, clubbing. After that, set off and carry forward of losses. After that, gross total income. Out of that, we need to give deductions. After that, we need to calculate tax liability. While calculating tax liability, first priority goes to special tax. After that, balance figures are subject to normal tax. We need to calculate total tax. On that, we need to add surcharge and health and education cess. So that is the step number 1 as well as step number 2. Total income as well as regular tax. Whereas step number 3 is nothing but special computation. What is that? Adjusted total income. How to calculate adjusted total income we are going to cover right now. Before that, see the basics. AMT is applicable to all SSEs except company. It is applicable only for non-corporate SEs. The purpose is very simple. What is the purpose? Now, to collect the tax from low tax entities or to collect the tax from nil tax entities. For that purpose, 5 steps are applicable. Step number 1, calculate total income, calculate total tax, and calculate adjusted total income, calculate AMT. So tax liability is equal higher of regular tax or AMT. Correct now? Yes. Next one, how to calculate adjusted total income. Friends, for adjusted total income purpose, first we have to take the total income. We have to take total income. After that, we need to add back certain deduction. What is the deduction number 1? Deduction claimed under section 10A. Whatever the deduction SEZ unit claimed under section 10A must be added back. After that, deduction under section 80 H2TT except 80P. What is H2TT? You know, that is nothing but profit linked deductions. Come again, what? Profit linked deduction. Now, deductions are 3 types. One is expenditure based, one is income based, one is special nature 80U, that is handicapped persons. Correct now? Yes. I am not talking about expenditure, I am not talking about special, I am talking about income based. Profit linked deductions must be added back. What are the section? 80H2, 80TT except 80 capital P. Balance figures must be added back if any deduction is claimed by the SSE. After that, we need to add back deduction under section 35AD. You know what is section 35AD? Specified business deduction. If anybody claimed that deduction, that also should be added back. And one thing for Schumer, now with respect to 35AD expenditure is concerned, depreciation will be allowed. I repeat, depreciation will be allowed. Depreciation as per section 32, assuming that deduction under section 35AD was not allowed. Okay, so simple logic. Once you have claimed 35AD, 100% of deduction you have claimed, right? Once you have claimed 100% of deduction, DIP is allowed or not allowed? Not allowed. Correct? Nowadays, what happened? While computing AMT for calculation of adjusted total income purpose, 35AD deduction we are adding back. Correct? Adding back means deduction indirectly allowed or disallowed? Disallowed. Then common sense, proportionate depreciation must be allowed or not? Yes, that is the reason. Add back deduction under section 35AD and corresponding depreciation should be allowed as deduction. After that, you will get adjusted total income. Friends, on adjusted total income, we need to calculate AMT, alternative minimum tax. What is that? At the rate of 18.5%. Next, friends, these provisions are not applicable to individuals, not applicable to HUF, AOP, BOI, AJP, whose adjusted total income does not exceed 20 lakh. I repeat, it is anyhow not applicable for companies, leave it, but applicable for non-corporate SEs. Correct now? Yes. But some relaxation is given by the lawmaker as far as individual HUF, AOP, BOI, AJP is concerned. If their adjusted total income does not exceed 20 lakh, automatically the provisions are applicable or not applicable. These provisions are not applicable. But anyhow, this 20 lakh relaxation is not applicable for LLPs as well as partnership firm. Correct? For LLP and partnership firm, by default it is applicable or not? Yes or no? Yes. CMA final level, compulsory they will ask one question for total income computation. That question may be related to company or may be related to partnership firm. If related to company, they may ask you about MAT. If it is related to partnership firm or LLP, they will ask about the AMT. So either way important. But honestly speaking, company is more important and partnership firm also important. If you ask me percentage, 70% important is MAT and 30% important is AMT. Okay, sometimes what happen, they may ask only AMT instead of asking the MAT. Okay, so get ready with this. With this, we're done with the topic called as AMT computation. So here some special points are there, that is as follows. AMT credit. Now tell me friends, what is the AMT credit? If anybody paid the tax as for AMT, automatically AMT credit will be awarded. What is the AMT credit formula? AMT credit is equal AMT minus normal tax. So whatever the AMT credit is there, that can be carried forward for a period of how many years? 15 years. I repeat, for a period of 15 years. And it can be adjusted in the year in which your normal tax liability is higher. Normal tax liability is higher. And that too, you can adjust to the extent of least of the following. Correct? Yes. How much? Number one, outstanding AMT credit or difference between regular tax and AMT. Difference between regular tax and AMT, what is the figure? And outstanding AMT credit, whichever is lower only will be adjusted. Balance amount will be carried forward for remaining period of 15 years. Correct? Yes. Next number, some special points are there. What? Number one, you have to take one report from chartered accountant, form number 29. 29B is for MAT, whereas for AMT it is 29C. And next number, AMT credit can be carried forward for how many years? 15 years. So that is one point. And next one, any interest will be paid by government on AMT credit outstanding balance? No. Government will not pay any interest on outstanding AMT credit. Next. Sir, advance tax provisions whether applicable or not? Answer, obviously applicable. Even though you are liable to pay tax as for AMT provisions, advance tax provisions are also applicable. Interest under section 234 B and C are also applicable if you have not paid advance tax. Nothing special in that. Now provisions are applicable as it is. And form number 29C. Next number, AMT rate is 18.5%, but if your unit is located in IFSC, then the rate is 9%. And cooperative societies are also eligible to pay tax as for AMT. The amendment rate is as follows, 15%. For all others, that is 18.5%. But cooperative society, what is the rate? 15%. And next number, one amendment is there, that is as follows. Follow. AMT credit formula. AMT credit is equal AMT minus normal tax. But actually the correct formula is like this. AMT after adjusting FTC minus regular tax after adjusting FTC. What is FTC? Foreign tax credit, which is covered under section 90 or 90A. What is 90? Bilateral relief. Whatever the AMT credit, no, for computation purpose, we have to take tax payable as for AMT after adjusting FTC minus regular tax payable as for provisions of Income Tax Act after adjusting foreign tax credit must be taken. Next one friends, only these deductions must be added back. I told you 80H to 80 TT. That means IA, IB, IC, ID, IE, IAB, IAC, IBA, JJA, JJAA, LA, not P. P should not be added back. PA must be added back if it is claimed. QQB also must be added back. Last but not least, 80 RRB. But anyhow, TTA should not be covered. Correct? Huh? I told you only these deductions must be added. What is that? 80 H2, 80 TT, except 80 capital P. So this is the topic related to AMT is concerned. And one more amendment, all of you, those SSCs who are following alternative tax provisions like 115 BSc or any cooperative societies who are following 115 BAD, they are not liable to pay tax as for AMT. When they are not liable as for tax as for AMT, automatically outstanding AMT credit will get lapse. Correct? Yes. And last sentence ma, sometimes companies will be converted into LLPs. Correct? When company converted into LLPs, LLPs are liable to pay tax as per AMT, whereas companies are liable to pay tax as per MAT. When companies are converting in the form of LLPs, outstanding MAT credit will be allowed or lapse? Lapse. That's all, Nana. This is the topic related to AMT is concerned. Important, but not that great important like MAT. But anyhow, the provisions are as follows. It is applicable for non-corporate SCs. That too, it is applicable for only those non-corporate SCs, individuals HUF, AOP, BOI, AJP, whose adjusted total income exceeds 20 lakh. If examiner asked you to calculate tax liability, get ready with 5 steps. Step number 1, total income, total tax. This is normal computation only, nothing special. Leave it. Next one, adjusted total income. How to calculate? Total income. After that, add back if you have claimed following deductions: 10 AA, SEZ deduction, 80 H2, 80 TT except 80 P. After that, 35 AD deduction. After that, deduct depreciation with respect to 35 AD expenditure is concerned. Then after that, you will get the adjusted total income on that AMT at the rate of 18.5%. Normal tax or adjusted total income, whichever is higher, should be considered as a tax liability. Kada? And if you are liable to pay tax as for AMT, advance tax, normal tax provisions are generally applicable. Next number, if you pay tax as for AMT, AMT credit will be awarded. AMT credit formula, AMT after FTC minus regular tax after FTC. And the AMT credit can be carried forward for a period of 15 years, and it can be adjusted in the year in which normal tax liability is higher than the AMT. The two, least of the following amount only will be allowed for adjustment: outstanding AMT credit or difference between AMT minus normal tax or normal tax minus AMT. Normal tax minus AMT. You have to obtain one report from Chartered Accountant form number 29C, and you have to follow all other provisions in general. You have to follow. Understood? Fine. And the rates are as follows. That is, AMT rate is 18.5%. If you are a cooperative society, it is 15%. And in case of unit located in IFSC, International Financial Service Center, then that is 9%. Okay, chalo. Friends, our next topic is MAT, minimum alternative tax. Very, very important topic for exam point of view, and very, very important for your professional assignments also. Number 1, corporate SSEs, that means companies, are liable to pay tax as per the provisions of MAT. Number 1, if examiner asked you to compute tax liability of companies, compulsory you have to calculate the tax liability as for 5 steps. Step number 1, total income. Step number 2, total tax liability. Step number 3, calculate book profit. Come again, calculate book profit under section 115 JB. After that, you have to calculate MAT, minimum alternative tax, at the rate of 15%. After that, tax liability is equal, come on, regular tax or MAT, whichever is higher. Higher of the MAT or regular tax, you have to pay it. Okay, number 1. First one, total income computation. In case of company, the total income computation as follows. Income from the head salary is not applicable because he is not a natural human being. House property applicable or not? Yes. Capital gain? Yes. PGBP? Yes. IFOS? Yes. Clubbing provisions may be applicable. If it is the case, applicable. Next one, set off and carry forward, applicable. Gross total income, after that deductions, after that total income, that is okay. After that, you have to calculate tax liability. Tell me friends, what are the tax rates applicable for companies? Number 1, domestic company. Companies are two in number. One is domestic company, one is a foreign company. First, to see the difference between domestic and foreign. What is the difference? The difference is as follows. All Indian companies are domestic. Indian companies means domestic. Next one, foreign companies which made arrangements for declaration of dividend in India. That is a foreign company, no doubt at all, but it made arrangements for declaration of dividend in India. Why? Because their operations, their activities, everything is confined to India. That is also called as what? Domestic company. Other than that, foreign companies all are covered under foreign companies only. That means those foreign companies which are not distributing any dividend in India is come under pure foreign company. What are the tax rates? The tax rates are as follows. Number one, domestic company tax rate is 30, whereas foreign company tax rate is 40%. Next one, surcharge. Now, up to 1 crore, if their income is up to 1 crore total income, there is no surcharge. No surcharge. Above 1 crore, up to 10 crore, then the surcharge rate is 7%. If it is more than 10 crore, I repeat, if it is exceeding 10 crore, then the surcharge rate is 12%. Whereas in case of foreign company, up to 1 crore to 2 crore, the surcharge rate is 2%. Whereas if it is more than 10 crore, that is 5%. And health and education says that is nothing but 4% in both the cases. Correct now? Yes. But one thing for sure, now, if this foreign company for the assessment year 21-22, their total turnover does not exceed 400 crores, then the rate is not 30%, the rate is 25%. So, because Government of India promised like this, year by year, corporate taxation rates they wanted to reduce. For that purpose, they introduced this concept anyhow. Follow the next one, book profit computation. On that, we have to calculate MAT at the rate of 15%. After that, we have to calculate tax liability is equal, come on, regular tax or MAT, whichever is higher. Next, how to calculate book profit. That is very important concept, very lengthy concept, very important concept for exam point of view is concerned. Now, for the purpose of computation of book profit, you have to follow certain things must be added, that is called as positive adjustments. You have to deduct certain things, that is called as negative adjustments. What should be added back? For that, I want to tell you one technique, please follow. IRP, these are the names you have to by heart. IRP, SED, DDDR, AFNCZR. Student doubt, sir, shall I need to by heart like this? Yes, absolutely you have to by heart. Okay. Now, come on. IRP, SED, DDDR, AFNCZR. These figures we need to add back. This is called as positive adjustments. And certain things we need to deduct, that is called as negative adjustments. What are the negative adjustments? No, we, doctor, BF, STD, AF, NCLR. These figures we need to deduct. This is called as negative adjustments. After doing positive and after doing negative adjustments, the net profit will become book profit. Okay, fine. So compulsory you have to do additions, you have to do deductions if it is already incorporated in the problem. Okay, fine. Ready? Start. Step number one. For computation of book profit, first you have to take the net profit as per profit and loss account prepared as per part 2 of schedule 3. I repeat, part 2 of schedule 3. Student, immediately we should get the doubt, sir, as for income tax act or as for companies act? Sorry sir, not as for income tax act. You have to take the figure as for companies act. Okay, the two as for companies act, the two which is prepared as for part 2 of schedule number 3. That net profit only you have to take it. But some companies are there. Number one, banking, electricity, insurance. For these companies, for your information, provisions are not applicable, correct? Now, part 2 of schedule 3 not applicable. Then separate acts are there. Number one, banking, electricity, insurance. Kada? As per any other law for the time being in force also we'll need to consider. So moral of the story, for calculation of book profit, you have to take the net profit as per Companies Act or as per any other act, but don't take the figure as per Income Tax Act. After that, we have to make some positive adjustments. Sing a song. IRPSEDDRAFNCZR. Negative adjustments. We, doctor, boyfriend, STD, AFNCLR. After that, you will get book profit under section 115 JB. Now, one by one, we need to check it. Start. Tell me what you have to take first. Net profit as per profit and loss account, or as per profit and loss account prepared as per any other law for the timing in force. After that, positive adjustment. Number one, I means income tax. Income tax paid or payable. I repeat, paid or payable. If it is debited to P and L, please add back. We need to add back. Student should get the doubt. Why, sir? Already you know, income tax is not allowable expenditure. Income tax is not an allowable expenditure. Our friend doubt, sir, if it is not allowable expenditure, how you have taken as a P and L debit? Nana, in Companies Act, there is no restriction like this. In Companies Act, if expenditure, we need to debit. If it is receipt, we need to credit. Correct now? I am taking net profit as per Companies Act. No. That net profit I have to take it. After that, if any income tax item is there, we need to disallow. Disallow means add back. Correct now? Yes. Okay. Certain taxes must be added back. What are that? For that, I will tell you the word. These are only must be added back. My suggestion, remember only these points. Other than this, no need to add back. Okay? There are so many taxes, Nana. That is the reason. So try to get the expertise. Only learn only these points should be added back. Recap your CMA inter days. Number one, while calculating normal tax liability, we will calculate total income. After that, we will calculate basic tax. Kada? Oh, basic tax add back. After basic tax, generally we will add such as kada add back. After that, health and education says add back. After that, last we will add interest on income tax. Correct? That added back. And extra one more point. Once upon a time, this tax was there. That is nothing but dividend distribution tax, or else corporate dividend tax. If it is also debited to P&L, add back. That's all. Only these taxes must be added back. Come again. I for income tax. Tell me, income tax such as health and education says interest on income tax, dividend distribution tax. If these 5 items, any one of the item debited to P&L, please add back. Others, no need to add back. Okay, fine. What is that? One by one. Excise. Excise is not there in the 5 items. Answer? No. Interest on excise duty? No. Penalty on excise duty? No. Penalty on income tax? No. No. Student doubt, sir, you told me income tax covered. Yes, income tax covered. Interest on income tax is covered. But penalty on income tax is not covered. Therefore, if penalty on income tax is given, come on, don't add back. No need to add back. So instead of that, please remember simply 5 items. If these 5 items debited to P&L, we have to add back. Student notes are shall I need to remember like this? Yes, because in the act itself they mention like that. What? Only those adjustments given in explanation 1 of section 115 JB must be considered. All other adjustments should not be considered. Okay, they only given in the act, therefore we need to follow the same. Student, another doubt. Why, sir? Why they did it like this? Answer, here the government of India want to collect some minimum tax. For this purpose, they introduce one proforma, one format. The format is nothing but computation of book profit under section 115 JB. They only said add this, don't add that, deduct this, don't deduct this. Like this, they given one proforma that is given in explanation 1 of section 115 JB. Other than that, we will never ever consider other points. Understood? Yes. Chalo. What should be added back? I told you. Obviously, others not to be added back. Number one, indirect tax. No. Income tax penalty. No. Interest on IDT. No. Penalty on IDT. No. Wealth tax. No. Security transaction tax. Next one. Commodity transaction tax. Banking cash transaction tax. All these taxes should be added back, not to be added back. Not to be added back. Instead of that, remember only 5. Very important chapter. Very important. Compulsory question out of this. Minimum 18 marks. 1/8. Okay. Start. 5 items. If it is debited, we need to add what? Income tax, such as wealth and education cess, interest on income tax, dividend distribution tax or corporate dividend tax, if anything debited to P&L. Okay. These 5 we need to add it back only while calculating book profit, not as for normal income tax. Understood? Yes. First word is over. Sing a song. I. Income tax paid or payable. Here so many past exam questions were placed. I wanted to ask you. Advanced tax, shall I need to add back or not? Answer yes. Advanced tax is also income tax. Student, another doubt. Sir, you said only income tax kada. Raja, yes. I said only income tax. Income tax includes advanced tax also. Kada, you. Provision for income tax. Add back or not? Yes. The reason, income tax paid or payable. Payable means provisions. Next one, you. Foreign income tax. Foreign company P&L consisting of foreign income tax. Add or less? Add or don't add? Come on, come on. Answer add. The reason, provisions of MAT applicable for foreign companies also. Therefore, whatever the income tax debited to P&L, whether Indian income tax or foreign income tax, we need to add back. Exam questions. Okay. Chalo. Next. R. Amount transferred to reserve. Some people will transfer the amount to reserve. That is not at all allowed. Okay. Add back. I repeat, add back. Whatever the reserve it is immaterial. If you transferred any amount to reserve unnecessarily, that amount must be added back. But examiner, to confuse you, they will give the word. This reserve is created as per special provisions of the act. Still, it is not at all allowed. So, add back. Sing a song. I for income tax paid or payable. R for amount transferred to reserve. P. P for provision for unascertained liability. Unascertained. What is the unascertained? Listen. There are certain provisions every company will provide. Best example, leave encashment provision. Provision for gratuity. Provision for leave salary like this. Now these provisions will be provided. Generally, companies will follow 2 strategies. Number one, they will approach one valuer. The valuer will give the figure, that is called as scientific approach. Kada? The scientific approach is called as ascertained liability. I repeat, ascertained liability. But some are unascertained. How? I will write some chitties and before Sai Baba, I will throw that and I will pick one number. That figure only I will write. Or else I will ask one fellow, we will have parrot, no? So I will ask. After that, I will do meditation. Whatever the number I found it, I will write. This is called as unascertained. Unascertained. So lawmaker is very clear. Unascertained liability is not allowed. I repeat, unascertained. So in exam hall, you have to see the word UN. If your cinema Haddasa is going on, you are unable to read UN. You will read as ascertained. Then what happened? Answer will change. Book profit will change. MAT will change. Attempt will change. Your marriage date will change. Your children date of birth also will change. But expiry date won't change. Because of this silly mistake, we are wasting the time of 6 months. So please read carefully. Ascertained or unascertained? Ascertained. What is the answer? Allowed. Don't add back. Unascertained. Not allowed. Please add back. P for provision for unascertained. What is unascertained? Which is not made on scientific basis, which is made on ad hoc basis. Ad hoc, that must be disallowed. So add back. See the word provision for leave salary made on ad hoc basis. So add back. Provision for gratuity made on non-scientific basis. Add back. Provision for warranty, not scientific. Add back. If examiner mentioned if it is scientific, that is called as ascertained. Follow the logic beyond this. If I give the chance like that, everybody will write numbers, high numbers they will write. Kada? That is the reason lawmaker don't want to allow unascertained. He want to allow only scientific figures. Okay, that is I, R, P. I for income tax paid or payable. R for amount transferred to reserve. P for provision for unascertained liability. I, R, P, S. S for losses of subsidiary company. We invested some amount in a company. Okay, that is our subsidiary. We invested for the purpose of dividend, but we got capital loss also. Okay, that is called as losses of subsidiary company. Allowed or not allowed? Not allowed. Ever losses itself not allowed. How subsidiary losses are allowed? So add back. So I, R, P, S, E, D. E. Next is E. What is E? Expenditure related to exempted income. Expenditure related to exempted income not allowed. Example, agriculture income is exempted, correct na? So taxable or not taxable? Not taxable. Common sense, when agriculture income is not taxable, agriculture income related expenditure also not allowed. Not allowed. Correct? But some companies, what they will do, they will write P&L debit expenditure, they will write P&L credit. So now debits time. I'm telling you, expenditure related to exempted income not at all allowed. Add back. Correct? Except 10AA. Except 10AA. Next. I, R, P, S, E. What is I? Income tax paid or payable. R. Amount transferred to reserve. P. Provision for unascertained liability. Next one. E. Expenditure related to exempted income under section 10, 11, 12 except 10AA. Next one. D. D for depreciation. D for depreciation. Total depreciation must be added back. So again we need to deduct, that is different story. DIP must be added back. So I, R, P, S, E, D. D for depreciation. Next one, D for deferred tax. As for AS 22, sometimes we will create deferred tax asset or deferred tax liability, that we have to take it. Deferred tax. I, R, P, S, E, D, D. Next one, D. D for provision for diminishing in value of asset. I repeat, provision for diminishing in value of asset. What is that? Sometimes asset value we will decrease, we will reduce because of some events. Kada? That is called as provision for diminishing in value of investments or diminishing in value of asset. You may heard this topic in your AS 28 or AS 13. Correct? AS 13 investments, AS 28 impairment of assets. Babu, that kind of impairment is not allowed. Please add back. Add back. Diminishing in value of asset, which is reducing the asset value, we won't allow as for income tax act. Please don't keep it there. Add back. Best example I will tell you. Debtors. Debtor is an asset or not? Yes. For the debtor, we will have bad debts. Because of bad debt, debtors value will come down, kada? So not allowed. Add back. Understood? So this is the topic. Come on. I for income tax. R for IR, amount transferred to reserve. IP for provision for unascertained. S for subsidiary company losses. E for expenditure related to exempted income except 10AA. D for depreciation. D for deferred tax. D for diminishing in value of asset. Next one. D for dividend paid or payable. Nana, dividend paid or payable is a below the line item, correct? That is a P&L appropriation amount. Now, if it is the case, not at all allowed, please add back. Dividend received is taxable, correct? But dividend paid is not at all allowed. Okay. Next number, R means amount standing in the revaluation reserve account on account of revalued asset, but which is not credited to profit and loss account. Now listen, I would like to take one example, then you will understood better. My building actual cost is 100 crore. My building cost. I sold it for 1000 crore. Tell me the entry. Bank account at our 1000 to building 100 to profit and loss account 900. This is common entry. Even foundation students also know. But what happened? Now my P&L amount is 900. That means I need to pay tax on 900 crores. No, I don't want to pay. That is the reason I got one cunning idea. That is nothing but I wanted to do revaluation. So increase the billing value. So billing account that are 800 crores to revaluation reserve account 800 crores. I increased my billing value, correct? After that, I sold it now. Come on, sale. Bank account that are 1000 to billing account, not 100. Billing account is now 100 plus 800. How much? 900 to profit and loss account 100. Yesing officer doubt. Last time I heard the figure is 900. Now the figure is 100. What about 800? Something happened. That something is nothing but parked in the revaluation reserve. That kind of figures also must be added back. See the word amount standing in the dash revaluation reserve related to what? Revalued asset which has been retired or disposed or sold, but same is created or not created? Not created to P&L account. Okay, fine. With this, we covered I, R, P, S, E, D, 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 R, another D, R. Oh, tell me, I for income tax paid or payable. Of amount transferred to reserve. P for provision for unascertained liability. S for losses of subsidiary company. E for expenditure related to exempted income other than 10 AA. D for depreciation. D for deferred tax. D for diminishing value of asset. D for dividend paid or payable. Now tell me, proposed dividend. Shall I need to add back? Proposed dividend means dividend payable. Yes, add back. Next number, R for amount standing in the revaluation reserve on account of revalued asset which is not credited to profit and loss account. Correct na? Yes. Next number, A, F, N, C, Z, R. What is A? Listen friends. Now here, A for AOP, BY. Come again. AOP, BY. I would like to tell you one word. Share income from partnership firm is exempted. I repeat, share income from partnership firm is exempted. Whereas share of profit from AOP, BOI is also not taxable in the hands of members. Really not taxable. That is the reason now so many people requested Government of India, sir, AOP income, please, we will reduce from computation of book profit, sir. I don't want to pay any MAT. Similarly, lawmaker has made some corresponding amendment. Expenditure related to AOP BY share of profit also should not be allowed. Therefore, it should be added back. See the word expenditure related to profit corresponding to income from AOP, income from AOP or BY, which is not chargeable to tax as per section 86, that also should be added back. So AOP figure related expenditure must be added back. So A for AOP. Next one, F. Next number is F. What is F? F for foreign companies. Nana, in case of foreign companies, they are liable to pay tax at lower rates generally. Example, interest. You know what? Foreign companies are liable to pay tax at the rate of 5% on their interest income generally. Royalty and fees for technical services. They are liable to pay tax at the rate of 20%. Okay, sometimes 10%. And next one, capital gains arising in case of transfer of securities. Generally, transfer of securities means maybe 15% or maybe 10%. Depends. That we will discuss later. Anyhow, if any income tax is payable at a rate lower than the MAT rate, sir, already they are taxable at lower rate, but MAT rate is how much? 15%. Again, you are asking whichever is higher means it is not fair. That is the reason lawmaker they are saying that the foreign company these kind of special categories income should be deducted and corresponding expenditure should be added back. Follow. In case of foreign companies, come on, expenditure related to capital gains arising in case of securities as well as interest, royalty, fees for technical services, on that income tax is payable at the rate lower than the MAT rate, that particular expenditure must be added back. With this we completed A, F. After that, next N, C, Z, R. What is N? N for notional loss. I repeat, notional loss. In case of business trust, sometimes what happen, business trust will transfer its units to SPV. In return, SPV will allocate shares to business trust. In this transfer, SPV may have carry forward of losses. That kind of notional losses, that is not a real loss, notional loss. The notional loss must be added back if debited to P&L. Last one, IRP completed, SCD completed, D also completed. After that, R completed, AF, N completed. Next one, CZ. Sometimes what happen, we will sell the business trust units, we will sell. Just 2 seconds back I told you business trust will allocate some units to SPV. In return, they will take the shares. Now SPV means Indian company, special purpose vehicle being Indian company. This whatever the units they received from business trust will sell in the market. If I get real capital gain, the real capital gain must be added back. Last number R. R means royalty income with respect to patents covered under section 115 BBF. Now 115 BBF means it is taxable at the rate of 10%, but MAT rate is 15%. So expenditure related to royalty income covered under section 115 BBF, that expenditure must be added back. With this, we completed all positive adjustments, IRP, SED, DDDR, AF, NCZR. Income tax paid or payable, amount transferred to reserve, provision for unascertained liability, subsidiary losses, expenditure related to exempted income under section 10, 11, 12 except 10AA, D for depreciation, D for deferred tax, D for diminishing in value of asset, D for dividend paid or payable, R for amount standing in the revaluation reserve, which is not created to profit and loss account. A for AOP BOI income, F for foreign company income related expenditure, provided the incomes are taxable at a rate lower than the MAT rate. Okay, fine. N for notional loss, CG for capital gain, R for royalty covered under section 115 BBF corresponding expenditure. Correct? Huh? Yes. Next number, negative adjustments, we, doctor, boyfriend, A, STD, AF, NCLR. Next one, what is W? W means amount withdrawn from reserves. I repeat, amount withdrawn from reserves. Which reserve? Any reserve. Any reserve. Now that amount should be deducted. W, amount withdrawn from reserves must be deducted because that reserves are not taxable. Next one, E, exempted income. I told you already, exempted incomes are not taxable. Exempted income expenditure not allowed. Therefore, that expenditure must be added back, that income must be deducted, except one figure. What is that? 10 AA. Means 10 AA figure we are not deducted means indirectly 10 AA figure is subject to MAT. Subject to MAT. Okay, chalo. Next number D for depreciation except dip on revaluation. Except depreciation on revaluation. Sir, this is only as for Companies Act you have to take it. You have to take total depreciation must be added back. Again, total depreciation must be deducted except dip on revaluation. Don't confuse. Very simple. Follow. My total depreciation 10 lakh. To dip 10 lakh. So what is the answer? Add how much? 10 lakh. Deduct how much? 10 lakh. 10 lakh must be added, 10 lakh must be deducted. What is the net effect? 0. One small change. My total dip is 10 lakh, but whereas my depreciation on revaluation 5 lakh, total is 15 lakh. What is the answer? You have to add 15 lakh, but you have to deduct total depreciation except dip on revaluation. How much you have to deduct? 10. What is the net figure? 5. What is the 5? Dip on revaluation. None of take it for granted. In Income Tax Act, revaluation is not allowed, and in Income Tax Act, dip on revaluation also not at all allowed. Therefore, this dip on revaluation indirectly we need to add back. Instead of that, lawmaker is given two separate words. Number one, total depreciation must be added, and total depreciation must be deducted except depreciation on revaluation. Next, another topic what is that? Deductor. R means what? Amount withdrawn from revaluation reserve. See the word amount withdrawn from revaluation reserve. But here we need to take least of the following. How much? Amount withdrawn from revaluation reserve or dip on revalued asset. Dip on revalued asset. Whichever is higher or lower? Lower must be deducted. Whichever is lower must be deducted. So with this, we're done with the topic deductor. That's all. Next one, BF. What is that? That is nothing but brought forward losses. I repeat, brought forward losses are unabsorbed depreciation as per Companies Act. As per Companies Act, whichever is lower. Now, in case of Companies Act also, we will have unabsorbed losses, business losses, unabsorbed depreciation. Out of these two figures, whichever is lower must be considered. But in one exam, he has given the figures like this. What? All of you, please follow. My unabsorbed depreciation and unabsorbed business loss are as follows. As for Companies Act, as for Income Tax Act, two acts information given. As for Companies Act, unabsorbed depreciation 10 lakh. As for Income Tax Act, unabsorbed business loss 3 lakh. Everybody in the class, how much figure we have to take? Someone told me 10 lakh. Very good. Any other figure? Wrong answer. Answer is, someone said 3 confidently. Okay, wrong answer. Answer is 0. The reason, you have to do the problem as per the pro forma. What is that? Brought forward loss, unabsorbed depreciation as per Companies Act, whichever is lower. Income Tax Act figure first don't consider, ignore. Why? Not required for computation of book profit. You have to check only Companies Act figures. Companies Act unabsorbed depreciation how much? 10 lakh. Unabsorbed business loss how much? Nothing is given means 0. 10 lakh or 0, whichever is lower means 0. But student will write 3 lakhs. Very confidently will write 3 lakh. Some hyperactive students will write 10 lakh. Some student will write 13 lakh also. Okay, fine. So moral of the story, you have to take whichever is lower. As per which act? Companies Act. But in two cases, answer is different. If the company applied for corporate insolvency resolution, I repeat, the company wanted to wind up. The company applied for insolvency compliances. In that case, you have to take total. You have to take total. What is that? Unabsorbed depreciation as well as brought forward loss. Total we have to consider as for Companies Act. Now listen. Same question, one small change. Our company is applied for insolvency bankruptcy code. Applied, yes. Then you have to take sum of, I repeat, total of what? Brought forward loss and unabsorbed dip. Suppose their insolvency petition is not pending, then don't deduct sum. You have to deduct whichever is lower. Okay, chalo. So if the company is going to wind up, the company is going to close, then you have to take the total. Otherwise, you have to take dash brought forward loss or unabsorbed depreciation, whichever is lower. Chalo. Next topic, friends. STD. We covered so far. We, doctor, boyfriend, SED. W for amount withdrawn from reserve. E for exempted income. Now D for dip, except dip on revaluation. R for amount withdrawn from revaluation reserve. BF, brought forward loss or unabsorbed depreciation, whichever is lower. S for profits of sick industry. I repeat, profits of sick industry, not taxable, deduct. T for profits of tonnage tax company. Profits of tonnage tax companies. Honestly speaking, tonnage tax companies are not liable to pay MAT. If the figure is there, if the profits are created to P&L account, eliminate, deduct, because not subject to MAT. Next one, D for deferred tax. Deferred tax, if it is created to P&L, you have to deduct. With this, done with the topic called as V, Doctor, BF, STD. Now, last series of this topic, AF, NCLR follow. A first. A for share income from AOP, BOI, which is not chargeable to tax as per section 86. The figure should be deducted. And the corresponding expenditure must be added back. Indirectly, answer is very simple. AOP, BOI share income should not be taxable as per MAT provision. Therefore, deduct. Expenditure must be add. Next one. Foreign company. Already I told you, foreign companies certain incomes are taxable at a rate lower than the MAT rate. Listen, our government employees or our Modi went to abroad. You only invited so many foreigners, please come and invest in our country. Obviously, they will ask tax rate. What is the tax rate? Then Modi promised that 5%. Immediately, they came to India and invested. They got the super profits. What is the rate? 5. Immediately, a single officer came and said, wait, sir, 5% or MAT rate 15%, whichever is higher. And tell me how the foreigner will feel. That is the reason lawmaker said, chalo, that incomes are not liable to MAT. Therefore, foreign company, those incomes which are taxable at a rate lower than the MAT rate, that figures not liable to tax. So deduct. And corresponding expenditure, add. A, F, N. N means notional gain on exchange of shares of SPV for the units of business trust. The notional gain must be deducted. Next one, another topic, actual loss. Sometimes we will sell the units in outside market. If you get actual loss, the loss also must be deducted. Last topic, royalty income in respect of patents covered under section 115 BBF. Now already I told you, as for 115 BBF, the royalty income taxable at what rate? 10%. I will take one simple example, you will understood better. At the time of COVID time, pandemic time, I asked one scientist, please try to invent a certain vaccine. I will give benefit. What is the benefit? The income from that royalty is taxable at the rate of 10% as per section 115 BBF. So he did hard work, he invented the vaccine, finally he got super profits. What is the tax rate I promised? 10%. But Singapore is saying 10% or 15, whichever is higher. It's not good, kada. That is the reason they said royalty income which is covered on patents under section 115 BBF should be deducted. Corresponding expenditure must be added back. Enough, Nana. With this, we completed the topic called as computation of book profit. But one small request, at the time of computation of total income, you have to apply your logics. Okay, whereas while computing book profit, you have to apply not your brain, you have to apply your magics. Magics means formula kind of thing you have to apply. You have to sing a song. I R P S E D D D D R A F N C Z R. We have to deduct some figures. We, doctor, boyfriend, S T D A F N C L R. After doing the same to net profit as per Companies Act or as per any other law timing in force, after adding and debiting the same, you will get book profit under section 115 JB. But examiner, to confuse you, he will give different figures, but don't consider. The reason is only this one. While computing book profit under 115 JB, only, I repeat, only those adjustments which are specified in explanation 1 of section 115 JB shall be considered. All other things should not be considered. Okay, please stick on to the pro forma. That is the reason beginning of this chapter itself I asked you to learn the particular things. Okay, chalo. With this, complete the topic called as computation of book profit. Now, see the second part of MAT computation. These are case laws related to MAT topic. Assessment of company topic is concerned. These are important. Number one, MAT credit. Please remember, if you are a corporate SSCs, compulsory we have to take two computations. Number one, regular tax. Number two, MAT. Out of these two, whichever is higher, we have to check. If you pay tax as per MAT, then you are eligible for MAT credit. What is the MAT credit formula? MAT credit is equal MAT minus normal tax. But one amendment I already told you, we have to consider after adjustment of FTC. So what is the final answer? MAT credit is equal MAT after adjusting foreign tax credit minus normal tax after adjusting foreign tax credit. How long it will be carried forward? 15 years. Government will pay any interest on that? No. When we can adjust in the year in which normal tax liability is higher than the MAT. Next one, how much we can adjust? Whichever is higher or lower? Lower of the following. Small a, outstanding MAT credit. Small b, difference between normal tax and MAT. Next question. Sir, what are the provisions of advance tax? Whether advance tax provisions are applicable or not? Yes. Advance tax provisions are applicable even though you are liable to pay tax as per MAT. And interest under section 234B and interest under section 234C are also applicable even though you are liable to pay the tax as per MAT. Okay, na? Yes. Next one, all of you, set off and carry forward provisions are also applicable in general. Normal way it is applicable. See the word, the companies to which MAT is applicable, they are also liable to pay tax, advance tax, and they are also liable to pay tax interest under section 234B and C. Set off and carry forward of losses applicable in general. Okay. Next one, MAT provisions applicable to certain persons and not applicable to certain persons. Now, applicability of MAT. Important topic. MAT is applicable to certain people. Now see the word. MAT applicable to corporate assets. Correct? Huh? MAT applicable to banking, insurance, electricity companies also applicable. Correct? Huh? Yes. And MAT applicable to units located in IFS. But the rate is different. Not 15%, it is 9%. And foreign company who has PE also applicable. Come again. Foreign company who has PE. For them also it is applicable. Okay. But it is not applicable to certain people. Whom? Number one, non-corporate assets. Come again. Non-corporate assets. Non-corporate assets MAT not applicable. What is the reason? AMT is applicable. Section 8 companies. Once upon a time called as section 25 companies as for old Companies Act. But as for new Companies Act, that is nothing but section 8 companies. What is that? non-profit entities who will not declare the dividend. These companies are not liable to pay tax as per MAT. Next one, tonnage tax companies. Already I told you, tonnage tax companies are liable to pay MAT or not liable? Not liable. That is the reason while doing computation of book profit, we need to add back the profits of tonnage tax companies, correct? Add back a deduct because it is not subject to MAT. So the profits must be eliminated while computing book profit. Next one, life insurance company not applicable. I repeat, life insurance not applicable. Student doubt, sir, you only told me that insurance company is covered. Yes, which insurance is covered? General. General means marine insurance, fire insurance. These are covered, but life insurance is not at all covered. Next, another beautiful point. Foreign company which are having income under section 44B, 44BB, 44BBA, 44BBB. These companies are also not liable to pay MAT. Student out, what is B? B for boat. B for boat. Non-resident carrying shipping business. I repeat, non-resident carrying shipping business. Not required to follow MAT. Next one, BBA, A for aeroplane. A for aeroplane. Non-resident is operating aeroplanes. They are also not liable to pay MAT. Next one, 44BB. BB for extraction of mineral oil. Come again. Extraction of mineral oil. Non-resident who is digging the soil and exploring the mineral oils are also not liable to pay MAT. Last one, BBB. Brick by brick. Okay, construction. Non-resident who are engaged in civil construction are also not liable to pay MAT. And tell me, foreign companies who are following presumptive taxation as per section 44B, BB, BBA, BBB not covered. B, shipping. BB, mineral oil. BBA, aeroplane. BBB, civil construction. These people are not liable. Next one, those companies who are following 115 BAB, 115 BA, that is alternative tax provisions. Already I told you 115 BAB. What is the tax rate? 15%. Already I have given that kind of benefit. Then again, MAT provisions are not at all applicable. Last one, most important one. Foreign company does not have PE. I repeat, foreign company does not have PE. Remember, no PED. No PED. No PED means foreign company does not have PE and does not have DTAA. In that country, India does not have DTAA. Example, Somalia versus India, they don't have any DTA agreement. So one company called as X Limited located in Somalia. X Limited does not have any PE in India. Number two, India and Somalia does not have any DTAA. Sir, in that case, X Limited is liable to pay MAT or not? Answer, no. Best example, Trump. You know Trump? The Trump has some companies in America. Tell me, Trump liable to pay MAT? No, because he does not have permanent establishment in India. That's all. That's what I want to say. No PA, no DTA. Same way, no MAT also. Correct? Huh? Next one, no DAR. What is that? No DTAA, no registration is required. Suppose you are a person who are residing in a country where that country and our country does not have DTAA, and the two, you are not required to get any registration in India. So in that case also, it is not relevant, not applicable. So this is the topic called as applicability of MAT. Here some special case laws are there. One by one we will discuss. All are placed in the examination. Start. First question. One day, one company called as Malayala Manorama, or else other name Apollo Tires. These companies, what they did, they calculated their net profit. After that, they took the net profit. After that, they made some positive and negative adjustment. Positive adjustments are as follows: I, R, P, S, E, D, 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 R, A, F, N, C, Z, R. Negative adjustments also they did it. What? V, Doctor, BF, STD, AF, NCLR. After that, they got the figure called as book profit. Now, assessing officer want to verify this. Can he verify? He want to change the figures. Can he change? Yes. Similarly, assessing officer wanted to change the figures given in net profit, which is taken from profit and loss account, which is prepared as for part 2 of schedule number 3. My question, whether assessing officer can change the figures, can alter the figures which are given in audited financial statement, yes or no? Can he change or not? No, here answer yes or no, tell me. Some people doubt, sir, assessing officer only can change adjustments given in explanation 1 of 115 JB of income tax. That is one view. Second, people say, some people will say, no sir, he has some more powers. He can verify profit and loss account which is prepared as for part 2 of schedule 3, and that figures also he can alter. He can do or not? He can't do. He can't do. The reason, it is already prepared as for part 2 of schedule 3. That too, it is already audited by chartered accountant who are in practice. See the word, where profit and loss account is prepared as per Companies Act, assessing officer could not recompute the profit which is given in the schedule part 2 of schedule number 3. But two cases he can change. When number 1, profit and loss account is not prepared as for part 2 of schedule 3, or else every company has to maintain 2 set of books. One is for AGM, one is for MAT. While preparing the 2 set of books, you have to follow, come on, same accounting policies, same accounting standard, same accounting methods you have to follow. If you have not followed, automatically, what is the answer? Assessing officer can change the figures. Yes or no? Yes. These are the two cases. Okay. Next one. Every company to whom MAT provisions are applicable, they have to obtain one report in form number 29B. Form number 29B. Next one. Companies who are liable to pay MAT are required to pay advance tax or not? Yes. If they have not paid, automatically they have to pay interest under section 234B and C. Next, last question, last case law, examiner's favorite question. Tell me this one. One company P&L account is as follows. P&L account. Here, business income. Here, long-term capital gain on sale of building. I repeat, long-term capital gain on sale of building. Let us say business income 100 crores. Long-term capital gain, let us say 80 crore. And other income, let us say 20 crore. Next one, interest on bank deposits. Let us say 50 crore. Total 250. Here also expenditure, some figure is there, that is 200. Net profit is 50. I want to solve this problem. What is the first one? Net profit. How much? 50. Do some adjustments. Positives as well as negative. Tell me. Business income. Correct? Yes. Number 2. Long-term capital gain on sale of building. Shall I keep it there or shall I need to deduct? But here note also given that long-term capital gain is eligible for exemption under section 54 EC. That also given. Anybody in the class, what is the answer? These figures shall I need to keep there or I need to deduct? Answer. Very simple answer. If it is the question related to MAT, just close your eyes and sing a song. IRP, SEDDD, RAF, NCCR, V Doctor, BF, STD, AF, NCLR. Anywhere there is a word called as capital gain. Come on, no. Then don't do anything. Start. Continue the problem. Normal way, continue the problem. I'm talking about book profit computation. Kada? Student out, sir, then concept is wrong kada. What wrong? How you can create capital gain amount to profit and loss account profit? Nothing doing, sir. Don't do any adjustments. Student another doubt, sir, then it is exempted under 54 EC kada. So what? Is it covered under any computation method under 115 JB explanation 1? No, don't take it. Next, other income, leave it. Interest on deposit. Honestly speaking, interest on deposit covered under which head? IFOS. But why you have parked here? Shall I need to eliminate? Same answer. Sing a song. IRP like this. Anywhere this kind of interest is covered? No, don't touch. Okay. Long-term capital gain, which is already included in the net profit, cannot be deducted because it is not excluded from the computation as per explanation 1 of section 115 JB. NJ Jose and Co. Private Limited, that is Kerala High Court judgment, famous case law. Okay. With this, we done with the topic called as assessment of companies topic. Number one, companies are two types. First one is called as what? Domestic company. Second one is foreign company. Another computation also there, that is called as closely held company. Come again, closely held company. Second one is widely held company, are also called as another word. What is that? Company in which public has substantial interest. Ready, start. Which is closely held, which is not a widely held, which is not a widely held company, then that is called as closely held. What is widely held company? Number one, section number 8 companies. Number 2, listed companies. All listed companies are what? Widely held. Next one, company in which central government or RBI has minimum 40% of voting power. Minimum how much? 40%. Next number, another company like a company that is in which another widely held company has interest. Okay, these kind of companies are called as widely held. Other than that, that is called as closely held. And tell me, public company is widely held or closely held? Answer, no, that is closely held. Public company which is listed, widely held. Public company which is not listed, that is closely held. Next one, if examiner asked you to compute tax liability of a company, then how many steps? 5. Non-corporate is also 5 steps. What are the step number 1 for companies? What is the step number 1 for non-corporates? Step number 1, total income. Here also total income. Step number 2, normal tax. Here also normal tax. 3, book profit. This is the topic. Here, adjusted total income. Here, step number 4, what? MAT. What is the MAT rate? At the rate of 15%. Here, what is the rate? At the rate of 18.5%. Step 5, tax liability is equal normal tax or MAT, whichever is higher. Here, normal tax or AMT, whichever is higher. Correct? But while computing AMT, only 3 things simply must be added back. 10AA, 80H2 TT except ATP, 35 AD. But you have to deduct depreciation related to 35 AD. But there we need to add many things. What? I, R, P, S, E, D, 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 R, A, F, N, C, Z, R. We need to deduct certain things. What? We, doctor, boyfriend, STD, AF, NCLR. What is the form required from chartered accountant? 29B, here 29C. Advanced tax applicable or not? Yes, both the cases says. Interest under section 234B and C applicable or not? Yes, applicable. Kada? Yes. Next one. Foreign LLPs are liable to pay AMT? Yes. Foreign companies are liable to pay MAT? Yes, provided they must have PE. They must have PE. If PE is there, then automatically yes. But some foreign companies are not liable to pay MAT. Who? Those companies who are following 44. B, BB, BBA, BBBB. B for non-carbureted shipping. BB, non-carbureted exploration of oil. BBA, aircraft. BBBB, civil construction. Correct, huh? With this, done with the topic called as taxation of companies. Friends, next important topic for CMA final, that is nothing but bar. Bar means board for advanced ruling. A plus category chapter. Fortunately, theoretical chapter. Very important chapter for exam point of view is concerned. That is called as bar. Board for advanced ruling. Very simple topic. Please follow. Number one. Once upon a time, there was a concept called as AAR, Authority of Advanced Ruling. But later on, they introduced the concept called as BAR, BAR bar. So, BAR replaced the topic called as AAR. What is that? Very simple, follow. Some people nowadays wanted to start operations in India. The best example, Kia. Kia company wanted to start their manufacturing unit. They want to start in Anantapur. For that purpose, they wanted to know tax provisions. What are the tax provisions applicable for them? They want to know. So they cannot approach chartered accountant or cost accountant. They cannot approach CM or PM. Then whom they can approach? For that purpose, government introduced one concept called as advanced ruling. Come again, what? Advanced ruling. That means before commencement of your activity, you can approach one authority. That authority is called as authority for advanced ruling. But later on, they changed the same to dash board for advanced ruling. That is called as bar. Come again, what? Bar. Sir, board for advanced ruling will take care of any transaction which has undertaken already or else to be undertaken, proposed to be undertaken in future related to the transactions. They will give clarifications. I repeat, they will give clarification. Do you know what is the advantage? If you approach bar, they will give clear-cut answers. Based on that, you can take a decision whether can I start my operations in India or wind up. That you can decide. The best example I will tell you, Walmart. You know, in America, even today, 3 crore people will approach Walmart each and every day. That Walmart got very tough competition from one fellow called as Amazon, because Walmart is a direct market business, whereas Amazon is a online. So that is the reason Walmart competitor is Amazon. Then Walmart wanted to start operations in India. For that purpose, they want to know tax provisions. If I ask one chartered accountant, he will say one answer. If I ask one cost accountant, he will say another answer. If I say CM, he will say one answer. If he say PM, he will say another answer. Better, I can approach one legal authority. The legal authority is nothing but bar. So, bar will give the ruling in relation to past tense. Any transaction already undertaken or future tense proposed to be undertaking in India. Tell me, who will approach? Non-resident. Non-resident can approach bar related to any transaction which has undertaken or proposed to be undertaking in India. Now what happened? Nowadays, government of India wanted to change the board constitution. For that purpose, they confined only to 2 members. Only 2 members will be there in bar. That too, the range of the fellow is CC, Chief Commissioner. Higher authorities are nothing but 2 Chief Commissioners will be there. Next number. There are 2 advanced ruling right now. One is located in Delhi, another located in Mumbai. Next one, who can approach? Answer already I told you. Who can approach? Non-resident. But nowadays, they're given the chance to whom? Residents also. Not only for resident, they're given the chance to PSCs, public sector companies. Public sector undertaking also can approach. See the word application made to bar. Bar will pronounce the ruling in relation to transaction which has been already undertaken or is proposed to be undertaken. In that case, they can approach bar. How many members are there in bar? 2. What is the position? Chief Commissioner. Next one, Constitution of the bar. Already I told you, central government will appoint the members, that too not below the rank of CC, Chief Commissioners. Next one, who can approach? Answer, only 3 members. Number 1, non-resident can approach. Non-resident can approach bar. For what? Already undertaken or proposed to be undertaken. Suppose Nokia, Nokia, they already started their unit in Parambadur, Chennai, or else Samsung TV manufacturing unit, already they started the same in Chennai. So they also approach bar for any transaction already undertaken, or they can approach any transaction which are proposed to be undertaken. Best example, Walmart. Walmart not yet started their operations in India. They wanted to start in future. For that purpose, they can approach or not? Yes. Next one, amendment. Resident also can approach. Come again, who? Resident. But resident can approach with respect to any transaction which are undertaken or proposed to be undertaken on behalf of non-resident. On behalf of non-resident, we can approach. Or else, resident for his own transaction also he can approach for his own transaction. And tell me, resident can approach or not? Yes. For what transaction? Any transaction undertaken on behalf of non-resident. Or resident can approach for any transaction undertaken by himself, own. Next one more fellow can approach. Who? PSU. Public sector undertaking also can approach or not? Yes. So far we covered 3 members. 1, 2, 3. And 4th one, amendment. What? Resident as well as non-resident, they can approach related to GAR matters. Related to GAR. Sir, whether GAR provisions are applicable for me or not. I repeat, GAR provisions are applicable for me or not, they can approach. So these are the 4 applicants. Come on, who are the applicant? Number 1, non-resident. For any transaction undertaken or proposed to be undertaken by himself. Second one, resident. Any transaction undertaken or proposed to be undertaken on behalf of non-resident. Second B point, resident for any transaction undertaken or proposed to be undertaken by himself. Last but one, PSU, public sector undertaking, NTPC, BHEL, these people also can approach. Last one, non-resident or resident for any transaction which are covered under GER, they also can approach. So these are the 4. See the word. 1, non-resident. 2, resident on behalf of non-resident. 3, resident for his own transaction. Next one, PSU. Next one, another point. What is the point? GER. GER matters also they can approach or not? Yes. What is the GER? General Anti-Avoidance Rules. Next number, once application is made before bar, automatically income tax authority or tribunal will not make any judgment or any assessment of particular case. If you go to bar, other jurisdictions will come to an end. Kada? Because which will prevail? Bar will prevail. The decision given by bar will prevail. Next, applicants. Who are applicants? I already told you. Number 1, non-resident. Number 2, resident for his transaction or resident on behalf of non-resident. Number 3, PSU. Number 4, GER matters. Now, exam question. Resident can make an application before bar or not? Long ago answer is no, but nowadays answer is yes. Yes, resident can make an application on behalf of non-resident. Or another point, resident can make an application for his personal transaction provided the transaction value must exceed 100 crores. This 100 crore is limit applicable only with respect to application made by resident for his own transaction. Correct? Yes. Another question. Recent question. Non-resident want to make an application with respect to any transaction undertaken on behalf of resident. I repeat, when non-resident want to make an application with respect to any transaction undertaken on behalf of resident, answer no. But reverse is possible. Resident can make an application, any transaction carried on behalf of non-resident. Yes. Next one. Resident can make an application for his own, provided the transaction value must exceed 100 crore. What are the forms? Forms are as follows. Non-resident 34C. Resident on behalf of non-resident 34D. Resident for his own transaction 34DA. Non-resident PSU. Sorry, notified resident PSU 34E. What is the fees? Fees already, 10,000 are specified fees, whichever is higher. If the transaction value up to 100 crore, then the amount is 2 lakh. If the transaction value exceeds 100 crore up to 300 crore, that is 5 lakh. If exceeds 300 crore, then the amount is how much? 10 lakhs. Next one. How many copies? 4 copies. Sir, I made an application with bar, but I don't want to continue. Can you withdraw? Yes. Within how many days we can withdraw? 30 days. Signature. Now, the application must be signed by those people who are covered under section 140. What is section 140? Signing and verification authorities. Okay. So, it must be signed. Next one, friends. Another topic. Procedure. What is the procedure? Very simple. Please follow. Number one. Everybody follow. If step number one, applicant SSC made an application with bar, then bar will send the copy to CIT, Commissioner of Income Tax, whether I can take up the case or not. After that, Commissioner of Income Tax will give the opinion. Based on that, bar may continue or may discontinue the case. If they decided to continue, they will dispose the case within 6 months. How many months? 6 months. That's all. After that, the copy will be forwarded to Commissioner and the copy will be forwarded to the SSC. Next one. Amendment. Most important question for exam. SSC is not satisfied about this order, whether he can go to court of law or not. Yes. SSC can go to High Court. Come again, which court? High Court. He cannot go to ITAT. He cannot go to CIT. He cannot go to Supreme Court directly. He can go only to High Court. See the word procedure. Number one, bar shall forward the application to CIT or PCIT to ascertain whether the case is pending or not. After that, now, after examining the records and documents, then bar may allow or may reject the application. Once they allow the application, they will pass the judgment within the period of how many months? 6 months. But one thing for sure, in the following cases, automatically bar will reject the case. Number one, if the application is regarding to know the fair market value. Sir, they want to know market value. That is the reason they made application before bar. Your application accepted or rejected? Rejected. Next. Already the question is pending in the court. Already pending in the court. Then the application will be accepted or rejected? Rejected. Next one. The application is pending before ITAT, Income Tax Appellate Tribunal, or IT authorities like Commissioner, Assessing Officer, like this. Answer, application will be rejected. But only in one case it is accepted. Which case? Notified residents. Notified resident means you know what? PSU. Even though PSU's cases are pending before IT tribunal or else IT authorities, it can be admitted. Last one. The question prima facie is nothing but to avoid payment of tax. They wanted to avoid the tax. For that they made an application. Application accepted or rejected? Rejected. Rejected. But only in one case it is accepted. Whose case? SU. Next one, sir, once you made the application to bar and you got the order by fraud or by misrepresentation of facts, in this case, valid or void? Void ab initio. Next one, what is the time limit for passing the ruling, sir? 6 months from the date of receipt of application. One copy will be forwarded to applicant, another copy will be forwarded to the commissioner. And last one, climax ma, once you made an application before bar, automatically other jurisdictions will come to an end. Correct? Yes. Next one, we have not satisfied about the judgment given by ruling given by bar. In that case, can I go to court of law or not? Yes. Which court we can approach? High Court, not ITAT, not CIT appeals, not Supreme Court. We can approach only High Court. Very important question. Friends, our next important topic is non-resident taxation. Out of that, the first part is NRI, non-resident Indian. Very simple topic, very important topic for exam point of view is concerned. Please follow section number 115A. I repeat, section number 115A to section number 115I. These are applicable for non-residents. Out of that, section number 115C to section number 115I are applicable only for NRIs. I repeat, NRI means non-resident Indian. Now student will have the doubt, sir, what is the difference between non-resident and non-resident Indian? Nana, if it is the non-resident, out of this, one single part is nothing but NRI. NRI means non-resident Indian. Okay, chalo. Now today's first topic is NRI. NRI means non-resident Indian. Now section number 115C to 115I are only applicable for NRIs. Now it is not applicable for non-resident, only applicable for NRIs. That too, it is not mandatory, it is optional. I repeat, it is optional. Now student doubt, sir, what are the specialty of 115C2I? Point number one, NRI means individual, is a individual, the two who is a non-resident, the two Indian citizen or Indian origin, is a Indian citizen or Indian origin. I will tell you one example. Mr. Rachin Ravindra, now he is the Indian origin but settled in New Zealand, correct na? Yes, that fellow is a individual but is a non-resident nowadays, but is a Indian origin. I repeat, Indian origin. Now in that case, the fellow is called as NRI. Next one, once upon a time, Akshay Kumar, that is Bollywood hero, he unable to get the success in Indian movies in those days. That is the reason he wanted to migrate to Canada. For that purpose, he got the citizenship. If you got the citizenship, that is different story. Suppose you are a individual, that too you are a non-resident, that too you are a Indian citizen or Indian origin. In that case, you are called as NRI. I will take one best example. Your own brother or sisters who got the job in abroad, who is doing job in abroad, they are automatically one fine day they will become NRI. The reason they are individuals, the two they are non-resident because more than particular time period they are staying in abroad only. That too they are Indian citizens or maybe Indian origins. Indian citizen means, you know, who born and brought up in India or else who got the Indian citizenship, that is different story. But Indian origin means we need to check 3 generations. You or your parents or your grandparents must born in undivided India. See the word, he or parents or grandparents must born in undivided India. When do you find undivided India? Before 1947. That is called as Akhanda Bharatam. That means that consisting of India, Afghanistan as well as Pakistan as well as Bangladesh. Some people add China, America, Europe, everything. Sir, anyhow, here the thing is, before 1947, if you or your parents or your grandparents born in India, then automatically you are called as Indian origin. Next one. Now, what are the provisions of this NRI topic we are going to cover right now? Point number one. Nana, you must invest in one special asset. The special asset is called as foreign exchange asset. Come again, what? Foreign exchange asset. You know what? You have to purchase that asset with foreign currency. You have to purchase the asset with convertible foreign exchange. See the word specified asset which is purchased with what? Convertible foreign exchange. Then you are eligible for some benefits. What is that? Number one, you have to purchase only these assets. Number one, purchase shares in Indian company. Come again, purchase shares in Indian company. Which company? Private or public or anyone? Anyone. Or else you can purchase debentures or make deposit with Indian public company, or else central government securities, or else such other assets as central government may notify. Nana, any one of these assets you have to purchase with a convertible foreign currency. Then that is called as foreign exchange asset. Come again, foreign exchange asset. One by one, tell me what is that? Shares of Indian company, debentures of Indian public company, or any GSEC, central government securities. Honestly speaking, if you give the chance to NRIs, the NRIs will invest in real estate in India, correct? Or else they will invest in gold in India. So government is not interested in that. Hey NRIs, if you want, come to our country and invest in foreign currency. That too, invest in corporate sector by way of shares or by way of debentures or by way of government securities. So that what happen? No, foreign currency is pumping into Indian economic market. Automatically what happen? Our Indian government or Indian public or Indian entrepreneurs will get the more and more money to have certain investments, correct? For that purpose, government introduced this provision. Next number, what is the income? You may have two types of income. One is capital gain. I repeat, one is capital gain. Or second one is investment income. Come again, what? Investment income. What is capital gain? Sir, if you sell this asset permanently, you may get capital gain. Or else you may hold the asset and you may have two types of income. Tell me what is the first income? Maybe interest income or maybe dividend. Correct? Yes. Worst case, NRIs may have on specified foreign exchange asset two types of income. What is that? Capital gains. What else? Investment income. Again, investment income two types. What is the first one? Interest income or dividend income. Student doubts. Sir, what are the tax rate? Very simple. Interest income or dividend income is taxable at the rate of 20%. I repeat, taxable at the rate of 20. For you and me, it is 30. No, for them it is 20. Next one, long-term capital gain, that is 10%. I repeat, long-term capital gain 10%. Any other income, normal rates. I repeat, other income, normal rates. Example, your own brother and sister, they have one house property in India. Okay. After that, they migrated to Canada, settled there only. Come on. What about Indian property? Indian property, they will give on rental basis. They will get the rent, kada? Yes. What is the answer? The rental income is taxable as per special provisions or normal provisions? Normal. That's all, Nana. Next and last one. The special points are as follows. Number one, all of you, the special point number one, while computing income, there is no question of expenses. Expenses won't be allowed. I repeat, no expenses. Come again, no expenses under section 30 to 37 and no expenses under section 57. Means PGBP and other sources expenses not allowed. Next one, no deduction under section 80C to 80U. And no basic exemption limit. Bell applicable or not applicable? Not applicable. And good news, ROI also not required. Return of income to be filed or not required to be filed? Not required to be filed. And indexation benefit applicable or not? No. Slab rates applicable or not? No. And these provisions are not applicable for non-resident, not applicable for resident. Only applicable for NRIs. And next one, yes. What is this? Come on. If you have any other income, come on. Normal provisions are applicable or not? Yes. Next one, flat rate or slab rate? Flat rate. Whatever income you have, capital gains are subject to 10%. Next one, investment income is subject to 20%. Next one, section 48 provisions are anyhow applicable. And next one, section 115C to 115I, mandatory or optional? Optional. And one good news, once you came back to India, once you became resident in India, still you can enjoy this provision. Section 115C to 115I, you can continue, provided you must hold the assets. I repeat, you must hold the assets. Next one, DTAA provisions are also applicable or not? Yes. Student doubts, sir, what is the meaning of DTA provision? Very simple. Now, investment income tax at the rate of 20%, but our government Modi and foreign government person, they agreed for 18% only. Come on, which rate applicable, 20 or 18? Most beneficial, how much? 18. Oh, subject to DTA. Next one, this is applicable only for NRI, non-resident Indian. That's all, Nana. With this, we're done with the chapter called as NRI. So I have so many doubts. One by one doubt we will clarify. Start. What is the meaning of NRI? Number one, foreign company or foreign person or Indian person? Number one, first one, he must be natural human being, that is individual. That too, resident or non-resident? Non-resident. Next, tell me, Chris Gale covered or not covered? Chris Gale is an individual, Chris Gale is a non-resident, but not covered because he is not a Indian citizen or not a Indian origin. Sunita Williams, now she is staying right now in space, correct? Tell me, she is an individual or not? Yes. Now non-resident or not? Yes. Indian citizen or not? No, she is American citizen actually. Indian origin or not? Yes. Her father born in 1940 in Gujarat. 1940 in Gujarat. Come on, United India, no? She is Indian origin or not? Yes. Oh, congrats. She's a dash. NRI. Next one, Sachin Adilla. Come on. Individual or not? Yes. Non-resident or not? Yes. Yes, non-resident. More number of days he is staying in abroad only. But he is a not Indian citizen, maybe American citizen, but he is a Indian origin. His father or his grandfather born before 1930 in India only. That means he is a Indian origin or not? Yes. Next one, Trump. Come on. Trump is a Raja, item Raja. Individual, non-resident, but neither Indian citizen nor Indian origin. Sorry, he is not a NRI. Correct? He is after all non-resident, but not NRI. Next one, New Zealand cricket player Rachin Ravindra. Individual, non-resident. That too, he is not a Indian citizen, but Indian origin. So these are covered. Next one, last example, Priyanka Chopra. Come on. Individual or not? Yes. Non-resident or not? Yes. Now, Indian origin, yes. But by default, she is a Indian citizen. She never lose the Indian citizenship so far. Now, she is a NRI or not? Yes. Now, she asked me, sir, what are the benefits for me? Madam, 115C to 115I are applicable. Then she asked me, sir, if not applicable, what is that? Madam, normal provisions only applicable. She told me, what is the difference between these two? Madam, your bell applicable or not? No. Sir, your bell applicable. Madam, here expenditure under section 30 to 37 are not applicable. But here generally it is applicable or not? Yes. Madam, other sources expenditure 57 not allowed, but here allowed. Correct? Yes. Madam, chapter 6A deduction under 80C to 80U. Come on, not allowed, but here it is allowed. Next one, Madam, return of income not required to file, but return of income required to be filed. Madam, here special tax rates are applicable. That is investment income. What is the rate? 10%. Or what is the rate? 20%. Capital gain, what is the answer, ma? 10%. Whereas interest and dividend, what is the answer? 20. But other income, what is the answer? Normal rates. Here, not like that. Everything is normal. Correct? Yes or no? Yes. So, if normal means what are the provisions applicable for you, same provisions are applicable even for Priyanka Chopra. Correct? Yes. And good news, Priyanka Chopra want to come back to India and want to settle here only. That day, she may become resident. Still, she can continue the provisions or not? Yes. Till the completion of sale of the asset. Okay. Until she hold the particular asset, she can continue. Next one. What are the assets she can buy? Mumbai real estate property she can buy? No. She has to purchase shares in Indian companies, debentures of Indian company, government security. She can purchase in foreign currency? Yes. She can purchase with Indian currency? No. Next one. These provisions are mandatory or optional? Optional. DTA applicable or not? Yes. 48 pros applicable or not? Yes. Return mandatory or not mandatory? Not mandatory. Last one. What is the capital gain tax rate? 10%. Is there any exemption available? Yes. One exemption is there. That is nothing but section 115F. I repeat 115F. What is that? Exemption for capital gain arising on transfer of specified foreign exchange asset. Applicable to NRIs and nature of income. What is that? Long-term capital gain on transfer of specified foreign exchange asset. But good news, she has to purchase another asset within the period of one item, 6 months from the date of transfer. Next one, what is the amount of exemption? Formula, long-term capital gain into amount invested divided by net consideration. Nana, the newly purchased asset must held by the SE for a minimum period of 3 years. If anybody sold within the period of 3 years, whatever the exemption you claimed earlier is taxable as long-term capital gains. Okay, na? Fine. With this, we completed the chapter called as NRI. Okay, everybody, what is NR? What is NRI? NR means non-resident. Non-resident means only individual or anyone? Anyone. But NRI is not like that. Only individual. That too non-resident. That too Indian citizen or Indian origin. What are the special provisions applicable? Chapter number 12A. Chapter number 12A or section number 115C to 115I. Next one, NRIs, what kind of income they can have? Two types. Number one, investment income. Number two, capital gain. What is the tax rate for capital gain? 10%. Is there any exemption available? Yes. What is the section? 115F. What is that? Amount, whatever the capital gain amount you received, that net consideration must be invested in another kind of asset within the period of 6 months, then proportionate amount only will be allowed as exemption. Long-term capital gain into the amount invested divided by net consideration. Chalo. Next, most important one, that is non-resident. Very, very, very important. Next one, who are the non-residents? That is the question number one. Non-resident means all non-resident individuals. I repeat, all non-resident individuals that anyhow we can cover in the residential status topic, and foreign companies also covered, foreign nationals also covered, overseas financial organizations also covered, foreign institutional investors are also covered. So these are the people altogether, it is known as non-resident. Okay, chalo. Number next, what are the tax rates applicable for non-resident? One by one topic, section number 115A, most important section, 99.99%, or else I can say confidently 100% you will get this section. 100% you will get this section in exam. What is that? All of you, special tax rate applicable for, listen, special tax rate applicable for whom? For non-resident or foreign company with respect to what income? With respect to royalty. Come again, royalty or FTS, fees for technical service, and other income. What is the other income? Interest, or else other income, dividend. Okay, in case of non-resident or in case of foreign company, what are the tax rates applicable? That is the question. Our friend doubts, sir, 40%. No, not like that. Different tax rates are applicable that we are going to cover. Ready, start. First, let me cover section 115A, subsection 1, class B. Come again. Section 115A, subsection 1, class B. Tax rate applicable for royalty and fees for technical service is 20%. Come again, what rate? 20%. Provided no PE. I repeat, no PE, no permanent establishment, and that too, no BEL is applicable. Basic exemption limit applicable or not? No. No expenses are allowed. I repeat, no expenses, and no required to file ROA. No return of income. Good news, return of income also not required. That too, deduction under chapter 6A generally not allowed, but here only allowed. I repeat, entire chapter it is not allowed, but allowed only for royalty and fees for technical service. Students should get that out. Sir, what is the reason for special offering? Very simple. Now, royalty and fees for technical service is most important for our Indian economy. The reason, if I get the formula, then only I will give royalty. Correct? Yes or no? Yes. Next one. If I take technical service, then only I will pay the fees to the foreigners. That is a special nature that is useful for our nation. That is the reason we want to collect the tax at the rate of 20%, and the deductions also will be allowed. Okay, now fine. Sir, these 20% are DTAA, whichever is higher or lower? Whichever is lower. Correct? Yes. Chalo. All of you see the word royalty and fees for technical services which does not have PA is taxable at the rate of 10% earlier, but amendment at the rate of 20% subject to DTA. No return of income, no expenses, ATC to ATU deductions are allowed. Gross income taxable at the rate of 20%. That's all ma. With this, first point is covered. Next topic friends, that is nothing but interest as well as dividend. Come again. Interest as well as dividend. Number one, interest paid by government. Come again. Interest paid by government to non-resident and foreign company taxable at the rate of 20%. Okay. Chalo. Next one, other interest. What are the other interests? One by one we will cover. Important. Start. Number one. First one, interest received by non-resident and foreign company on infrastructure. Come again. Infrastructure debt fund. In that case, the rate is 5%. I repeat, the rate is 5%. And TDS section 194 LB. I repeat, TDS section 194 LB. How to memorize? Number one, LB, local bonds. Local bonds. What is that? Infrastructure debt fund bonds. On that, non-resident or foreign company, if they received any interest, that is taxable at the rate of how much? 5%. Chalo. Number next, all of you. What? Non-resident or foreign company, they given the loan to Indian companies. I repeat, they given the loans to Indian company in one foreign currency. I repeat, loans given in which currency? Foreign. On that they are paying one interest. Interest received by non-resident and foreign company on loans given to Indian company in which currency? Foreign currency, which is taxable at the rate of 5%. And TDS under section 194 LC. Memory code LC, local companies. Indian company, local companies, correct? 194 LC. Next one, all of you. What? Amount received by non-resident on foreign companies on rupee denominated bonds. Come again. Rupee denominated bonds. In that case, that interest is taxable at the rate of 5%. TDS under section 194 LD. LD means local denomination. Come again. Local denomination. Okay. I am covering the section 115A, subsection 1, class A. Taxation of interest received by non-resident or foreign company from government. From government, what is the rate? 20. Other than government, what is the rate? Infrastructure debt fund, 5%. Indian company, loans given in foreign currency, 5%. Now, rupee denominated bonds, what is the answer? 5%. TDS sections also I covered. 194 LB, LC, LD. Importance are LB, local bonds. LC, Chandigarh, local company. LD, local denomination. Correct? Received is dash, non-resident or foreign company. Madam, royalty and fees for technical services, what is the rate? 20%. Immediately you should get that out. Sir, here you have not mentioned any TDS section. What is the answer? I don't know. Oh, you don't know? Then 195. If you don't know TDS section, that section, what is that? 195. For whom? Non-resident. With this, we covered one important section, section 115A. Next topic, common points, Nana. What? Here, all together it is common topics. Follow. What? No expenses will be allowed. No return of income is required. No deductions will be allowed. Next one, no basic exemption limit is applicable. Okay, na? Everyone? Yes. Deductions only allowed for one section. What is that? 115A, subsection 1, class B. Okay. Sir, 100% you will get this question in your exam. 100%. Now, at least you will find the section called as 115A. Now, especially they will ask the question about royalty and fees for technical services. Who has PE or does not have PE? Does not have PE. Okay, chalo. Raja, you. Equalization levy is applicable on this royalty and fees for technical services? No. No, because it is already covered under section 115A, subsection 1, class B. Next topic, Raja. 115AB, 115 AC, 115 AD. Please follow 115 AB. Don't by heart, follow the simple word long term capital gain on transfer of any units of mutual funds by overseas financial organization. Very simple word. It will take only 1 minute. Start. Babu Raja, overseas financial organization. They sold units. After that, on that sale of units, they got long term capital gain. What is the answer? Not 194A. What is the answer? 194. Sorry, not 115A. What is the answer? 115AB. What is the tax rate? 10%. Expenses? No. No expenses are allowed. Deductions? No. No deductions. Basic examination limit? No. Return required or not required? Return of income is required. Required. But how? I will tell you how it is. Next and last one. What is the TDS section? 196B. I repeat, 196B. 115AB TDS section is what? 196B. What is the rate? I don't know. I don't know means what is the rate? 10%. Okay, now fine. Next one, 115 AC. Come again. 115 AC. What is that? GDR. GDR means Global Depository Receipts. Very simple. Follow. Now, non-resident or foreign company, they got the income on GDR. Income on GDR. What is the answer? 10%. Tax rate is 10%. Expenses? No. No. ROI. Deductions? No. Entire chapter deductions not allowed. Basic exemption limit? No. No basic exemption limit. TDS section 196C. I repeat, 196C. Okay. Next, last one, 115 AD. What is that? That is 115 AD. Follow. That is income received by FII, foreign institutional investors. Different rates are there. Some are capital gain, some are normal things. Answer general rate is how much? 10%. But good news, no expenses are allowed. Next one, no indexation, and return of income is mandatory or optional. Return of income is mandatory. And TDS section 196D. I repeat, 196D. Don't worry, I will tell you the words. Follow. Nana, so far we covered 115A. Next one, 115AB. 115AC. 115AD. Ma, out of this, 100% they will ask one question about 115A. But here two subsections are there. 115A subsection 1 class A. 115A subsection 1 class B. Class A is what? That is interest. Class B what? Royalty and fees for technical service. Royalty and fees for technical service, what is the answer? 20%. Interest, what is the answer? Some are 5%. Correct? Some are 20. Received from the government, 20. Received on infrastructure debt fund, 5. Received from Indian company which is taken loan in foreign currency, 5. Received on rupee denominated bond, 5. Next one, all of you. Royalty and fees for technical services, what is the answer? 20. AB, what is that? Units. Units. AC, what is the answer? GDR. Now, AD, what is the answer? Foreign institutional investor. Tax rate, 10, 10, 10. Next one, expenses, no. Deductions, no. Next one, indexation, no. DTAA, yes. DDAA, yes. TDS section, 196, 196, 196. Here, B, C, D. Correct? Yes. Very, very important. Next one, 115 BBJ. 115 BBJ. What is that? Bad games. So many people nowadays they are playing rummy. Correct? Not only rummy, Dream 11. Online games. Correct? That is taxable at the rate of 30%. Now, you know what? BB for bad boys. Come again. Bad boys games. Now, that is taxable at the rate of 30%. Next one, another section is there. 115 BB. That is what? BB. BB means bad boys. What income? Casual income. TV shows, horse races, any kind of card games, etc. Answer, what is the rate? 30%. Next one, it is taxable at the rate of directly 30%. No expenses, no losses, no bell, no slab rate, no deductions. Correct? Yes. TDS sections are also applicable if it is the casual income 194B. If it is winning from horse races 194BB. Chalo. Next one, Raja. Another topic, most important, your examiner favorite question. In CA final, they asked minimum 6 times. In CMA final, they asked 4 times. That is 115 BBA. Okay. What is that? That is income earned by Raja. You who is number one, world number one, left-handed batsman, cricketer, who scored 400 runs, Brian Lara. Okay, na? Yes, cricketer. Next one, number one entertainer, Britney Spears or Justin Bieber. Which is the number one cricket team in the world other than Indian team? Australia. Remember this one. B for Brian Lara, B for Britney Spears, A for Australian Cricket Board. So many people are in the wrong impression that it is only covered for cricket. No, no, no. It is applicable only for non-resident. Come again. Non-resident, foreigner, foreign citizen, being sports person, being sports. Now, what are covered? Any sports are covered. Any sport, any sport. Now, Coco, Kabaddi, okay, everything is covered. But two games not covered. One is playing cards not covered, and lies also not covered. అబద్ధాలు ఆడతారు చూడండి, ఆ ఆట కూడా నాట్ కవర్డ్. ఓకే, బట్ ఎనీహౌ సెక్షన్ 115 BBA, దట్ ఈస్ ఇన్కమ్ ఆఫ్ నాన్ రెసిడెంట్ ఫారెన్ స్పోర్ట్స్ పర్సన్, నాన్ రెసిడెంట్ ఎంటర్టైనర్, okay, cheer girls, these people are covered, or Justin Bieber, or models, these are covered. Next one, non-resident sports body. Come again, sports body. Now in this case, they may have these kind of income. Tell me, sports person, what kind of income they may have? Number one, playing matches. Correct? First matches, kada? Yes. After matches, what next? Advertisement. Endorse the products. Advertisement. Number next, what is that? That write the articles to media. Okay, print media, electronic media, that is covered. Next one, entertainer will give stage shows. Correct? Yes. Now I think 4 years back, Justin Bieber came to India. He participated in Indian events, or else for Anant Ambani marriage purpose. Now Justin Bieber came to that particular event, and he participated in that event and he got the money. That is also covered under section 115 BBA. Next one, sports body. Sports body will get match guaranteed fees. Example, if you play match in India, whatever the fees receipts Indian Cricket Board received, out of that 40% will be given to that fellow, and 60% retained by Indian government, Indian sports body. Tell me, how much foreign sports body received? That is called as guaranteed money. I repeat, guaranteed money. If you lose the match or if you won the match, it is immaterial. You may get some lump sum consideration, that is guaranteed money. All these amounts are taxed at the rate of 20%. This is the section called as 115 BBA. Memory code: B for Brian Lara, B for Britney Spears, A for Australian Cricket Board. Tax rate applicable for only foreigner. It is not applicable for Virat Kohli because he is a resident. That too Indian. Even though he is non-resident, not applicable because he is not a foreign citizen, he is a Indian citizen. By birth, they must be foreigner, and that too they are non-resident. That too they are sports person or entertainer or sports body. Whatever the income they received is taxable at the rate of 20%. And what is that? TDS section under section 194E. E for entertainers. Come again, E for entertainers. But Raja, no bell. Basic exemption limit not applicable. And chapter 6A deduction under 80C to 80U not applicable. Expenditure not applicable. Return of income not applicable. Indian citizens not applicable. Correct? It is only applicable for foreign citizens. Now exam question. You, umpires are covered or not covered? Umpires are not covered. Match referees are not covered because they are not entertainers. No, they are not entertainers. Okay. Now Empire is an entertainer or not? No. Because suppose yesterday Pant he became out actually. But there are rumors that he is not out. Kada? Anyhow, match referee is not an entertainer and umpire is also not entertainer. For them, normal provisions only applicable. 115B, B, A are not at all applicable. Okay na? Chalo. With this, done with the topic special tax rates applicable for these fellows. Here, I wanted to tell you common points, then you will get more clarity. See the word all of you. Now, 115A, 115AB, AC, AD, BB, BBA, C2I. I will ask the question heading, tell me the answer. What is 115A provision? Come on. Special tax rate applicable for interest, royalty, fees for technical service and dividend received by non-resident or foreign company. AB. Long-term capital gain on transfer of mutual funds by overseas financial organization. AC. Income on GDR received by foreign company or non-resident. 115 AD. Income received by FII, foreign institutional investor. 115 BB, bad boys. Casual income. 115 BBA, non-resident sports person, non-resident sports body, non-resident entertainer. 115 C to I, NRI. Enough. Who is the payee? 115A. Who is the payee? Non-resident or foreign company. Next one. 115AB. Overseas financial organization. 115AC. Non-resident or foreign company. Correct? 115AD. Foreign institutional investor. 115BB. BB. Bad boys. Applicable for resident as well as non-resident. 115BBA. Non-resident, that too foreign, that too sports person or sports body or entertainer. 115C2I, N or I. Next one, nature of income. 115A, nature of income. Come on. Interest, dividend, royalty, fees for technical service. AB, long-term capital gain on transfer of mutual funds. Correct? AC, income from GDR. AD, all other income. BB, casual income. BBA, in case of sports person, come on, match fees, advertisement, contributing articles to media. Next one, sports body. What is that? Guaranteed fees. Next one, in case of entertainers, that is stage shows fees. Next one, 115C2I. Only long-term capital gain on transfer of specified foreign exchange asset or investment income. Two types, interest, dividend on specified foreign exchange asset. Next one, investment in foreign currency compulsory na. 115A, yes. 115AB, yes. 115AC, yes. 115AD, yes. Everywhere say yes, but use some logic. 115BB, bad boys, no. Gambling, betting, is it mandated to invest in foreign currency? No. Next one, 115BBA, Brian Lara, Britney Spears. Will they receive Indian currency or foreign currency? Foreign. Indian currency. Last one, 115C to 115I. Compulsory they have to invest in foreign currency. Next one, tax rate. Come on, important. Already I told you this tax rate. Tell me, what is the tax rate in case of 115A? Interest. Interest on infrastructure debt fund, 5%. Interest received from the Indian companies who are taking loan in foreign currency, 5%. Rupee denominated bonds, 5%. Royalty and fees for technical service, how much? 20%. Next one, 115AB, 10%. AC, 10%. AD, 10%. BB, 30%. 115BBA, 20%. C2I, NRIs, long-term capital gain, 10%. Other income like investment income, dividend or interest, 20%. Next one, filing of return compulsory or not. Don't confuse, I will tell you the technique follow. No, yes, no, yes. I repeat, No, yes, no, yes. Repeat. Come on. What is the first section? 115 A, AB, AC, AD. Next one BB. Next one BBA. Next one C2I. Return required. No, yes, no, yes. Stop. Is a bad fellow. BB bad fellow kada? Yes. Bad boy is required or not? Yes. BBA, Britney Spears, Brian Lara. No, not required. Why? Now cricketers, they will come to India. Example, IPL matches. They'll come to India, play the matches and mint the money and take the money and pay the tax and boy. Next year they may come or they may not come. Correct? Yes. Not required. C2I, NRIs required or not required? Not required. Okay. Now exam question. Who are not required to file the return in the group of non-resident? Tell me. Tell me. 115 A. 115 A C. Next one 115 BBA. Next one 115 C2 I. Correct? But warning, if you have other income other than this, pakka you are liable to file the return of income. Next one, deductions under chapter 6A. Answer, sing a song. No, 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 no. But only one section, yes. What is that? 115A subsection 1 class B. Next one, TDS sections. I don't know. You don't know. Then 195. If you know, tell me. If you don't know, 195. Now, I know in some sections, royalty and fees for technical services, I don't know. 195. Whereas infrastructure debt, 194 LB. Indian company, 194 LC. Rupee denominated bond, 194 LD. Whereas 115 AB, 196 B. 115 AC, 196 C. 115 AD, 196 D. And bad boys, 115 BB, 194 B, 194 BB. Next one, Brian Lara, 115 BBA, 194 E. Last one, NRIs, I don't know. You don't know. What is the section? 195. No. With this, we completed the topic tax rates applicable for non-resident as well as foreign companies. Okay. Any doubts? Next topic, presumptive taxation provisions applicable for non-residents. The sections are as follows. Section 44B. Next one, section 44BB. Next one, section 44BBA. Next one, section number 44BBB. Okay. Already we covered this topic in the chapter called as non-applicability of MAT provisions. Correct? Yes. These provisions are only applicable for foreign companies or as well as non-resident. First, let me introduce the topic, that is presumptive taxation income provisions applicable for non-resident. Their first topic, section 44B. B for board. Presumptive taxation with respect to non-resident carrying which business? Shipping business. Ready, start. SC must be resident or non-resident? Non-resident. He is the owner of bike or ship? Ship. Next one, the ship is operating between Guntur to Vijayawada? No. Operating between port in India to port in foreign country. Next one is carrying dash passengers or goods or both? Both. Maybe goods or maybe passengers. And that too, you must have Indian income. That Indian income is taxable at the rate of, come on, 7.5%. I repeat, at the rate of 7.5%. See the word, SC must be non-resident. He is the owner and charter of the ship and he is engaged in carrying passengers or goods from India to foreign to India. The presumptive income is equal gross receipts into 7.5%. Next one, I love you. Another topic, there is no option to declare lower profits. I repeat, he cannot declare lower profits. Compulsory he has to declare 7.5%. No sir, I want to declare 6%. Possible? No. No sir, I want to go for audit. Still not possible. Simply you have to follow. Understood? Yes. Next one, 44 BBA. A for airlines. Okay. One aircraft. Now start. Number one, SC must be dash Non-resident. SC must be the owner of aircraft and carrying passengers and goods between Indian airport to foreign airport, and there must be foreign income and Indian income. The Indian income is taxable at the rate of 5%. In exam hall you may get the doubt, sir, shipping income how much, foreign company for airlines company income how much. Now generally shipping company only will have more income, that is the reason it is 7.5, whereas airlines companies are more in losses. For your info, the income tax rate, what is the income rate? 5%. Remaining things are common. Expenses are allowed or not allowed? Not allowed. Deductions are allowed or not allowed? Not allowed. Return required or not required? Not required. Next one, 44BB. I repeat, 44BB. What is that? Presumptive taxation applicable for SSE engaged in extraction of mineral oils. What is the rate? 10%. But here good news, you can declare lower profits also. I repeat, you can declare lower profits. But two fellows cannot declare. You, who cannot declare? 44B cannot declare and 44BBA also cannot declare. Compulsory 44B people has to declare the amount of 7.5. 44BBA has to declare the figure of 5%. Whereas 44BB can declare lower profits or not? Yes, if they want they can declare, but go for audit and maintain the books. Last one, 44B, B, 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 B. What is that? Civil construction. What is the answer? It is applicable only for foreign companies. I repeat, 44B, 44BB, 44BBA applicable for non-resident as well as foreign company. But this is not applicable for non-resident. Applicable only for foreign company. What is the tax rate? 10%. Can they declare lower profits? Yes. Now I want to break the ice. Everybody please follow. The sections are all together as follows. One by one. First one, section 44B. Section 44, follow. BB. Next one, section 44 BBA. And the last one, section 44 BBB. Okay. What are the common points? What are the special provisions? I request everyone see the topic. First one. What is 44B? Shipping. BBA, aircraft. For easy memory purpose, I am changing the order. BB, mineral oil. BBB, construction. Now, eligible SC, non-resident, non-resident, non-resident. But here, only foreign company. Next one, nature of business. Ship, aircraft, mineral oil, civil, construction. Presumptive income, 44B, 7.5. BBA, 5%. BB, 10. Next one, BBB, 10%. Next one, can I declare lower profit under section 44B? 44B, no. 44BBA, no. 44BB, yes. 44BBB, yes. Next one, other topic. Now, advanced tax provisions anyhow applicable. Okay, chalo. These are the topics related to presumptive taxation applicable for non-resident. Yeah. Last topic of this topic called as non-resident taxation. That is nothing but TDS sections. Follow. 192. It is applicable on payment of salaries. I repeat, payment of salaries. Next one. 192A. Premature withdrawal of EPF, Employee Provident Fund. Come again. Premature withdrawal of Employee Provident Fund. Nana, in case of 192 and 192A, normal tax rates are applicable. Individual tax rates. Next one. 194B, 194BB. Few seconds back we covered bad boys related income. What is that? 30% tax rate. But that income is taxable as per the provisions of 115BB. But TDS rate is section 194B as well as 194BB are covered. What is the difference between B and BB? BB is for horse races and B for other casual income. Next one, 194E. That also we covered. Non-resident sports person, non-resident sports body, non-resident entertainer. What is the rate? 20%. Next one, 194G. Not important. commission on sale of lottery ticket 5%. 194 LB, LBA, LBB that we can cover within few minutes. LC already we covered. That is what? LB already we covered. What is LB? Infrastructure debt fund. What is the rate? 5%. Next one, 194 LC also covered. Payment of interest by Indian company. Loan taken in foreign currency. What is the rate? 5%. 194 LD also covered. Interest on rupee denominated bond. What is the rate? 5%. Next one, 194N. Important but not important for CMA final. 194N means no cash. I repeat, no cash. If you withdraw the amount over and above 1 crore, automatically you have to pay TDS at the rate of 2%. Next one, 195. Universal section with respect to NRI is concerned or NR is concerned. If you don't know particular section for non-resident taxation, then what is the answer? 195. 196B we covered. What is that? 115AB, interest income on mutual funds by overseas financial organization. Next one, 196C also covered. 115AC, what is that? GDR. Next one, 196D, that also we covered. What is that? 115AD, what is that? Foreign institutional investor. With this, we done with the chapter called as non-resident. Now see the overall syllabus, non-resident and NRIs. Nana, here 115C to 115I applicable. Here generally they will ask one problem. Okay, but important but least important. Whereas NR, out of that the syllabus is 115A. Most important. After that AB, so important. AC, so important. AD also so important. And after that 115BB, not that great important. 115BBA, your examiner's favorite question, important. Okay, what is that? Non-resident sports person, non-resident sports body, non-resident entertainer. Next one, exemptions topic also there. Next one, presumptive taxation is also there, presumptive taxation. Next one, TDS chapter is also there. Next one, out of this chapter, compulsory you will get one problem. That question is for 6 marks, minimum 6 marks, but you will not get 6 marks just like that unless otherwise you prepared residential status topic. You should prepare whether that is a Indian income or foreign income, whether it is a taxable or not taxable. That concept also if you read, then only you can solve the problem. Minimum is 6 marks. If I were the student, I will concentrate on DTAA chapter because 6 marks for sure. No exception, 6 marks pakka they will ask in exam. Okay, and TP minimum 6 to 8 marks pakka confirm. Non-resident topic 6 marks confirm, but dry topic no doubt it is dry, but it is easy if you revise the topic. For these 3 chapters we need to prepare first running notes or author book at your choice. First you have to prepare. After that compulsory you have to solve scanner problem, past exam question problem as for latest finance act, and as for LIFO we have to solve. LIFO, last in first out. Compulsory the questions will be repeated. Okay, fine. Sir, I am unable to solve. Don't worry, sit down and read the question and write the case study. What is given in the problem? Example, TP problem. In TP problem, first you have to understand who is the supplier, who is the receiver, whether they are associated or not, whether they are non-resident or not, then only it is 92B, then only it is 92A. Then which method applicable? Kappa, resale, profit split method. How to solve? Like this you have to analyze. For that you have to write the synopsis. Where? In exam hall. Where? Take the additional. On the additional you have to keep the heading rough work. If you want, write statutory warning. ఇది కానీ value చేస్తే పోతావు. Okay. Like this you can give the warning to examiner. There you can write the synopsis. Case study, just arrow marks like this. A limited now supplied to B limited 70%. Both are jiggeries, means both are associated enterprises. He got the income of this much. After that is supplied to outsiders. Like this you have to write the diagram. Then easily you can understood. And after that keep the heading computation of what examiner asked you. The same must be the heading. Sometimes examiner will ask you to calculate tax liability, but some student will calculate only total income. Gone. Kada? Sometimes examiner will ask you to calculate total income, but with over enthusiasm, you will calculate MAT. You will calculate MAT also, and book profit MAT and tax liability. But examiner asked only for 3 marks, but he did 18 marks question answer. That is number 3. Presentation important. Presentation means I am not telling about a spelling mistake. I am not telling about grammar. I am not telling about margin. I am telling about working notes. I will tell you the open secret. If you speak with your client, if your client is satisfied, then compulsory you will pay remuneration, very good remuneration he will pay to you. Number 2, he will just inform to others also. Same way, examiner is also expecting the same. Conversation must be there. For that purpose, you have to write the working notes. Student note, how many working notes I need to write? That depend upon marks and the time. Okay, so how many marks question it is? That is one thing. And the second thing is how much time I can allocate. Suppose that is a 3 marks question. After all 3 marks question, tell me how many minutes? Maximum 5 minutes. Within 5 minutes you have to write. Okay, na? Yes. Suppose that is 18 marks question. Then half an hour or 40 minutes or 1 hour. Some people will write 1 hour also. Okay, chalo. But working notes compulsory. Whatever the assumptions you have taken, that assumptions you have to present there. Understood? And don't take abnormal assumptions like Manchlakshmi. Okay. Take proper and general assumptions. Okay. Example, they're given like this. X has the income of 4,50,000. Compute the tax. Some students will calculate tax liability, but some students will write, it is assumed that his age is 80 years. Therefore, no need to pay tax. Therefore, tax liability is 0. Then how many marks he will get? 0. So that is the reason. Take care. Okay. And another thing, don't write para wise. Please write point wise. I repeat, point wise. And next one, they will ask case laws. How to write case laws? That is the question. Number 1. First, so many students will write the answer directly. Yes, it is wrong. Like this, they will write. Some people will write, no, yes, like this. No. Dedicate the same. Divide also into 3 paras. Para number 1, provision. Para number 2, given case. Para number 3, conclusion. Like this, you have to write. But we will write in reverse mode. First, we will write conclusion. Anyhow, that is wrong answer. Examiner will strike it off because he is also busy. But you have to write like this. First, write the provision. Ostega. Okay. Avachinde rayandi first. After that, given case. This I know. Why? The question only I will write there. By removing WH word, like who, what. By removing these words, I will write the given case. But write the synopsis. Last one, in the light of above said provision or in the light of so-and-so case law, the answer is like this. You can write like that. The advantage is very simple. Suppose your answer is wrong. Anyhow, it is wrong, I know. Then examiner may award stepwise marks for provision and stepwise marks for given case. Anyhow, this answer wrong, gada. Strike it off. At least half mark, at least 1 mark. But what student will do? You will keep banner heading. Yes, it is allowed. Answer is not allowed. Then you will not read second para and third para. Simply will strike it off. That is the reason. Please ask the examiner to read. For that purpose, you have to write the order like this. Number 1, provision. Number 2, given case. Number 3, conclusion. This is the pattern. And the next one, MCQs. How to solve, how to answer MCQs. Some people will follow approach. Okay. What is that? They'll ask answer for, what is the answer for first question? they'll make the sounds noise like this and all. If you make sound some people may not respond. Okay, that is sound approach. Second one is scale approach. Some people will have the weapon, that is scale. Shorter, longer, long. Plastica, metal. So they will just call the people with the scale only. What is the answer for first bit, second bit? But it may work out or may not work out. But you have to go for first one method. What? Fill. How to fill? Listen. India got independence on August 15 dash small a 1930, 1940, 1947, 1945. What you have to do, you have to insert the word and read. India got independence on August 15, 1930. It seems correct or not correct? Suppose if you feel correct, keep that answer only. Yeah. Suppose if you feel it is not correct, then immediately you can go for next alphabet and fill it and read. Like this is one approach, fill. With this approach, you can answer maximum questions. Sometimes you will find 1947, 1945 both are correct. In second case, second possibility, you have to go for elimination round. Elimination means two things you can just take it off. Now, remaining time you can spend on the remaining topics which is correct, 47 correct or 45 correct. Third option, phone a friend, means call a friend. That is approach. Next option, scale approach. Next approach, warning approach. If you have not answered, I will write your roll number. Then what he will say? You will fail, Gada, then. Anyhow, I will fail. You are also going to fail. So tell the answer. Some people will have signals and all. So my point is, ignore all the things and revise the entire syllabus. Revise the entire syllabus. Especially some chapters are most important for MCQs. Revise the topic, okay? And read the topic number of times. Automatically, most of the MCQs will be placed out of that. Next one, if it is a what you call practical question, like you have to solve the problem, then don't solve at the beginning, try to solve at the end of the examination. You can try to solve. And next one, by mistake also don't start your question paper with the theory questions. You have to start with the pro forma based question problems only, the two pro forma based. Pro forma based means best example MAT, another best example DTA, another best example is cup method, okay? And last example, another best example, 50 capital B slump sale. That is also one standard format is there. That kind of questions you have to answer first. And that too, you have to write the conclusion. Therefore, the tax liability is like this. You have to write the conclusions. Don't tease the examiner. Some people will tease the examiner. Niku dammunte. Okay, please find the answer. Don't tease the examiner like this. Okay, fine. And next one, notes important. Case laws names are not mandatory. If you know, you can write it. If you don't know, please ignore the case law name and write in a decided case law. But what some people will write, they will write different name. Suppose one case law is there. Subbalakshmi Mills Private Limited. This is the case law, Supreme Court judgment. What they will write? MS Subbalakshmi Limited. Some people will write Subbalakshmi Limited. Okay, tell me how examiner will award the marks. So case law names are not at all important. Next, section numbers important or not? Answer, not that important. Section numbers not that important. But some section numbers compulsory you have to write. Otherwise you are a sinner. The sections are as for section 91. Bilateral or unilateral? Unilateral. You know, one. Unique, unilateral. Next one, 92C. C for computation. CA, reference to CA, not CA, reference to TPO. CB, safe harbor. CC, advance pricing agreement. CD, effect of advance pricing agreement. CE, secondary adjustments. Next one, 93, non-resident. 94A, NJA. 94B, bar on interest. Okay, and last but not least, ABC analysis is most relevant. A means very, very, very important. B means very important, very, very important. C means very important. All are important, but some are very, very, very important. The very, very important topics you have to read a number of times. This you have to read less number of times. This you have to read 1 or 2 times. Okay, fine. And the next one, these topics compulsory you have to read notes plus all past exam questions, scanners and institute material question. These you have to study. For these you have to study notes plus scanner questions you have to read. For this you have to read notes. Sir, I don't have time. Then skip the C. Sir, I don't have that time also. Then skip the B. Sir, I don't have that much of time also. Skip the exam. Don't skip the attempt. Skip the exam. Try for another exam at least. Okay, fine. And pray the God not for exemption. Sometimes you will pray the God, God, please give me exemption in this paper. Then he will give 60 marks in this paper. Other subject 30, 35, 32 they will give. Because you asked God? Exemption. He said granted. Okay. Don't ask exemption. You should ask, I should get the success. And first, don't call attempt. I am writing this attempt. Attempt means you are just doing attempt. Okay. You are trying. Maybe you may pass or you may not pass. Don't say attempt. Say, I am appearing to particular exams. Okay. So, and next one, be confident. If paper is tough, be happy. Be happy. Serious. Be happy because valuation will be easy. Condition number 1, you have to attempt for 100 marks. I know your doubt. Sir, we don't know the paper tough. So what? Right? Seriously, right? Attempt for 100 marks. How? First, you know something, the something you have to write. So at the end, you can write the other questions also. But don't attempt choice also by mistake. Don't write choice. That is first one. Paper easy. Be careful. The reason, if paper easy, valuation will be difficult. And number 3, sometimes the paper is very tough. You are also not answered the question paper properly. Then you may get 30 marks. So you will come to room and you will not prepare for next exam. That is a bad idea. The reason I will tell you, if you attain the marks of 60 or 70 in some papers, and if you get only 35 in one paper, for your info, 99% they may add 5 marks and they will try to pass you. Seriously, it is a fact. Even though you got 60, 70s in some other subjects, but if you fail in one subject with less number of marks, then they may award that marks and they will try to make you successful person in that exam. Seriously, believe me, it's fact. I can show you with evidences also, but the time is we don't have right now, but it's real, believe me. And next one, some students will get exactly 40. That doesn't mean you got 40. You got only 32 or 31 or something, but they only added some marks. Okay. I know your next doubt. Sir, I got only 31. Then you got really 28 or something. They only awarded the marks. So president of that institute will take a call. Okay. But anyhow, if paper is easy or difficult is immaterial, please attempt for 100 marks and write the exam for 3 hours. Some people will write the exam for 1.5 hour. After that, they will hand it over the paper and question paper, and they will come out. What is the fun of doing like that? So please continue the exam for next 3 hours. After that only you can come back. Okay, fine. Friends, see the next one. Assessment procedures. Very lengthy chapter. Weightage of this topic is almost all 10 to 15 marks. But the chapter consisting of following things. First one is SSC wants to file the return of income. So chapter number 1, filing of ROI. Chapter number 2, assessment procedures. There are 3 sections. One is 143, one is 144, one is 147. This is another chapter. After that, we will pass the assessment order with the SSC. Then SSC has following remedies. Remedy number 1, you can go for appeal. Remedy number 2, you can go for rectification of mistake, or you can go for revision, or else you can go for IT authorities, income tax authorities. These are the other remedies available to the SSCs. So chapter number 3, chapter number 4, chapter number 5, chapter number 6. Out of all the 6 chapters, you may get minimum 10 marks to maximum 15 marks. But only theoretical chapter, please follow. Out of this, some chapters are most important. Let me start the chapter. First one, 139 subsection 1. You know what? That is nothing but filing of return of income. So, who can file the return of income? Number 1, every company. I repeat, every company. Number 2, every partnership firm. But whereas in case of other than company and firm, we have to file the return. Answer, any person whose total income before claiming deduction under section 80C to 80U exceeds basic exemption limit. I repeat, their gross total income, let us say 8 lakh, whereas their total deductions, let us say 4 lakh. Tell me, what is the net figure? 4. Their total income is more than basic exemption limit or not? Yes, they are required to file the return of income. Or else another example, my gross total income itself 4 lakh, whereas my deductions are 3 lakh, my total income 1 lakh. Everybody in the class, this 1 lakh before claiming deductions under section 80C to 80U, that is 3 lakh. Altogether how much? 4 lakh. 4 lakh is more than BEL or less than BEL? More than. Then they are required to file the return of income or not? Yes. Next one, 4th and 5th proviso to section 139(1). Any person being resident, ordinary resident, who is not required to file the return as per earlier provisions, but who has what? Who has foreign assets located outside India. I repeat, asset located outside India, or else who are significant authority to file the return, to have any bank account outside India, then they are required to file the return. Sir, if you have bank account located outside India, Swiss bank account or anything, or else if you have any asset located outside India, compulsory you have to file the return of income. But here 2 members are there. One is called as beneficial owner. Second one is called as beneficiary. Nana, beneficial owner means who invested the amount. Beneficiary means for whose benefit the thing is established. If you are a beneficial owner, first you have to file the return. If beneficial owner is no more, then who has to file the return? Beneficiary. I will take one illustration. Follow. Madam Jayalalitha, now she is the person who has property. She only invested the property in the name of Sasikala. Now my point is, who is liable to pay the tax? Who is liable to file the return? Beneficial owner. Beneficial owner in this example is Madam Jayalalitha. But Jayalalitha ma'am is no more. In the absence of that person, now Sasikala is required to file the return. So 3 members are required to file the return. Who are the members? Number 1, every company or every firm. That is the first one. Irrespective of income, irrespective of loss, irrespective of turnover, compulsory every company, every firm has to file the return. Next one, what about you and me? Others. In case of others, we have to take total income before claiming deductions exceeds basic exemption limit. They are also required to file the return. Last but not least, RBOR, resident but ordinary resident who has assets located outside India or who has financial interest located outside India, who has foreign bank account outside India, they are also required to file the return. But first priority goes to beneficial owner. If beneficial owner is no more, then who has to file the return? Beneficiary. They are required to file the return. Next one, all of you, another amendment is there. Some people are required to file the return. For this purpose, remember this FD ERTS. I repeat, FD ERTS. These people are also required to file the return. What is the meaning of F? F for foreign travel. If you spend foreign travel amount more than 2 lakhs, compulsory you have to go for command 1 filing of return, provided your foreign travel amount exceeds 2 lakhs. See the word, any person has incurred expenditure for foreign travel more than 2 lakhs, compulsory they have to file the return. Next one, D. D for deposit. If any bank account deposit exceeds 1 crore, they have to file the return. Sir, in your bank account, if the amount exceeds 1 crore, or in your savings bank account, if it is exceeds 50 lakh, compulsory you have to file the return. Next one, friends. Now another topic, electricity consumption. If electricity consumption amount exceeds 1 lakh, now in this case also you have to file the return of income. Next number, any person their gross total income before claiming exemption under chapter section number 54 series exceeds basic exemption limit, then also they are required to file the return of income. Next one, TDS TCS, where TDS and TCS amount exceeds 25,000 per annum, or else senior citizen case if it is exceeds 50,000, they are also required to file the return of income. See the word, F for foreign travel, D for deposit, E for electricity, R for that is nothing but revenue topic, that is capital gain topic, and T for TDS and TCS, S for sales turnover. See the next one, all of you, those people whose business turnover exceeds 60 lakh or professional receipts exceeds 10 lakh, in this case that fellow is also required to file the return of income. So with this we complete the topic who are required to file the return. Now tell me, who are required to file? Every company or every firm, and LLP also required. Other than this, come on, whose total income before claiming exemption under section 80 deduction under section 80C to 80U is more than basic exemption limit, or else in case of resident but ordinary resident who has foreign income, who has foreign assets, who has foreign bank account or financial interest located outside India, then they are also required to file the return. Apart from this, another group of person also covered, FDERP. E for F for foreign travel, next one D for deposit, E for electricity, next one R for revenue capital gains, and next one T for TDS, and S for sales or turnover. These people are required to file the return. Next one, what are the due dates? The due dates are as follows. In some cases 30th November of assessment year, in some cases 31st October, in some cases 31st July. Babu, 30th November is applicable for those SCs who are required to file TP report, transfer pricing report. But if they are not subject to TP report, if they are subject to tax audit, then answer is what? 31st October. For 31st October, the answer is as follows. Number 1, every company. Number 2, every person, non-corporate SC whose books are subject to tax audit. Last one, any partner in a firm, the firm books are subject to tax audit. I repeat, any partner. I never told you working partner. Any partner is also covered. And the last one, on or before 31st July. What is the answer? Others. In case of others, the answer is 31st July. Next one, friends, another topic. What are the ITR forms? Number 1, 2, 3, 4, 5, 6, 7. Now, friends, number 5 for firm, whereas 6, what is that? Company. Now, are you able to find the 6 here or not? Company. Next one 7. Lord Balaji. How many hills are there? 7. That is nothing but all others. I repeat, all others. Whereas 1, 2, 3, 4, that is applicable for individual and HUF. 1 is applicable only for individual who is having salary. Whereas 2, 3, 4 applicable for individual HUF. Now, if you have any income like BP, business or profession, if you have ITR number, come on, ITR number 4. If you have business income, ITR number 3. If you have business income, that too presumptive income, then that is ITR number 4. If you have business income, that too presumptive income, then ITR number 3. If you have only business income, then ITR number 4. If you are individual and HUF have other income other than BP, no BP if you have, automatically you are covered under ITR number 2. So these are the things. I repeat, 5 for firm, 6 for companies, 7 for all other people. 1 is only for individual who is having salary. Second one is for individual and HUF who has capital gain, other sources or else house property, etc. but does not have business or profession. 3. Individual and HUF who is having BP but who are following what taxation? Presumptive. Whereas 4 for individual and HUF who are having BP. Now these are the topics with respect to ITR returns are concerned. Next one, section number 140, signing and verification authority is there. Important for exam point of view, please follow. Who has to sign the return? That is the question. Answer, in case of individual, I repeat, individual himself has to sign the return. Individual. If individual is not in India, then power of attorney holder has to sign. Power of attorney. Suppose if the individual is mentally retarded, then legal guardian. And next one, any other reason, then power of attorney holder has to sign the return. Next one, HUF. In case of HUF, Karta has to sign the return. If Karta is unable to sign because of any reason, then who can sign? Adult member. It was CA final as well as CMA final exam question. Adult member can sign. I never told you next adult member. I never told you male adult member. I never told you female adult member. I told you any adult member can sign if Karta unable to sign. Next one, company. In case of company, MD can sign. If MD unable to sign, any director can sign. If the person is not resident, the company is not resident, then power of attorney holder can sign. In case of liquidation, liquidator can sign. Whereas if management is taken over by the government, then who can sign? Principal officer. Next one, if partnership form it is, managing partner can sign. If managing partner unable to sign, then any partner can sign except minor. And the next one, LLP. In case of LLP, most important thing, who can sign? Designated partner. If designated partner unable to sign, then any partner can sign. Next one, local authority. In case of local authority, principal officer only can sign. Principal officer means executive officer, some people nominated by the government or appointed by the government, that fellow can sign. Political party, CEO can sign. CEO means chief executive officer. In case of AOP, BOI and charitable trust, any member can sign. If member is not there, principal officer also can sign. In any other case, you can sign the return by the particular competent person. Competent person can sign. Friends, with this, we complete the topic 139 subsection 1. In that we covered who can sign the return, who can file the return, and when they can file the return, and what are the forms we covered. After that, we covered the topic called as section number 140. What is section 140? Signing and verification authorities. Now, next important topic, what are the consequences for late filing as well as non-filing? The consequences are as follows. In case of late filing, you have to pay interest under section 234A. Compulsory you have to pay interest under section 234A. That is nothing but at the rate of 1% per month or part of the month. Whereas if you make late filing of return, you cannot carry forward of losses. You can set off, but you cannot carry forward. Whereas if you file late filing of return, you cannot claim deduction under section 80, IA, IB, IC. All profit linked deductions will not be allowed. And amendment also, 10AA deduction also not allowed. Next number, Late fees must be paid under section 234F. Compulsory you have to pay the late fees at the rate of 1000 or 5000 as per provisions of section 234F. Babu, in case of non-filing, almost all same answer. Interest under section 234A and cannot carry forward the losses and cannot claim these deductions, and late fees anyhow mandatory. Apart from these two more extra topic, that is best judgment assessment under section 144, and apart from this free boarding and lodging will be provided, that is nothing but prosecution. If your tax liability is up to 10,000, there is no prosecution. If the tax liability is above 10,000 up to 25 lakhs, then minimum 3 months to maximum 2 years. Whereas if the tax liability is above 25 lakh, then minimum 6 months to maximum 7 years. But whereas in case of subsequent offense, then up to 7 years, that is the prosecution period will be granted. Now, these are the topics related to prosecution of SSCs who are not filed the return. But one thing for sure, up to 10,000 if your tax liability is due and you have not filed the return, then automatically prosecution is 0. But this exception is not applicable for companies. In case of companies, whether it is 3,000 or 1,000 is immaterial, the concerned person will be arrested if they have not filed the return. Okay, chalo. With this, done with the topic called as section 139 subsection 1 and 140 subsection 140 signing and verification authority. Next one, late fees under section 234F. If you file the return within the due date, then no late fees. If you file the return after the due date and total income does not exceed 5 lakh, then the amount is 1000. Whereas if you file the return after the due date and total income exceeds 5 lakh, then compulsory you have to pay the fees of rupees 5,000. Okay. Next one, section 139 subsection 4A, 4B, 4C, 4D, 4E, 4F. It is important topic. First one, section 139 subsection 4A, filing of return by charitable trust. I repeat, first one is filing of return by charitable trust. Second one is filing of return by political party. Third one is 139 subsection 4C, that is filing of return by media, trade union, institution or news agencies or universities, everything is covered. Next one, 4D, 139 subsection 4D, filing of return by institution covered under section 35. Next one, 4E, that is filing of return by business trust. 4F, that is filing of return by investment fund. Okay, I repeat, 4A, 4B, 4C, 4D, 4E, 4F, that is charitable trust, political party, institution or media, everything, or institution covered under section 35, or business trust. Last one is nothing but investment fund. Sir, conditions are as follows. If total income before claiming exemption under section 11 and 12 is more than BEL, then trustee is liable to file the return under section 139 subsection 4A. Whereas if it is a political party, if their total income before claiming exemption under section 13A is more than BEL, they have to file the return. Whereas in case of others, if total income before claiming exemption under section 10 is more than BEL, they have to file the return. But whereas in case of 739 4D, 4E, 4F, not like that. By default, they are supposed to file the return. Next one, ITR number 7 is applicable in each and every case. ITR number 7. Next one, due date. If audit applicable, then answer is 31st October. If audit is not applicable, then answer is 31st July. Next one, signing and verification authority. You know, in every case that is principal officer, whereas in case of section 139 subsection 4B, then political party, what is the answer? CEO. Next one, the penalty concept is as follows. If you have not filed the return as per provisions of section 139 subsection 4A, then you have to pay the penalty at the rate of 500 under section 272A subsection 2. Whereas in case of 139 4B, the section is 234F. Whereas in case of 139 4C, then the section is 272A subsection 2. How much? You know, 500. Now in all other cases, the 234F section is applicable. 234F is nothing but general penalty. So these are the topics related to filing of return of income by other entities. Number 1, 4A, that is charitable trust. 4B, that is political party. 4C, media or institution or anything. 4D, filing of return by institution covered under section 35. 4E, filing of return by business trust. 4F, filing of return by investment fund. So out of this, the most important topic is section 139 subsection 4C. That is most important. It is applicable for all other people. Okay, chalo. With this, done with the topic called as 4A, 4B, 4C, 4D, 4E, 4F. Next number, all other topics are not that important, but these topics are most important. That is nothing but 139 subsection 3. You know what? Last return. I repeat, last return. Filing of return is mandatory for carry forward of losses within the due date specified under section 139(1). What is that? If ROI is filed within the due date, then loss can be carried forward and loss can be set off. Suppose if you file the return belatedly, then the loss can be set off, but the loss cannot be carried forward. But there are two exceptions. Exception number 1, house property loss. Exception number 2, unabsorbed depreciation. Next one, all of you, last return must be filed within the due date specified under section 139 subsection 1. Next one, friends, now see the word. In case of late filing of return, house property loss can be set off as well as can be carried forward. Whereas business loss, that is, can be set off but cannot be carried forward. Whereas specified business loss can be set off but can't be carried forward. Whereas unabsorbed depreciation, what is the answer? Can be set off and can be carried forward. Capital loss can be set off, cannot be carried forward. And other sources loss can be set off and cannot be carried forward. But in case of delay, you can make request to the government of India. Now, first one, if the loss is up to 50 lakh, we can approach CIT. If the loss is above 50 lakh up to 2 crore, we can approach CCIT. If the loss is that is above 200 lakh up to 300 lakh, we can approach PCCIT, that is Principal Commissioner of Chief Commissioner of Income Tax. If the amount is more than 300 lakhs, then we can approach CBDT. Sir, in case of delay filing of return, these following authorities has power to condone the delay. They can accept the delay and they can permit you for carry forward of the losses. Next one, 139 subsection 4, that is nothing but late return or belated return. In case of 139 subsection 4, listen, if you have not filed the return in time, if you want to file the return after the due date, then that is called as belated return. For belated return, there is a time period. You know what? 3 months prior to end of relevant assessment year or completion of assessment whichever is earlier. Nana, here completion of assessment means which assessment? Best judgment assessment covered under section 144. Next one, if you file the return after this due date, the return is valid or invalid? Invalid. Now, next topic, 139 subsection 5. You know what? SSC already filed the return of income, but in the return there are some mistakes or some omissions. In that case, you can rectify the return by filing another fresh return. That concept is called as revised return. Example, SC filed one return under section 139(1) or 139(4), and the two, in the return there are some mistakes or some omissions. In that case, SSC can file another fresh return under section 139 subsection 5. That return is called as revised return. In case of revised return, SSC has to file one more return. A SING officer will consider the new return only. The time limit is as follows. Now, whichever is earlier, 3 months prior to end of relevant assessment year or completion of assessment, whichever is higher. Friends, out of this, 3 months prior to end of relevant assessment year means our deadline for assessment year is 31st March 2025. 3 months means, you know, Jan, Feb, March. Then the deadline is 31st December 2024 or 25, 24. Moral of the story, on or after December, no one can file the revised return, no one can file the belated return. What is the deadline, ma? 31st December of assessment year. I repeat, 31st December of assessment year. So if you file the revised return, a SING officer will consider only that revised return. He cannot consider the old return. Okay. Next, how many times we can revise? Number of times. But which return they will consider? latest revised return they will consider. Next one, what is the ultimate deadline? That is nothing but 3 months prior to end of relevant assessment year or completion of assessment, whichever is higher, whichever is earlier. Next one, another topic is there, that is nothing but 139 subsection 9. You know what? Defective return. SSC filed the return, but he forget to submit some documents, he forget to submit computation statement, or he forget to submit audit report, or he forget to submit proof of payment of tax or proof of deposit or audited financial statement. If you forget anything to submit like this, then that return is called as incomplete return, or that return is called as defective return. In case of defective return or in case of incomplete return, assessing officer will give the notice to you. After that, within 15 days from the date of notice, you have to rectify the same and you have to file the fresh return. Then that return is, you have to submit the documents, then your return will be treated as valid. If you have not submitted within 15 days time, then your return is called as invalid return. Okay. Now what is the difference between 139.5 and 139.9? 139.5 is nothing but revised return. 139.9 is defective return. Here some mistakes are there. To rectify the mistake, you have to file another fresh return. But here not like that. Under section 139.9, we forget to submit some documents. Now what you have to do? You have to submit the documents again. That's all. Here no need to file. No need to file another fresh return. Only you have to submit the documents. Under section 139.9, no need to submit the fresh return. You have to submit only the documents. Okay. With this, we completed 139 subsection 1, 139 subsection 3, 139 subsection 4, 139 subsection 5. 139.1, what is that? Voluntary filing of return. What is 139 subsection 3? Last return. 139 subsection 4, late return. 139 subsection 5, revised return. 139 subsection 9, defective return. So these are the returns we need to submit. Friends, let's continue the topic, section number 142. Generally, SSC will earn the money in the previous year, but the corresponding income is taxable in the assessment year. Generally, the due dates for filing of ROI are as follows. In some cases, that is 30th November of assessment year, but in some cases, that is 31st October of assessment year, but in other cases, that is nothing but 31st July of assessment year. Now, for my example sake, I want to take 31st October. I want to take the illustration of Mr. Prabhas. Now, Prabhas, he filed the return on or before 31st October. Now, it is correct return. Correct now? Yes. But what happened? Because of busy schedule, Prabhas could not file the return in time. Prabhas filed the return after the due date. After the due date. Then that is called as late return. For the filing of late return also one due date is there. What is the due date? 3 months prior to end of relevant assessment year or completion of assessment, whichever is earlier. Okay, fine. Now what happened? Now Prabhas, he has not filed the return in some cases. In that case, what assessing officer can do? That is the question. Whenever SSC fails to file the return of income, then assessing officer serve a notice. I repeat, assessing officer serve a notice under section 142 subsection 1 class 1. So today's topic is 142 subsection 1 class 1, notice for the purpose of filing of return of income. I repeat, notice for the purpose of filing of return of income. Very simple topic. It will take only 2 minutes. Start. Number 1, who will serve the notice? Assessing officer or else any IT authority. Next one, to whom it will be served? SSC. For what purpose it will be served? If SSC fails to furnish the return, SSC fails to file the return, then assessing officer will serve a notice to SSC requiring him to file the return of income. That's all. Next question, what is the time limit? Answer, there is no time limit for this notice. Understood? This kind of notice can be issued at any point of time. Next number, once this notice is served, SSC Mr. Prabhas compulsory has to file the return of income, even though he has loss, even though he has a profit even though he has income less than basic exemption limit. Understood? Yes. Next question. When Prabhas has to file the return? Once this notice is given, in the notice itself, assessing officer will specify, hey Mr. Prabhas, please file the return within 1 week from the date of notice or within 10 days from the date of notice. Okay, fine. Here one important question is there. The question is as follows. Return filed in response to notice issued under section 142(1) can be revised or cannot be revised. My question, can be or can't be? Common sense, can't be revised. The reason, step number 1, you have not filed. Step number 2, I only served the notice, means I begged you. Then only you file the return. After that you are saying that, there are some mistakes, I wanted to revise. Can you do like the same? No, you can't do the same. Therefore, the return filed in response to notice issued under section 142(1) can be or can't be? Can't be revised. Enough ma. With this, first part is covered. And the second part, 142 subsection 1 class 2. Class 2. What is that? Notice for books of accounts. I repeat, notice for books of accounts. What is the meaning of notice for books of accounts? Listen. Prabhas, if he file the return, I will keep quiet. If Prabhas not file the return, I will serve a notice under section 142 subsection 1 class 1. Class 1 requiring Prabhas to file the return. Once Prabhas file the return, I wanted to check the figures whether these figures are correct or not. For that purpose, I wanted to verify his books of accounts. For that purpose, I will issue another notice. The notice is as follows. What is that? 142 subsection 1 class 2. Come again. 142 subsection 1 class 2. Who will serve this notice? Assessing officer or IT authorities. To whom it will be served? SSC. For what purpose it will be served? For the purpose of books of accounts. I repeat, for the purpose of books of accounts. How many years of books of accounts I can ask? Maximum last 3 years. I repeat, maximum last 3 years. Can I ask beyond 3 years? No. Next question. I wanted to ask personal assets list. I wanted to ask jewelry list. I want to ask those assets which are not shown in balance sheet. Can I ask it or not? Yes. But for that purpose, prior approval of JCIT is required. I repeat, prior approval of JCIT is required. That's all. This is the other topic, section 142 subsection 1 class 2. Okay, chalo. Next number, another topic, section 142 subsection 2. You know what? That is called as, I repeat, enquiry. I repeat, this is nothing but enquiry. What is this? Listen. If Prabhas not file the return, then I will serve a notice under section 142 subsection 1 class 1. After that, I want to verify the books. Then for the purpose, I will issue 142 subsection 1 class 2. After that, I wanted to inquire outsiders. Sir, whether Prabhas income is correct or not, I want to inquire the producers. For that, I will do inquiry as for section 142 subsection 1 class 2. My point is, department has the power to do inquiry with outsiders, yes or no? Yes. Next question, 142 subsection 3. That is nothing but opportunity of being heard. I repeat, opportunity of being heard. What is the meaning? Listen. Prabhas not file the return, then I serve the notice under section 142 subsection 1 class 1. After that, Prabhas submitted the return. After that, I wanted to check the books. For this purpose, I will issue notice under section 142 subsection 1 class 2. How many years books I can ask? Max 3 years. After that, I wanted to inquiry whether these figures are correct or not. For that, I will apply the power under section 142 subsection 2. Then outsiders given some information to me. I wanted to apply that information. If I want to apply that information, can I go just like that? No, I can't go. Simply, I have to inform to Mr. Prabhas. Mr. Prabhas, I wanted to apply the data which I acquired, which I got it from outsiders. Do you have any reservations? Tell me. Like that, I have to give opportunity to speak. Opportunity of being must be provided to the SSC. Okay, na? Fine. So with this, we're done with the topic called as section 142. Next number, mind-blowing topic, very important topic for exam point of view, 142 2A. That is nothing but direction for special audit. Come again, direction for special audit. This is most important topic. This is most important for CMA final also. The reason one amendment is there, that amendment is nothing but not only for special audit, it is meant for valuation of inventory. Come again, valuation of inventory. What is that? Please follow all of you. Here, SSE may file the return of income. After that, E may submit books of accounts. After that, I wanted to use the data. That is okay. But sometimes what happen? The books of accounts are incorrect. I repeat, the books of accounts are incorrect, wrong, or the books of accounts are incomplete, or the books of accounts are voluminous, bulk, or else I have doubts about the correctness of the accounts. I don't want to believe the books. For that purpose, what are the remedies available to the assessing officer? That is the question. Friends, whenever assessing officer has not satisfied about the correctness of the books, okay, and about the completeness of the books, then blindly he can refer you to go for special audit. I repeat, to go for special audit. But amendment from this batch onwards, this direction not only given for special audit, it can be given for valuation of inventory. I repeat, valuation of inventory purpose also we can do. Friends, once upon a time special audit will be done only by chartered accountant, but nowadays valuation of inventory can be done only by cost accountant, CMA qualified, who are in practice only can do. That is the reason this is an important question for your examinations. Okay, fine. Ready, start. See the word. At the stage of proceedings are pending. I repeat, the proceedings are pending means assessment is going on. At the time, assessing officer is of the opinion that the books are required to be audited having regard to. I repeat, assessing officer is in the opinion that I can't handle the books. It must be audited. In that case, he can direct you to go for special audit. But special audit can be given only in the following circumstances. Number one, doubts about correctness of the accounts. My opinion is like this: your books of accounts are not correct. So I am feeling that the particulars given in your books of accounts are wrong and fake. Number two, bulk, voluminous of the accounts. You are submitting the books, but you are submitting one lorry papers for balance sheet, another lorry papers for P&L. How I can verify? So bulk. Next one, multiplicity of transaction. Same transaction repeated number of times. Something is fishy. In this case, I cannot believe your books. Next one, specified nature of business activity. I am unable to understand your business model. So ordinary people cannot understand your business model. Only living legends can only understand. For that purpose, assessing officer direct you to go for special audit. Next one, nature and complexity of accounts. So your books are in complex in nature, which I can't follow. Last one, interest of revenue. Nana, all the things must be done to protect the interest of the government. Correct? In the following cases only, assessing officer can direct you to go for special audit, or else he can direct you to go for valuation of inventory by cost accountant. With this, we completed the introduction of special audit and valuation of inventory. So I want to tell you one word. Number one, proceedings must be pending before assessing officer. That to assessing officer of the opinion that the books are required to be audited having regard to DBMS networking. I repeat, DBMS networking. D for doubts. B for bulk. Bulk means voluminous. M for multiplicity of transaction. S for specialized nature of transaction. N for nature and complexity of transaction. I for interest of revenue. In that case, assessing officer direct you to go for special audit. Okay, and special audit purpose, they will refer you to go to one chartered accountant office, whereas for valuation of inventory purpose they will ask you to go to cost accountant office. Next one, for this direction purpose prior approval of commissioner or chief commissioner is required. And next one, if I want to issue this direction, opportunity of being heard must be given. Opportunity of being means show cause notice. I repeat, what must be given? Show cause notice. And next one, such a direction cannot be issued if the proceedings are completed. Nana, if assessment already completed, I cannot issue this direction. The reason is very simple. How you are able to complete the assessment if the books are doubtful in nature? Correct? Ma'am, if the books are doubtful nature, how you can completed the assessment earlier? Okay, therefore completed matters cases you cannot give this direction. Okay, if you want to give this direction, Now the proceedings must be completed or pending. Pending. So assessing officer, he wanted to go with your return. Now he has so many doubts. He verified books. Still so many doubts are there. In that case, he will ask you to go for direction for special audit. Next number, now auditor or cost accountant nominated by CC or CIT. And remuneration and audit fees expenditure will be determined by CCIT or CIT. Paid by whom? Paid by central government. Central government will pay the money. Next one, audit report must be submitted within the time permitted by assessing officer. Assessing officer only will tell the time. 3 months, 4 months like this. But overall time limit does not exceed 180 days. Okay, actual time limit will be decided by assessing officer. But whatever the time we want to tell you, that overall time period should not exceed 180 days. Next one, audit report is not in binding nature. After all, mere guidance in nature. That means assessing officer no need to stick on to the audit report. Okay, audit report means after all that is an opinion, correct? Yes or no? After all, it's opinion. So assessing officer no need to stick on to that one. He can just consider as a reference. Okay, fine. Next one, another topic. If you have not complied with these provisions of 142, the consequences are as follows. Number one, penalty shall be levied under section 272A. How much? 10,000. And best judgment assessment will be initiated under section 144. And next one, prosecution under section 276D, that is rigorous imprisonment. I repeat, rigorous imprisonment for a period of 1 year. Last one, they will issue the order under section 132. What is 132? We will discuss in another point, that is search and seizure. Nana, with this, we're done with the topic called as section number 142. What is 142? Simple, the word is notice for filing of return and notice for the purpose of books of accounts and inquiry and the opportunity of being heard. Last but not least, special audit or valuation of inventory. With this, we're done with the topic called as section number 142. Next number, section number 143. I repeat, 143. Friends, that is nothing but assessment. Assessment. What is this? Follow. Here, step number 1, SSC will file the return of income, okay, with the assessing officer. For that, the sections are as follows. Section 139(1) to section number 140 series, section number 140A or 140B like this. After that, assessing officer will apply some powers. The powers are as follows. One is 142. Honestly speaking, in 142, assessing officer will not do any assessment. After all, he will serve a notice or he will issue a notice for return purpose, or he will survey notice for books purpose, and he will do inquiry with outsiders, or else if you are unable to follow your books, he will ask you to go for special audit. But honestly speaking, assessing officer will not do any assessment under section 142. But if I want to do assessment, there are only 3 sections. One is 143, number next 144, number next 147. Only there are 3 assessments. One is 143, one is 144, one is 147. Listen, if I want to do 147, the condition is the income must be escaped. I repeat, income must be escaped, or else there must be search and seizure. Oh, in case of income escaped or in case of search and seizure only, we can do 147. Okay, na? Every time I cannot do 147. I can do 147 when I came to know that your income has escaped the assessment, or else I came to know that you have black money. In that case only, I can do search and seizure. Example, I will tell you an illustration. Mr. Mallareddy, okay? So Mallareddy Group of Institutions Chairman, Poolamina, that fellow is there, no? That person has some black money atta. In this case, income tax department did the raid. After that, they seized the assets. After that, they have taken the assets to income tax department. Now my point is, they wanted to do assessment computation. For that, they will invoke the provisions of section 147. Okay, na? Fine. Next number, 144. When you are not cooperating, I repeat, non-cooperation, in that case, I will do the section 144. Example, I asked Prabhas, hey Prabhas, give me the books. Then Prabhas told me, darling, I don't have. Oh shit, when I asked you to submit the books, you are not submitting. So you are not cooperating. Number two, I asked Prabhas, hey Prabhas submitted the book. He told me, yesterday it got fire accident and destroyed. Oh, not cooperated. Next one, I asked Prabhas to come for my office, but he never turned up. In that case, I will do 144. But in general cases, I will do 143. But if I want to file 143, there must be one condition, return must be filed. Come again, return must be filed. Oh ho, if I file the return, then only I can do 143. No return, no 143. I repeat, no return, no 143. Next one, sir, everyone will file the return. No, every case 143 compulsory. No. In 143, honestly speaking, the assessment is, after all, 143.3 is only the assessment. This is called as scrutiny assessment. Come again, what assessment? Scrutiny. Are also called as regular assessment. Scrutiny or regular assessment. For the purpose of this assessment, I must give the notice under section 143 subsection 2. What is that? Notice must be given. Sir, no notice, no assessment. Okay. If you want to do assessment under section 143.3, compulsory notice must be served under section 143 subsection 2. See the word 143.3. Scrutiny. I repeat, scrutiny assessment are also called as regular assessment. Next one, notice under section 143 subsection 2. What is that? Notice for assessment under section 143.3. Okay, na? Fine. Next one, for all other people, for all other persons, scrutiny is not possible because department cannot verify all your returns in detail. Correct na? Yes. Honestly speaking, nowadays, 4 crore people or 4.5 crore people file the return. Is it possible to assessing officer to verify all the returns? No, impossible, not possible. Why? Time constraint. That is the reason department what they will do, they will verify only big shots return. They will verify on sampling basis. They will verify when they have suspicious things. Okay, example, last year he paid tax of 4 crores. This year he offered his income as a 3 lakh rupees. Now tell me, why this much of deviation? I want to know. Now teliyali. So I will go in depth. For that purpose, I will survey love letter that is called as 143.2. 143.2. Notice for scrutiny assessment. Then only I will do 143.3 scrutiny assessment. Understood? Yes. But in other cases, I will not do all the things. Simply I will just verify the totals. That is called as summary assessment. I repeat, that is called as summary assessment. That is 143 subsection 1. So many people are in the wrong impression that it is also an assessment. Answer, no, it is not an assessment. After all, it is checking the total. It is checking the total. Your figures only I will check the total. I will confirm that whether the totals are correct or not. It is not an assessment. Okay. After all, the name consisting of the word assessment, but it is not an assessment. Understood? Assessment means, what is that? Regular assessment or else scrutiny assessment under section 143.3. 143 subsection 3. Now let me introduce first section 143 subsection 1. What is that? Nana, it is nothing but intimation, or it is nothing but processing of return. It is nothing but summary assessment. All are one and the same. Okay, what is that? Very simple. Follow. Number one, our SSE, Mr. Sai, he filed the return of income. I repeat, Sai filed the return of income. My doubt number one, whether totals are correct or not, I want to check. I want to check. For that purpose, I will just do processing of return. Processing, okay? That is the reason 143.1 is called as processing of return. After that, I will confirm and I will just send a letter to you. The letter is called as intimation. After all, I verified the summary only. That is the reason it is called as summary assessment. Okay, start. Return filed under section 139 series or else return filed under section 142.1 notice purpose. In this case, that return shall be processed. Okay, 143 is possible only if you file the return or fail to file the return. File the return. No return, no 143. Remember, no return, no 143. If you file the return, then only I can do 143. Okay, na? Yes. Already start. If you file the return, what I will do first, I will compute total income. Now student doubt, sir, I already calculated salary, house property, PGBP, capital gain, other sources, kada. Wait, whether the totals are correct or not, I want to check. So I will check total income. After that, I will calculate tax liability on the total income computed by the assessing officer. After that, I will compare this figure with your figures. Means I will compute your total income as 10 lakh. I will compute tax liability as let us say 3 lakh. But I will compare with your figure. How much you offered? You offered only 2 lakh 50,000, but actually payable is 3 lakh. Come on. Then I will just prepare one intimation and I will serve the intimation to you. That's all. This is the concept called as 143 subsection 1. This is called as processing. After processing, I will survey notice. I will survey information. I will just give a intimation. That is the reason it is called as intimation. Are you checking the validity of the figures? No. You don't know whether this person's income is that much or not. You don't know. After all, you are bothering about totals. Correct? So that is the reason it is called as summary assessment. What is the step number 1 in summary assessment? Compute total income. Sir, how to compute total income? Answer, I will check AILED. Come again. AILED. Just memory code. A for, I will check arithmetical errors. I repeat, arithmetical errors. I for incorrect claim. Incorrect claim. What is incorrect claim? See the word. Number 1, one entry is inconsistent with other entry. What is that? Generally in accounts exam we will do. In one page the total is 47 lakh 32,000 324. But in the next page we will write 43 lakh 72,000 234 we will write. Okay, tell me, same figure we have written differently. Everybody in the class, our human brain sometimes unable to recognize the numbers. Okay, and tell me, this number is inconsistent with this number, kada? This kind of error will be rectified by computer software which was acquired by the income tax department. Okay, that is the first one. We will check dash inconsistent entry. Next one, data not substantiated. Example, now our friend contributed to Tirumal Tirupati Devasthanam. Our friend contributed to AP CM Relief Fund or Revant Reddy CM Relief Fund. In that case, 80G deduction you can claim, provided you have to submit your PAN number, you have to submit the PAN number of donee also, but you have not submitted. Whether this information not provided, then automatically your data is not substantiated. Deduction allowed or not allowed? Not allowed. Last one, excessive deduction. Example, ATC deduction I have claimed 2,70,000 because I spent that much. Okay, for my children's school fees I paid 2,50,000 and 20,000 is my insurance. I claimed 2,70,000. Is it correct or wrong? Wrong. How much is the permissible amount? 1.5 lakh. But how dare you? How you can take 2,70,000? The excess amount will be allowed or disallowed? Disallowed. Best. So A I completed. A for arithmetical error. I for incorrect claim. LED. What is the LED? L for disallowance of losses. When disallowed the losses, if you want to carry forward the losses, one of the condition is you have to file the return in time. Correct. Late filing of return will make you not carry forwarding of the losses. Correct. Babu, once upon a time it is very difficult to human brain to verify the dates and all. But nowadays not like that. Computer within seconds, it will go to old records and it will check the date of filing of return in that year. For example, in that year long ago, you filed your return belatedly. Anybody? It filed belatedly. That loss will be carried forward or not? No. No. So see the word loss claimed. If ROI for which set off of losses was claimed was filed beyond the due date. After the due date it filed. Now system will verify. If it is the case, it will add back losses. Means it will disallow the losses. Next one, another topic, decrease in the expenditure, disallowance of expenditure. When? As for audit report. Sir, sometimes chartered accountant will give tax audit report. Now there they will give some disallowances. Okay, now your computer software, that computer software will check the audit report After that, it will add back the figures if anything is there. Last one, deduction. Already I told you in the session, if you want to claim deduction under section 80H, 80IA, IB, IC, 10AA, compulsory you have to file the return in time. Correct? If you file the return belatedly, you cannot claim income based deductions. Yes or no? Yes. Suppose you file the return belatedly earlier, but this year is simply you are claiming deduction. Your intention is different. How human being will know? But nowadays software is only using by the department. Software simply verify the last year data, whether the return was filed belatedly. Immediately the profit linked deductions not allowed. If you claim it, that will be added back. Okay. So as of now I told you A I L E D. A for arithmetical accuracy, arithmetical errors. I know some people's doubt, sir, how human being will do these kind of mistakes. Answer, if you filed electronically, it is not possible. But if you are filing manually, it is possible to do mistakes, no? That is A for arithmetical error, I for incorrect claim, L for disallowance of losses when the return was filed belatedly, E for disallowance of expenditure as per audit report, D for disallowance of deduction which was claimed under section 80 H2 RRB provided the return was filed belatedly. Understood? Yes. Now with this, step number 1 completed. What is that? Computation of total income. Here the subpoints are as follows: A, I, L, E, D. After that, I will add AILED things, I will add it back, or I will not consider anything. But if you want to add back, you have to communicate to the SC. Hey SC, I want to do these adjustments. Comment like this, you have to inform. Then SSC has to respond the same within how many days? 30 days. If he has not responded, automatically we will add back. Okay. Now tell me, department has to communicate to SC or not? Yes. With this, step number 1 completed. Step number 2, we will calculate tax liability. Step number 3, I will compare how much SSC paid, how much SSC is payable. I will compare. Let us say SSC paid is 10 lakh, but payable is 14. Then I will issue dash intimation. But on the intimation, I will mention, Nana, you have to pay this much of tax. That is the reason it is called as deemed to be notice. Come again, deemed to be notice. That is the first one. Next one, SSC paid tax at 10 lakh, but honestly speaking, he has to pay 7 lakh only. 7 lakh only. How much extra you paid? 3 lakh. I will return your 3 lakh back. Kada? For that, I will give intimation. In the intimation, I will keep the heading called as refund. I repeat, refund. Last one, you paid 8 lakh, but you have to pay 8 lakh only. Come on, you paid equal amount. Any refund? No. Any demand? No. Just I will give intimation. Whatever you tax you paid is final. That's all. This is the thing. Nana, the time limit for intimation is 9 months. What is the time limit? 9 months from the end of the financial year in which ROI is filed. Now, listen, my previous year 22-23, for example, my assessment year is 23-24. Everybody in the class, 23-24 is the assessment year in which I filed the return. Exactly how many months lawmaker is saying? 9 months. 1, 2, 3, 4, 5, 6, 7, 8, 9. That means on or before 31st December. 31st December. Next to the assessment year, that is the deadline. Okay. What is the time limit for intimation? Tell me. 9 months from the end of financial year in which ROI is filed. With this, we're done with one topic called as intimation. Next topic, friends, that is nothing but 143 subsection 2. What is that? This is nothing but notice. This is notice, and after issuing this notice, I can do assessment under section 143 subsection 3. Next one, when notice can be issued under 143.2, that is the question. Answer, you must file the return first. After that, assessing officer, you want to consider that you have not understated the income. You want to confirm that you have not understated the income. You want to confirm that you have not claimed excessive loss. You wanted to confirm that you have not underpaid the tax. I repeat, just they want to confirm that you have not understated the income. You have not computed excessive loss, you have not underpaid the tax. For this purpose, they will serve a notice. They will ask you to attend in person, or they will ask you to produce books of accounts also. That's all. This is the topic called as notice. Anybody in the class? Notice mandatory or optional for every SC? Not mandatory. Every SC not mandatory. Only those SCs who are selected for scrutiny, for them only we need to communicate. Okay, fine. Ma'am, is it compulsory to give intimation to every SC? Intimation is compulsory for every SC, but notice only compulsory only for those SSCs who are selected for scrutiny. Madam, what is the criteria to select anyone for scrutiny? Answer, there is no answer for that. There is no answer. Department want to confirm that he has not understated the income. He has not overstated his expenditure. For that, we will serve a notice. That's all. Pinky Ponky. Now he is the donkey. Can I serve the notice? Yes. I don't like his face. Can I serve the notice? Yes. Yes, come on. Yes. Answer, there is no logic for the purpose of 143.3. Okay. But department will not issue just like that. They have their own principles. Example, if you are regularly paying tax, but this year all of a sudden you have not paid the tax, then they got the doubt. They want to verify. Next one, cinema stars. Now the figures are different. Every hero will say, I have taken 100 crores, I have taken 150 crore. But in the return, they are offering only basic exemption limits only. Now department want to confirm. So they will survey notice. Next one, builder. Now one day assessing officer casually, he went to one apartment and asked what is the SFT price. They told 11,000. But the SC, he offered a tax liability of 1 lakh. How the figures are matching? In that case, they may serve. Okay, fine. Let us continue. Time limit for issuance of notice, 3 months. I repeat, time limit for issuance of notice, 3 months from the end of financial year in which ROI is filed. So you are selected for scrutiny or not will be decided within how many months? 3 months. Wait for first 3 months from the end of financial year in which ROI is filed. Just the first 3 months, April, May, June. If 3 months completed, you are lucky for that year. Why? No scrutiny. Correct? Yes. Time limit for intimation, 9 months. Time limit for notice, 3 months. Next one, last one, scrutiny assessment. What is scrutiny assessment? Once anybody is selected for scrutiny, we will survey notice. After that, I will ask you to come to my office. After that, I will do assessment. After that, I will survey order. That's all simple. I will survey order. You, in scrutiny assessment, can I grant the refund? Yes. In scrutiny assessment, can I issue demand notice? Yes. Scrutiny assessment favorable to department or favorable to SA or anyone? Anyone. Sometimes maybe favorable to department, sometimes favorable to SSC. Last one, what is the time period? Answer, 12 months. I repeat, what is the time limit? That is nothing but 12 months is the time period. 12 months from the end of the assessment year in which the income was first assessable. So are 3 due dates, how to remember? No need to remember, simple. Follow 143, 1, 143, 2, 143, 3. Tell me, what is 143, 1? Assessment or intimation? Intimation. What is 143, 2? Assessment or notice? Notice, but not assessment. Correct? What is 143, 2? Notice. What is 143, 3? Assessment. Kada? And listen. Start. 9 months, 3 months, 9 months. Once upon a time it is 9 months, but nowadays they made into 12. 3 plus 9, how much? 12. Don't apply this logic everywhere. Okay, fine. From the end of. Here, what you have to write? Financial era, assessment era. Wait. Simple logic. Everybody, this is a assessment or intimation, but not assessment. Correct? Right? Financial year. This is 143, 143, 2. Notice or assessment? Come on. Notice, but not assessment. Kada? Write the word financial year. 143, 3. What is that? Assessment. What do you have to write? Assessment year. In which? This is assessment or not an assessment? Not an assessment. Write the word ROI is filed. It is also not an assessment in which ROI is filed, but it is an assessment in which the income is first assessable. Now I will tell you the word. Don't worry. Follow. Very simple. Number one, 143 subsection 1. 143 subsection 1. 143 subsection 2. 143 subsection 3. Okay. All of you. 3 periods. Follow. Start. 143 1. Come on. 143 2. Next one. 143 3. Now what is the answer? Number 1, 9 months. Number 2, 3 months. Number next, 12 months. From the end of ditto. Here what? Financial assessment. This is not assessment. So you have to write the word financial. It is also not an assessment. You have to write financial. It is not assessment. Write the word assessment here. In which here ROI is non-assessment kada. Therefore you have to write the ROI is filed. ROI is filed, but in which income is assessable. Correct? Everyone? Yes. Now I want to check the data. Start. My previous year 23-24. My assessment year 24-25. Now in assessment year, I will file the return of income. Once I file the return of income, what department will do? April, May, June, July, August, September, October, November, December, Jan, Feb, March. What government will do? Department. They will issue intimation in most of the cases. Intimation time limit 9 months from the end of the year in which ROI is filed. ROI is filed in 24-25. From that year, how many months exactly? 9 months. April, May, June, July, like this up to 9 months. So 31st December of next year. Kada? This is the time limit for intimation. Suppose you are a big shot. You are selected for scrutiny. How many months? 3 months. 1, 2, 3. Once scrutiny is there, notice will be served. But the scrutiny assessment order will be given within how many months? 12 months. Tell me. Everyone will get the intimation or not? Yes. Everyone will get the notice or not? No. How do you know you are selected for scrutiny? Within how many months you come to know? 3 months. I served the notice. Shall I need to give intimation? Yes. Yes. I issued intimation. Can I serve the notice? Yes. Yes. You 3 months time completed. Can I issue the notice? No. No, I can't issue the notice. The notice time limit maximum 3 months. 9 months completed. Still I have not issued any intimation. Then what is the answer? Whatever the figures you have given in the returns are final. Correct? Yes. Once you receive the notice, scrutiny compulsory or not? Yes or no? Yes. Now 143.3 scrutiny may be favorable to department or favorable to SC. Both. With this, done with the topic called as 143 series. Okay, na? Fine. Friends, next one is 144. That is nothing but best judgment assessment, are also called as ex parte assessment. I repeat, ex parte assessment are also known as best judgment assessment. Listen, when this assessment will be done. Point number 1. SSC is a lazy fellow. Lazy fellow means step number 1, not file the return. I repeat, not file the return. First option. Or else file the return but not respond to notice. I repeat, not responded to notice. Tell me, how many notices are there? First one is 142 series, or else 143 subsection 2, or else last one, you have not responded for direction. Not responded for direction. Issued under section 142 2A. That's all. Now here in the 3 cases you will find tons of laziness. Kada? Number 1, you have not filed the return. Prabhas, never filed the return. What I will do? I may issue notice or I will directly go for 144. Next one. Prabhas not filed the return. Then I served notice. Baba, please file the return. Still he has not filed. Then tell me, can I go for 144 or not? Yes. Next one. I asked SC, hey, come to my office, but he never turn up. Can I go for 144? Yes. Next one. I asked Prabhas, go to so-and-so office and done your books audited by chartered accountant, special audit. But Prabhas never gone to that place. Come on, I hutted. Can I go for 144? Yes. Apart from this, three more disqualifications are there, one by one. Number one, ICDS not followed. Come again. ICDS not followed. What is ICDS? Income, computation, disclosure, standard. Array, you have not followed. Then wrong. I will just go for 144. Or else, accounting standards, or else, accounting policies are not followed regularly. Okay. And the next one, books of accounts are incorrect or books of accounts are incomplete. In that all the cases, I can just invoke the provisions of section 144. That's all. Now see the word, all of you. 144, that is called as best judgment assessment. Circumstances under which 144 can be done. See the word, where person fails to furnish the return of income, or person fails to comply with the notice, or person fails to comply with the direction in the cases. Or else another possibility, a sing officer is not satisfied about correctness or completeness of accounts. Next one, method of accounting not followed regularly. Last one, ICDS not followed regularly. In the cases, 6 cases. Tell me what are the 6 cases? Number one, return not filed, not responded to notice, not responded to direction. That's all. Now in 3 cases, there is non-compliance is there. Next another 3 possibilities. No ICDS followed, and accounting policies not followed regularly. Last one, books of accounts are incomplete or incorrect. Now in the 6 cases, if any one of the qualification is there, I will attack with 144. Sir, how you will do? Very simple. First, I need to issue notice. I repeat, I need to issue notice under section 144. But no time limit for this notice. I can issue anytime. Once I issue notice, SC has to respond with the notice. He has to submit the books, or he may come to my office. After that, a sing officer will do the assessment. That's all. That's all simple. What is the time limit? Same answer like 143.3. What is 143 time limit? Same answer. 12 months from the end of assessment year in which the income is assessable. Okay. If you file the return and if you are cooperating, 143.3 I may go it. If you file the return or fail to file the return and not cooperating, then I will go for 144. But time limit there and here same, correct? But there notice will be served under section 143 subsection 2. But here notice will be served under section 144. Kada? What is the time limit for 143.2 notice? 3 months. But here what is the time limit? No time limit. No time limit means can I issue after 400 years? No. Notice and assessment all together should complete everything within the period of 12 months. Enough. This is the topic. Sir, this notice is called as show cause notice. Come again. Show cause notice. Show cause notice means very simple. Why can't I go for special audit? Tell me. Or why can't I go for scrutiny assessment? Tell me. Why can't I go for best judgment assessment? Tell me. That is called as show cause notice. Show cause notice, opportunity of being heard, all are one and the same. Without giving show cause notice, you cannot go. Okay? Chalo. But one exception is there. What? Prabhas not file the return. Still, I serve the notice under 142 subsection 1. Listen, if you not file the return, department have 2 options. Option number 1, what? They may serve notice kada, or else they can go for 144. Tell me, which one we will follow? Which one we will follow? Very simple. One fellow did the eve teasing with the girls. Then police officer can do 2 things. One is warning, hey, don't repeat again. Second one, encounter. Yesterday Pawan Kalyan he said kada, a police department take severe actions. He said like this, means directly encounter. Sir, who will do this one? In that movie, one police officer is there, Saripoda Sinivaram something. That police officer compulsory will do 144. Correct? So some people will do, just to notice. So reason, whatever they want to do, they will do. There is no hard and fast rule for that. But one thing for sure, if SSC fails to file the return, then you may survey notice. If SSC is still not responded, directly you can go for 144 without giving show cause notice. Suppose SC not file the return. I hutted. I want to go for 144. Can I go? Yes. But notice must be given. That's all. With this, we're done with the topic called as 144. But one thing for sure, under 144, refund order will not be given. Under 144, refund order won't be given. Why? Because refund order only will be given under 143.3. Beneficial order will be given under 143.3. But 144 is not favorable to SA, favorable to department. Last one, you are not cooperating. When you are not cooperating, I am only doing. That means this is called as X party. X party. Pakka party lekunda chesedi. This is the reason it is called as X party assessment. Example, one day given the complaint against this fellow, I will ask him to come to office, but he never attended. Then I will adjourn the case. Again not attended, adjourn the case. But one fine day, I will give favorable judgment to this fellow in the absence of this person. This is called as X party. Why it is called as X party? You know, you are not cooperating. One fellow only doing. The one fellow is nothing but department. Kada? That is the reason it is called as X party. X party. Pakka party lekunda X party assessment. Are also called as best judgment assessment. Whatever I feel here, I will do. That is the reason best of my knowledge. So this is called as best judgment assessment. Now I wanted to know the difference between these two. When 143 to when 144 will be done. Tell me, what is the condition for 143? Return filed. Return filed. But a SING officer wanted to check. In that case, he can go for 143 series. But you have not filed the return, but not cooperating. You file the return, but not cooperating. Non-cooperating. In that case, I will go for 144. Next one. What is the notice required under 143.2? 143 months. The two notice is 143.2. What is the notice for 144? 144. Is there any specific time limit for 144? No. With this, done with the topic called as 142, 143, 144. That's all, Nana. Next topic, search and seizure. Come again, search and seizure. Yeah, follow. Under 142, no assessment will be done. But these are only some powers of department. Same way, 143 series, there different things are there. One is intimation, one is scrutiny assessment. It is a notice for scrutiny assessment. 144, it is an assessment actually, but it will not be done every time. It will be done only when SSC is not cooperating. Last one, 147. 147 is nothing but escaping assessment. Come again, escaping assessment. Ma, if you want to do escaping assessment, there are at least one condition must be satisfied. One condition. Condition number one, search happened. I repeat, search and seizure happened. Yes and yes. Or else, second one, your income as dash. Jogging or escaping? Escaped the assessment. Whether this or that, anything must happen. Now first let me continue the topic, search and seizure. This is called as income tax raid. Income tax raid. Now nowadays in so many cinemas you can find this one. In one Bollywood movie also there, Ajay Devgan movie I think so, that is raid. And in Telugu also nowadays some movies are based on income tax raid. Correct? Raviteja recent Atterplop movie also based on income tax raid only. Correct? Which movie? Mr. Bachchan. Why you will not remember the subject like that? Sir, anyhow, follow. Now here, income tax authorities, total 10 in numbers. CBDT, CC, C, additional, joint, deputy, assistant, ITO, tax recovery officer and inspector. Nana, out of these 10 topics, out of these 10 authorities, 2 authorities are authorizing officer. Authorizing officer means who will sit in AC room and give the permission to go for ride. They are called as authorizing officer. You know, authorized officer means we will go to field and who will do the work, who will do the ride. Now, best example, Mr. Ravi Teja. In the movie, he only will do ride, no? Yes or no? Yes. So there are two persons I told you, authorizing, authorized. Come again. Who are authorizing? CC and C. CC means Chief Commissioner. C means Commissioner. Who are authorized? Additional, joint, deputy, assistant, ITO. They are called as authorized. But in some areas, you won't find all these members. In some areas, you won't find commissioners. Some areas, in that case, CBDT will give special permission to additional and joint to act as a authorizing. I repeat, to act as a authorizing. Not every time. In those areas where commissioners are available or not available, not available. In that case, additional commissioner and joint commissioner may be permitted to act as authorizing. Correct? Yes. Chalo. See the word authorizing and authorized. Now authorizing CC and C. Chief Commissioner or Commissioner. But rare cases, two more people can act. Who? Additional, joint. But other people are called as authorized. Who are the other fellows? Additional, joint, deputy, assistant, ITO. Next one. What are the circumstances when we can go for ride? That is the question. Number one, everybody know. Even rickshaw puller also know. Even auto driver also know. What? Black money. Correct? If you have black money, we can go for ride. But in exam, you cannot write black money, green money like that. You can write SSC has undisclosed income, undisclosed assets, undisclosed bullion like this. Okay? Black money, undisclosed. Or else, summons issued under section 131, but SSC failed or not failed? SSC failed to comply. Summons issued. Summons means, you know, please come to office. I survey summon, but he have not turned up. Or else, another thing, notice issued under section 141. Somewhere minimum 100 seconds before we cover this one. 142.1. Notice for return of income or notice for books of accounts. Kada, I should notice, but you have not turned up. Then I can go for search and seizure. Or else might be issued, but SC may not comply. See the surprising word. Might be issued, you may not comply. Future tense. I may issue, you may not comply. Sir, how do you know I will not comply? Very simple. Vijay Mallya or Nirav Modi. These people are right now not in India. Correct? But I wanted to check their books of accounts. I want to verify their assets. But I may serve the notice. But do you think they will come and participate? No. So I might issue the notice, but they may not comply. Correct? Or else one person is in coma. Okay. I ask like this, hey Babu, le Babu. But he has not responding. Come on. I may issue, but he may not comply. Come on. In that case also I can go for income tax right or not? Yes. So two circumstances. Number one, summons or notice issued, but SC satisfied or failed. Failed. Next number, SC has undisclosed income, undisclosed bullion or something. Okay. Next question. What are the powers? Okay. Answer. The powers are as follows. Power number one, we can enter. Tell me where we can enter. We can enter their building. I repeat, their place, their building, their vessels, their vehicles, their aircraft. You are a big shot. You may have aircraft. I can enter. Our vehicle. In one movie, villain will have everything in a bus only. Mallanna something. Kada? That bus also we can enter. Next one, vessel. In Puri Jagannath movies, hero villain introduction is only on one hatch, ship. Okay, that vessel also we can enter. Next one, building. This is common. And place. All these things I can enter, provided there is reasons to suspect that in that place there are bullions or there is a what you call books of accounts or something. In that case only we can enter into that particular premises. Okay, now number one, enter. Number two, search. search any person going in, going out, or any person coming in, I can search. Number next, break. What we can break? Not walls. I can break the lock. Don't say break the wall, break the something. I can break, but first I will try to break the lock when keys are not available. Generally, student will say break the door. Why unnecessarily break the door? First break the lock when keys are not available. If key is not there, then break the lock. Lock also not there, break the door. Door also not there, break the wall. Okay, fine. Next one, require the person who is maintaining the books of accounts. You know, generally accountant will maintain all the books of accounts. Ask the accountant to come and give the access to books. If he has not cooperated, 275B, that is a rigorous imprisonment for 2 years. How many years? 2 years. Babu, I will not arrest the accountant. I will arrest the SSC. Okay, na? Yes. How many years? 2 years. A rigorous imprisonment. Next one. After that, seize. Come again. Seize. What I can seize? You can seize anything, but don't seize stock in trade. I repeat, don't seize stock in trade. Why, sir? How you can seize stock in trade? If you seize stock in trade, unnecessarily their business will get disturbed. Kada? Don't seize the stock in trade. Seize anything. But if cash is held as a stock in trade, seize the cash. Is it possible to have the cash as a stock in trade? Yes. Yes. Example, Muthoot Finance. Okay. Or else Western Money Transfer. All the things have cash only as a stock in trade. No, that we can seize. Okay. See the word. Seize the assets, seize the books, seize everything. But don't seize stock in trade. But if cash is held as a stock in trade, can I seize it or not? Yes. Next one, deemed seizure or constructive seizure. What is that? Sometimes it is not possible to seize the assets. Example, now this is the hall. In the hall, what happened? Some people will keep the diamonds embedded in the wall only. Can I remove the diamond? No, not possible. If I want to remove the diamond, some disturbance will happen to the that kind of valuables. That is the reason what I will do. I will seize the entire room. Okay, so I will seize the room. I will not ask you to go inside. So that is called as constructive seizure. Come again, constructive seizure or deemed seizure. In case of constructive seizure or deemed seizure, if you open the room without my permission, authorized officer permission, then 275A. How many years rigorous imprisonment? You know, 2 years. Next one, another topic, place identification marks on books of accounts. I can take the extracts, I can take photocopies, I can place tick marks, I can record certain things. Next one, make note of money, bullion, jewelry. I will call some valuers, I will write each and everything. How many carat gold, how many carat diamond, everything I will write. How many grams of diamond, how many kgs of silver you have, everything we will record. Next number, power to take assistance of police. Listen, I am a income tax officer. I want to go to your house for ride. I cannot come just like that. I will ask the local police support, or else I will ask central government employees support. Nearby that some central government officers are there. No, I will ask them, hey Babu, I am going for income tax ride. Please assist me. Can I take the assistance of that fellows? Yes. It is not my obligation. It is my right. Correct? Yes. Next number, examination on oath. I repeat, examination on oath. I will ask the SSC, whose income is this? How you got this income? What is the source? I will ask everything. You have to tell everything. I will record everything. Okay. Examination on oath. Next number, last number is as follows. I will seize the assets. No. After that, I will take away the assets. Sometimes what happen in your house, I may seize the assets of your relatives or your friends. Example, I am doing search in his house. I seized everything, but in one room, 1 kg gold is there. I want to seize that gold. Immediately he told me, sir, don't seize that. I asked why. Then he told me, sir, it's not mine. It's my sister's gold. She went to Tirupati. While going to Tirupati, she kept the belongings in my home and she left the place. So please don't seize this one. What you will do? Seize, but do inquiry. In inquiry, we came to know that assets not belonging to him, that assets really belonging to sister. Then do one thing. The sister belonging to whose jurisdiction, inquire. Whether your jurisdiction or other jurisdiction. Ask him, where are you? Where she is from? He told me that she is from Tamil Nadu. Then hand it over to the assessing officer of Tamil Nadu. Particular jurisdiction assessing officer you can hand over when she is not under your jurisdiction. Correct? Huh? Within the period of 60 days from the date of lace. Lace a kurukurena. Lace means last authorization of search executed. Come again. Last authorization of search executed. Student out, what is that? Do you think that search will complete in one day? No. 4-5 days. When it completed, the last day onwards, exactly within how many days you have to hand it over? 60 days. Okay. Chalo. Next one. Other topic, very important topic. Provisional attachment. Exam point of view important. MCQ's point of view important. Provisional attachment. What is the meaning of provisional attachment? Listen. Sometimes what happen? We'll seize the assets and we will go. After that, you may sell your buildings. Who knows? That is the reason I will say, hey, you don't sell the properties. Keep quiet. Don't sell. That is called as provisional attachment. How long it is valid? 6 months. It is valid for a period of 6 months. But for that, you have to write the reasons in writing. Okay. Reasons must be recorded. After expire of 6 months, you can sell it or not. Yes. You know, best example, Mahanati, Savitri. Now what happened? She's very rich, very rich. In those days, ultra rich she is. But unfortunately, she's unable to pay taxes properly because of lack of knowledge. Immediately what happened? In her bad phase, so many department officials seized her assets. She cannot sell and she cannot use the amount for her livelihood also. That is the reason she stayed in rented premises and she died without having anything. Moral of the story, follow the compliances. Otherwise, one fine day department will take care. That is called as search and seizure. Next topic, that is your examiner's favorite question. In CA final, this question was placed for 4 times. In CMA final, they placed for twice. Presumptions. What are the presumptions to be made during search? Okay, very simple. So only 3 presumptions. I will ask say yes or no. Enough. Start. Number 1. I came to your house for income tax raid. So this is your house. Tell me, some assets are there. What is your assumption? These assets belonging to SC na outsiders. Answer SSC. Number 2. I opened books of accounts. In books of accounts, some figures are there. What is your assumption? The figures are true or false? True or false? Answer true. Or doubt, sir, false kada? No, really maybe false or maybe true, a different story. But I will start. It is true. Correct? Last one. There is some signatures. There are some executions, something like registered documents are there. Backside signatures are there. What is your assumption? Whose handwriting is that? SC or some forgery one? SC. With that assumption, we will start. But maybe correct or not immaterial. But with that assumption only I will do. Correct? Yes or no? Example, I will speak in your language. Is that shirt belonging to him only? That is my assumption. That may be right or wrong, I don't know. Okay? But that is my presumption. If you don't think this presumption, you cannot do. Correct? See, I want to drink the water. What is my presumption? No? This is drinkable water. Drinkable. Correct? Yes, that is my assumption. Ante. Then only I will taste it. After that, I found something nonsense. Oh shit. This is reality. Reality is different. Presumptions are different. So I am talking about presumptions. There are 3 presumptions. Presumption number 1, these items belonging to SSC. Number 2, the contents are true. Number 3, signature and everything purport in the handwriting of the SSC. One batch students asked me some doubt. Sir, if the contents are true, then why you are doing raid? Listen, my assumption, the figures are correct. Example, 4 lakh cash in hand, 4 lakh figure is given. What is your assumption? That figure is right or wrong? Right. So, oh, 4 lakh cash. Immediately I open the cash box and I counted the cash. 7 lakh is there. What is your assumption? Cash in hand recorded is 4. Unrecorded is 3. With that assumption, I will proceed. Kada? That's all. Next one, cash balance signature also there. What is our assumption? This signature purports to SSC's handwriting only. Okay. With this, we're done with the topic called as presumptions. Next one, I repeat, requisition. Come again. Requisition. What is the requisition? Interesting. 1 minute. 132A. I repeat, 132A requisition. So far we covered search and seizure. Now it is time for, come on, requisition. What is requisition? Start. Now, I am authorizing officer. Authorizing officer. You are authorized officer. One day I asked you, hey Babu, tomorrow morning you have to go for ride. Please come on. Then what happened? You came to my office at 11 o'clock. So 1 o'clock after having lunch, you started. Meanwhile, what happened? In SSC's house, already GST department, service tax department, excise department, customs department, enforcement directory department, everybody seized everything and left over. So evening after having snacks, only you reached the place. At the time, nobody is there. SC is in banian and lungi, ante, that's all. You can't seize the two things, kada. What he will do? He will say, sir, what about your assets and all? Then SC will respond, already taken over by other departments. Then he will inform to your boss, I reached lately. Meanwhile, all other departments are taken away. Then your boss will scold you in Sanskrit. After that, he will serve a letter to other department officials stating that, Raja, after completion of your work, please hand over the things to our waste fellow, our authorized officers. This is called as requisition. Come again, called as requisition. No, you only entered directly. That is called as search and seizure. You have not entered directly. You only seized from someone else. That is called as requisition. Best example, Gali Janardhan was there. In Gali Janardhan, no, in his house, enforcement director J.D. Lakshman Narayana, CBI, that department people only seized the assets. Then later on, income tax people has taken away. That is called as requisition. But in Malla Reddy case, what happened? Income tax department directly attacked. That is called as search and seizure. Here and onwards, you can say both the words. Assets seized under section 132 or else requisition under section 132A. That means seized directly under section 132 or else taken away from other department officials under section 132A. Correct? What is the condition for requisition? Same. Number 1, SC has black money. Number 2, notice issued but not served, not satisfied, or might be issued, may not be complied. With this, done with the topic called as requisition also. And last but not least, whatever the assets I seized, no, the assets must be utilized for recovery of taxes. Which taxes? Direct tax or any tax? Direct tax only. Which direct tax? Present tax or past tax or both? Both. But first, which tax you will collect? Present tax or old taxes? Old tax, if any, that I will recover. Next one, what you will utilize first? Cash or kinda? Cash. If still some balance is required, I will sell the kind and that amount also I will utilize. Kada? And balance assets will be released within 120 days. Within 120 days. Enough. This topic is called as search and seizure. Search and seizure. What are the circumstances to do search and seizure? 2. Number 1. SSC has undisclosed income or bullion something. Number 2. Summons issued under section 131 or notice issued under section 142(1). But SSC is satisfied or not satisfied? Not satisfied. Now, next one is 147. income escaping assessment are also known as search assessment. Very important topic. Please follow. Section number 147. Follow. Where assessing officer has reasons to believe that any income chargeable to tax but escaped the assessment, then he may assess or he may reassess as per the provisions of section 148 to 153, including income which comes to his knowledge subsequently, irrespective of the fact that the provisions of section 148A have not been complied with, except income which is part of appeal, revision, reference. Follow. Number one, who can do? Assessing officer. What is the meaning of assessing officer? Nana, total 10 in numbers, no? There, number 4 to number 8. That means additional to ITO are called as assessing officer. I repeat, additional to ITO. Additional, joint, deputy, assistant, ITO. All these members are known as assessing officers. Okay, where assessing officer has dash reasons to believe. So far we covered 143.3, 144. Now we are discussing the topic called as 147. Tell me, what is the criteria for 143.3? No answer. No answer. But to confirm that you have not understated the income, to confirm that you have not overstated your expenses, to confirm that you have not underpaid the tax. I will speak in your language. One day he is going on his bike. He also going on his bike. Traffic police not stopped him. Traffic police stopped only this person. Tell me, can you question? Why you stopped me only? Why not him also? Why not her? Can you say like that? No answer. There is no answer like that. They can stop anyone. Same way here also department can do 143.3 with respect to anyone provided if we file the return. Next one, 144. Here one thing for sure. You have not complied, you have not cooperated, that is. But 147, I can do only two circumstances. Circumstance number one, search. Number two, income escaped the assessment. Okay, reasons to believe that, reasons evidence must be there. Believe that income chargeable to tax but escaped the assessment. In that case, assessing officer may assess or reassess. First time I am doing, then that is called as assess. Second time I am doing, that is called as reassess. As for the provisions of section number 148, 149, 150, 151, 152, 153, including other income which comes to his knowledge subsequently, and even though the provisions of 148 has not complied. Example I will tell you, follow. Now, Prabhas, he filed his return and he offered the income of 100 crore. That's all. But I came to know that for that movie, Prabhas has taken the remuneration of 180 crore. Tell me, 80 crore income offered or not offered? Not offered. So I came to know that this one, Mr. Prabhas has not offered this income. So I want to do assessment of 80 crore. I want to do assessment. For this purpose, I will serve a notice. But I asked Prabhas, hey Prabhas, why did you do like this? Then Prabhas told me, last year also I did the same. And this year also for other producer also I did the same. Tell me, other income which comes to your knowledge subsequently, that figure also we can do or not? Yes or no? Yes. That's all. So, moral of the story, any other income which comes to his knowledge subsequently, irrespective of the fact that there are provisions of section 148 have not been complied, that income also we can do. But except one income. What? The income which is part of appeal. Part of appeal. Which is part of appeal I cannot verify. Which is part of appeal I cannot do recomputation again and again, because if it is in the court of law, I need to wait till the case is disposed by the judge. Understood? Fine. This is the topic. Tell me, what is 147? Number one, who can do? Assessing officer. When he can do? Reasons to believe that. What is the reasons to believe that? The income is chargeable to tax but has escaped the assessment. Example, he is a farmer. He don't have any other income except agriculture income. He has 10 crore. Tell me, can I do 147? No, because that income is not charge not chargeable to tax and not offered to tax. Both are okay. Next one, for his marriage, our friend he took the dowry of 5 crore. He married one big shot daughter. They paid a dowry of 5 crore. I came to know that issue. Can I survey notice? No, because dowry is a marriage gift. Taxable or not taxable? Not taxable. Now our friend he got Bharat Ratna, he got cash award of 10 lakhs. Tell me, he has not offered. I can go for ride? No, because 10 lakh is the amount, exempted amount. And next one, in Vijayawada floods, Mr. Chandrababu Naidu given 25,000 to each and every victim. Oh, 25,000 you got it. You are not offered to tax. I want to come for such and Caesar. Can I do? No, because that income is not chargeable to tax. Okay. A sing officer is in the opinion that it is taxable but not offered to tax. In that case, subject to provisions of section 148, 149, 140, 150, 151, 152, 153, you can do assessment. But one figure I can also verify. Which figure? That figure which comes to my knowledge subsequently, that also we can do. But one amount should not be considered. Which amount? Which is part of appeal, part of revision. Next one, notice compulsory or not compulsory? Compulsory. Notice under section 140, 148 must be given. Now follow the case. When notice can be issued, what is the time limit? That is very important topic. Friends, everybody in the class, please follow. The time limits are as follows. Maximum I can go up to the period of 3 years. Friends, next number, time limit for issuance of notice. See the word. Maximum we can issue the notice up to the period of 3 years. I repeat, up to the period of 3 years from the end of relevant assessment year. For example, in the year 19-20 previous year, Bahubali Part 1 released. For that purpose, in the year 2021, return was filed by Mr. Prabhas. Now, for that movie, he took the remuneration of 100 crores, but he offered only 80 crore. Come on, 20 crore income offered or not offered? Not offered. Means income has escaped. That we came to know that in this year, we are in the year 24-25. Can you serve the notice or not? Answer. How long we can go? 3 years. 1, 2, 3. 1, 21, 22, 22, 23, 23, 24. Sorry, sir. We are in 24-25. Time lapse. Can I go? No. But within 3 years, you can go only with the permission of CIT, Commissioner of Income Tax. But wait, in some cases, after 3 years also we can go. After 3 years. But how long? Maximum 10 years with the permission of PCIT. PCIT, provided the income escaped assessment is more than 50 lakhs. More than 50 lakh. Okay, if income escaped is more than 50 lakh, after 3 years also we can go, provided you have to take the permission of superior. Who is the superior? PCCIT or else PDZIT. Understood? Now tell me, in Prabhas case, the income escaped is 20 crore. 20 crore is more than 50 lakh or not? Yes. That too, I will take permission. They will grant the permission. So I can go. Maximum how many years we can go? Beyond 3, 4, 5, 6, 7, 8, 9, 10. So maximum period is 10 years. That is the time limit for notice. So we covered the topic 147, that is escaping assessment. Next one, 148, that is nothing but notice for escaping assessment. Notice for escaping assessment. Next number, 149, what is that? Time limit. Time limit for escaping assessment notice. Already I told you right now. Within how many years we can give that notice? 3 years. In all cases, 3 years. But if it is the amount more than 50 lakh, then 3 years to 10 years. Next one, section 150, exceptions. In case of court orders, I repeat, in case of court order, these kind of time limits not applicable. Example, in case of Jayalalitha case, Supreme Court passed the judgment after 24 years. After 24 years, Supreme Court passed the judgment stating that now Jayalalitha has undisclosed income, undisclosed bullion. Tell me, after 24 years, they passed the judgment. Can I reopen? Yes. Can I do 147? Yes. Because you wanted to make the implementation of court order. Understood? For court order purpose, these kind of time limits will not be applicable. Next one, 151, authorization. Whose authorization is required? Just now we covered. Up to 3 years, whose permission is required? Commissioner, PCIT. After 3 years, whose permission is required? PCCIT. Correct na? Yes. So this is the topic. Last one, last number. What is the time limit for completion of assessment under section 147? Answer, this is nothing but 12 months. I repeat, 12 months from the end of the previous year in which notice under section 148 was served. Now so far we covered 143.3, 144. What is the time limit for 143.3, 144? 12 months. What is the time limit for 147? 12 months. 12 months from the end of the financial year in which notice was served. But one thing for sure, 143.3 can be favorable to SC? Yes. Can be favorable to department? Yes. But 144 must be favorable to department. Department only. And 147 also must be favorable to department. Not favorable to any SSC. Understood? Next. In case of search and seizure, I repeat, search and seizure, simply we can do the assessment under section 147. 147 we can invoke the provisions of 147 in case of search and seizure. Nana, this is the topic with respect to 147 is concerned. Now I wanted to clarify certain things. Compulsory you have to give these notices for the purpose of these assessment subject to fulfillment of some conditions. Honestly speaking, there are 3 assessments. One is 143.3, one is 144, one is 147. What is the notices required? Tell me. Here 143 subsection 2. Here 144. Here 148. And tell me, what are the conditions for this? Answer, no condition. But only the thing is, return must be filed. That to assessing officer want to confirm that you have not cheated the government. Okay. Next one. 144. What is that? You are not cooperating or you have not complied. Next and last one, 147. What is that? Escaping assessment means income taxable but not offered to tax, or else what is that? Search and seizure. After search and seizure also we can do, but here one procedure is specified under section 148A. We have to do inquiry. After inquiry, if I confirm, then only notice can be issued. But in case of search and seizure, that kind of inquiry not required, because search happened itself, it is indication for black money. Okay, therefore we can continue the search and seizure. After that, immediately we can go for 147. Nana, these are the assessments we have completed so far. 143.3, 144, 147. But one thing for sure, in case of 147, no beneficial order will be given to the SSC. Only it should be beneficial to the department. Understood? Yes. Friends, next part is appeals and revision. Appeals. Follow. First point is SSC will file the return. After that, assessing officer will pass the assessment order. After that, assessing officer may keep quiet, or else if he has not satisfied, simply he can go for appeal. Nana, appeal has exactly 4 authorities. First one is called as CIT appeals. I repeat, CIT appeals are also called as JCIT appeals. Second one is called as ITAT, Income Tax Appellate Tribunal. Next one is called as High Court. Last one is called as Supreme Court. I repeat, first one is called as CIT appeals. Next one is called as ITAT. Next one is called as High Court. Next one is called as Supreme Court. Next one, who is giving the complaint is called as appellant. I repeat, who is given the complaint is called as appellant. On whom the complaint is given is called as respondent. I repeat, against whom the complaint is given is called as respondent. Respondent. Next one, to whom the complaint is given is called as appellate authority. Appellate authority. Okay, ready, start. Who is the appellant in first case? SSC. Against whom the complaint will be given? Assessing officer, department. Who is the appellate authority? First appellate authority. CIT appeal or JCIT appeal. First you have to make an appeal within 30 days. Within 30 days from the date of order. After that, within 1 year, they may pass judgment. Within 1 year. That's all. It is first appeal. After that, if you are not satisfied, then SCR department. In case of ITAT, anyone can go. Not only SC, maybe department can go to ITAT within how many days? 60 days. After that, ITAT may pass the judgment within how many years? 4 years. Within 4 years. Suppose if you satisfied, keep quiet. Otherwise, those people who are feeling injustice, happily they can go to High Court. They can go to High Court within 120 days. Okay, na? Yes. After that, High Court will give the judgment. Based on the judgment, SCR department can go to Supreme Court within 90 days. Within 90 days. So after that, Supreme Court will give the judgment. So moral of the story, those people who have given the complaint, the fellow is called as appellant. Appellant. Against whom the complaint is given is called as respondent. Next one, whatever the complaint you have given is called as appeal. And against whom the complaint is given is called as respondent. Who have given the complaint is called as appellant. And to whom the complaint is given is called as appellate authority. Next one, all of you. Appeal is not a inherent right. Not a inherent right. You can't give complaint on each and every transaction. Example, your girlfriend told you, wait for 2 minutes, I will come back. Now tell me, is it possible exactly to come out in 2 minutes? No. Or else in one cinema audio function, Mahesh Babu said, Amma isari mande. Okay, but that is Brahmochavam movie, utter flop. Can you give the complaint? No. You can't give the complaint on certain things. The reason is that is not a inherent right. Okay. Now here also everything not appealable. Not appealable. You don't like the face of assessing officer. Can you give the complaint? No. Not inherent right. But it must be express right. Express right means it must be mentioned in the Income Tax Act. Then only we can do. Answer, appeal can be made channel wise. Channel wise means first, second, third, fourth. Suppose you are staying in one area where High Court is very nearer. Can you directly go to High Court? No, Raja. You can't go like this. First you have to go to CAT appeal. After that you have to go to ITAT. After that you can go to High Court. After that last you can go to Supreme Court. But for your info, certain things are not at all appealable. Not at all appealable. Number one, interest under section 234 ABC is not appealable. Come again. Interest under section 234 ABC is not appealable. Why, sir? Why? Reason very simple. You have not filed the return in time. That is the reason I asked you to pay interest. So not appealable. Next one. Revision order under section 264 is also not appealable. Last one. ITAT order with respect to question of fact. I repeat, with respect to question of fact is also not appealable. These are not at all appealable anymore. Next one, we are going to cover the topic CIT appeal. Start one by one. Number one, what is the first appellant authority here? CIT appeal are also called as JCIT appeal. Next one, all of you. Now who can go? Answer, I already told you, SSC. Who is the appellant? SC. Who is the respondent? Assessing officer. What is the time limit? 30 days. 30 days from the date of order. But one thing for sure, they can condone the delay also. In case of reasonable circumstances, they can extend the time. Next number, form number 35. Form number 35. That too, you have to submit the following documents. Number one, statement of facts. I repeat, statement of facts. Number two, grounds of appeal. Number next, copy of order. Okay, photocopy of order. Last one, proof of payment of tax. Compulsory you have to pay tax. After that only you can go for appeal. If you are unable to pay the tax, you have to request for stay order. Come again, what? Stay order. Next one, all of you, once you made an appeal, compulsory department will serve a notice. I repeat, CIT appeal will serve a notice. They will fix the time, they will fix the date, they will fix the NU. After that, right of attendance. You can happily attend that particular hearing, you can attend. you can attend in person or you can send your representative also. Sometimes they may adjourn the case. How many times they can adjourn, that is their discretionary power. After that, C8 appeal may inquiry also. They will do inquiry. After that, they will pass the order within the period of 1 year. I repeat, within the period of 1 year. But for your info, the 1 year time limit is not mandatory. 1 year time limit is optional. Student doubt, what is the meaning? Answer, you cannot compel the judge, give the judgment immediately. It is not a Maggie noodle. Okay. If it is the Maggie noodle, 2 minutes is more than sufficient. It is not like that. Sometimes it may require much time. What is the maximum time limit to pass the judgment? 1 year. But it is only recommendation in nature, but not mandatory. But the copy of order will be given to department as well as to SSC. This is the chapter of CAT appeals. But here some important questions are there. Question number 1, start. Additional grounds can be admitted or not. This is question number 1. Additional grounds. Additional ground means you given the complaint on one matter. Okay. But at the time of hearing, you want to ask other matter. Anyone? Can you ask any other matter? Answer generally no. But in one time, yes. See the word C8 appeal may allow any other matter. Come again. C8 appeal may allow any other matter. Okay. Follow. That is the point. Next number, all of you see the word. Next one, another point. C8 appeal can review their judgment or not. That is the question. Take it for granted. No one can change the judgment. Take your own time. Pass the judgment, but that cannot reviewed. Okay. Next number, other topic. Important topic. Additional evidence can be admitted or not. Anyone? Which you have not disclosed before assessing officer. The evidence can be disclosed before C8 appeal or not. Exam question. Answer yes. When you can submit, number 1. In those days, you submitted, but assessing officer rejected. Assessing officer rejected. Number 2. Assessing officer provide the opportunity, but SSC unable to produce the evidence. Number next. Assessing officer not demanded such evidence, or else assessing officer has not considered that evidence. Once upon a time you submitted but not considered, or you unable to submit. In the following cases, you can submit the evidence before CIT appeals. That is another question. Next one, what is the time limit for passing the judgment? 1 year. Next one, last one. Now surprising topic. CIT appeal can increase the tax? Yes or no? Yes. Can decrease the tax? Yes. Can cancel the tax liability? Yes. They can do anything. They can reduce, they can increase, they can confirm, anything they can do. But only the thing is, they does not have power to set aside, and they does not have power to refer back to assessing officer for a fresh assessment. They cannot say the assessing officer do the fresh assessment. They cannot say. And next one, they have power to review or does not have? Does not have power to review. That is the topic with respect to CAT appeals are concerned. Next, examiner's favorite question, ITAT. ITAT means Income Tax Appellate Tribunal. Raja, please follow. Number 1, questions are 2 types. Law is 2 types. One is called as question of law. One is called as question of fact. Now with respect to question of law, we can go to first CAT appeals, or else we can go to ITAT, or else we can go to High Court, or else we can go to Supreme Court. Any time you can go to any time, anything. Okay, but you have to go in channel wise. But as far as question of fact is concerned, first we can go to CAT appeal or JCIT appeal. Okay, or else after that we can go to ITAT. But I cannot go to High Court. I cannot go to Supreme Court. Why? The reason very simple. As far as question of fact is concerned, High Court and Supreme Court does not have that much of time to discuss these silly matters. Understood? So, with respect to question of fact is concerned, the final authority is nothing but ITAT. ITAT is the final fact finding authority. Come again. Final fact finding authority. But Supreme Court is the final thing in case of question of law. But which is final in case of question of fact? ITAT. Can I go to High Court on question of fact? No. Can I go to Supreme Court on question of fact? No. Next question. What is the ITAT? Income Tax Appellate Tribunal. Nana, it is constituted by central government. It consisting of 2 members. judicial and accounting member. Judicial member means who is in advocate practice for last 10 years, or else who is chartered accountant for last 10 years can act as a accounting member. Next one, it consisting of president, vice president, judicial member and accounting member. And next one, all of you, the judgments will be passed by constituting bench. But if the transaction value, if the total income of the particular case does not exceed 50 lakh, then the case will be disposed by a single member. If the amount is more than 50 lakh, then it will be disposed by, that is called as special benches. What is the special benches? You know, now it consisting of 3 or more members. Come again, 3 or more members. So that's all. This is the topic with respect to judgment is concerned. But one thing for sure, they will pass the judgment based on one principle, that is called as majority prevail. Come again, majority prevail. So majority people, what they said, that is only the answer. Next one, ITAT discuss only question of law na question of fact, both. But with respect to question of fact is concerned, their final fact finding authority. And now tell me one by one, who is the appellant, SC or department? Both. Correct. Sometimes SC can come and assessing officer also can come. When assessing officer can file if he has not satisfied about the judgment of CAT. Next, who is the respondent? Reverse. What is the time limit? 60 days from the order of CAT. Next one, fees. Free or fee? Fee. What is the form number? 36. And notice must be given to others, and they will adjourn the case and they will fix the time, date, venue, everything. They will pass the judgment. What is the time limit to dispose the case? Answer, 4 years. But if stay order is granted, then the overall time limit is 180 days. If stay order is granted, 180 days. If stay order has not granted, then what is the time limit? 4 years. Next one, another topic. ITAT can admit the additional evidence or not? ITAT can admit the additional evidence or not? Yes. How CAT can admit? Same way, ITAT also can admit the additional evidence, kada? Yes. Last one, they have no power to increase the tax. I repeat, CAT appeals or JCAT appeal can increase, but ITAT can increase or cannot increase? Cannot increase, but they can reduce or they can confirm. If they are not satisfied, they can set aside the file and they will ask the assessing officer to do the fresh assessment. Next one, they cannot review the order. They cannot review their own judgment again and again. That's all. Next one, ITAT cannot review its order. ITAT is the final fact finding authority. With this, done with the topic called as ITAT. Now tell me, SSC, assessing officer. Step 1, he will file the return. Step 2, assessing officer pass the order. Based on the order, you can go to, come on, JCIT appeal or else CAT appeal. What is the time limit? 30 days. After that, they will pass the judgment within 1 year. Now, it may be favorable to SC or may not be favorable to SC. Anything. So, then aggrieved party may go to ITAT. What is the time limit? 60 days. Within how many days they will pass the judgment? 4 years. If stay order is granted within how many days? 180 days. Sometimes it can be extended to maximum 365 days. After that, SCR department, they can go to High Court. After that, what is the time limit for that? 90 days. Sorry, 120 days. After that, High Court will give the judgment. How many days? I don't know, because that is as per civil court procedure. Then SCR department, they can go to Supreme Court within how many days? 90 days. No, this is the topic. But High Court, who is the appellant? Answer, SCR department. Who is the respondent? Other party. What is the time limit? 120 days. But in one topic I covered already, bar. On bar matters, we can go to CAT appeal? No. Can I go to ITAT? No. Then whom I can approach? High Court. Correct? Yes. Next one, last one, Supreme Court. Now, who is the appellant? SSC or department? Okay, na? SCR department. Question of law or question of fact? Question of law, but not question of fact. Next one, what is the time limit? 90 days. Next one, Supreme Court can review their judgment or not? Yes. Only Supreme Court only can review their judgment. But for your info, ITAT, High Court and Supreme Court, they will pass the judgment only by constituting bench. Okay. For example, Ayodhya case also disposed by one bench. Bench means it consisting of panel of judges, group of judges. They will follow one principle. What is that? Majority prevail. So this is the topic of income tax appeals. But here important topic is ITAT. Exam questions are as follows. Past exam question. Question number 1. ITAT can review its order. Comment. Answer, no. ITAT can rectify its order. Yes. Rectification is different. Review is different. Rectification means mistake can be rectified. Review means change of decision. They can change the decision or not. No. Next question. ITAT can admit the additional evidence. Yes. Next topic. ITAT can increase the tax. No. CA appeal can increase the tax. Yes. Last question. ITAT is known as fact finding authority. Final fact finding authority. Comment. Yes. The reason, with respect to question of fact, we can approach only CAT appeal or ITAT, but we cannot approach High Court and Supreme Court. Therefore, it is known as final fact finding authority. Clear, sir? Everyone? Yes. With this, done with the topic called as appeals. Friends, next important topic, very important topic, that is revision. Please follow. IT authorities are as follows: 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. The first one is called as CBDT. Second one is called as PCC, Principal Chief Commissioner or Chief Commissioner. Next one is Principal Commissioner or Commissioner. Now, here two more authorities also there. That is PDGIT, Principal Director General of Income Tax, or DIT, Director General of Income Tax. After that, you will find what is that? Now, that is Additional Commissioner. Next one, Joint Commissioner. Next one, Deputy Commissioner. Next one, Assistant Commissioner. Next one, ITO, Income Tax Officer. Next one, Tax Recovery Officer. Last one, Inspector. Now, please follow number 4 to number 8. That means additional, joint, deputy, assistant, ITO, they are called as assessing officers. Now, Raja, when they are assessing officer, they will pass the assessment order. Okay. The assessment order may be under section 143.3 or else under section 147 or 144. Correct? Yes. Sometimes they will give intimation also under section 143 subsection 1. Correct? Yes. Now what happened? Here one more fellow is there. The fellow is nothing but commissioner. Now what commissioner will do? That is nothing but revision. Come again. Revision. What is the revision? Follow. The order passed by assessing officer is erroneous. Erroneous and prejudicial to interest of revenue. I repeat. Assessing officer passed one order which consisting of so many mistakes, and because of that mistake, government lost the amount. Tell me, in that case, assessing officer order is erroneous and prejudicial in nature. In that case, commissioner can do revision of that order. That's all. This is called as revision under section 263. Come again. Revision under section 263. That's all. Tell me one by one. Who will do? Commissioner. When he can do? Order of assessing officer is dash erroneous and prejudicial to interest of revenue. Now free na fee na? Free. For SSC no fee because that is not favorable to SC. Correct? Yes. How it will be done? Own motion or application? SC will ask you, sir, please slap me. He will ask you like that? No. It is free, that too, not application. On own motion. Who will do? Assessing officer or commissioner only will do. Correct? Yes. Next one. What is the time limit? Answer. Time limit is 2 years. Come again. Time limit is 2 years. Within 2 years, they will pass the order. What kind of order they will pass? They will pass beneficial order to SC or beneficial order to department. Beneficial order to department. But two conditions compulsory. Number 1, erroneous. Number 2, prejudicial to interest of revenue. In the following cases only, we can do revision under section 263. Okay. Now, how the order can be passed? Number 1, Can they increase the tax? Under 263, government can increase the tax. Yes. Can modify the figures? Yes. Can decrease the tax? No. Can cancel the assessment and can direct the fresh assessment? Yes. Should not be favorable to assess. So far I told you three things. 143.3 favorable to SC. Yes. 144 favorable to SC? No. 147 favorable to SC? No. 263 favorable to SC? No. 264 next topic favorable to SC. Okay, chalo. Next one. Opportunity of being heard must be given or not given. Must be given or not given. Must be given because it's last to the SC, no. Therefore, opportunity of being heard must be given. Next one, all of you. Time limit is how many years? 2 years. Maximum 2 years. 2 years from the end of the financial year in which the order sought to be revised is passed. When the order was passed, maximum period is 2 years. That's all. This is the topic called as revision. Okay, fine. You shall we go for appeal or shall we go for revision? Answer, choice is yours. You can go for appeal or you can go for revision. Appeal, if you want to go, you have to approach CAT appeal. If you want to go for revision, you have to go for not CAT appeal, you have to go for CAT, only commissioner. Understood? Yes. But 263 is favorable to only for department, not favorable to the SSC. With this, done with the topic. Next topic, 264. What is 264? Nana, 264 is nothing but which is beneficial to the SSC na assessing officer. SSC. Very, very important topic for exam point of view. Please follow. Ready? Start. What is 264 revision? Number one, any order passed by subordinate authority which is not favorable to the SSC. In that case, assessing officer on his own motion, I repeat, on his own motion or application made by the SSC, in that case, commissioner can revise the order for the favor of CIT can revise the order for the favor of SSC. That is called as revision under section 264. Now start. SSC may make an application. Step number 1, application, or step number 2, department only can do on own motion. In that case, they can do revision under section 264 in favor of SSC. That's it. Next one, opportunity of being heard must be given or may not be given. Answer, may be optional. If really favorable to SC, no need to give. Suppose it is not matching the requirement of SC full extent, in that case you have to give. For example, SC is expecting the refund of 8 crores, but we are giving refund only 3 crore. Tell me, we are not giving the refund of 5 crore. Kada? Now can I give opportunity of being heard? Yes. Suppose SC expecting 8 crore refund. I am also giving 8 crore refund. Anybody in the class? Now shall I need to do any opportunity of being heard must be given? No. That's all, Nana. This is the topic. What is the time limit? You know, maximum time limit is 1 year. I repeat, 264 can be done within the time limit of 1 year. Maximum 1 year time limit only. Okay, see the word. The time limit is only 1 year. Next one. Tell me the difference between 263 and 264. When we can do 263 revision, when we can do 264. Number 1, 263. The order of assessing officer has two things. One is erroneous and prejudicial to interest of revenue. Own motion or application? Own motion. Next one, FENA. Answer, no fee. No fee. Next one, opportunity of being heard must be given or not? Yes. What is the maximum time limit? 2 years. Very good. Next, come to this topic. 264. What we can do? Answer, any order other than 263, which is erroneous and prejudicial to interest of SSC, then it can be revised. Own motion or application? Both. Maybe own motion or application. FENA. Fee. How much? 500. Oppo mandatory or optional? Optional. Next one, maximum how many years? 1 year. But one thing for sure, common points also there. Who can do 263? Commissioner. Who can do 264? Commissioner. 263 is favorable to whom? Department. 264 is favorable to whom? SSC. Last one. It is partial merger, but it is total merger. Student doubt. What is partial merger? What is total merger? Now listen. Partial merger means if anything is pending in the court. I repeat. Listen. This is the assessment order. Out of that, this part is only pending in the court. When this part is only pending in the court, can I go for appeal? No. Other part, can I go for appeal? Yes. This concept is called as partial merger. Only those matter which is pending in the court cannot be appealable or cannot be revised or cannot be rectified. But other matter can be revised. This concept is called as partial merger. Total merger means if any part is pending in the appeal, that part I can't change, other part also we can't change. Total I cannot change. This is called as total merger. This is called as total merger. Tell me, under 263, under 154, under 147, everywhere there is a concept called as partial merger. You know what is partial merger? Which is pending in the court that you cannot change. Other part we can change. But total merger means the part which is pending in the court also we cannot change, other part also we cannot change. That is there only in one section, that is 264. Okay, na? Yes, that's all. Last sentence, that is as follows. Who will do 263? Commissioner. But I am not satisfied with that order. Can I go to court of law? Yes. Which court? C8 appeal? No. I can go only for ITAT because complaint always will be given to superior. Kada? Here superior means ITAT only. So against the order of CAT, we can go only for ITAT. Please come to the last one. 264 order. Is it appealable or not appealable? Not appealable because under 264, you are already doing the benefit to the SC. When you are doing benefit to the SC, then how you can go for further appeal? Can you go or you cannot go? You cannot go. That's all. Order under section 264 is not appealable. That's all, Nana. It is the topic with respect to 263, 264 revision is concerned. Once again, I want to revise. I request you all follow. Start. Revision under 263, 264. 263. Any order of assessing officer which is erroneous and prejudicial to interest of revenue. 264. Any order other than 263. Next one. Can order under appeal can be revised or not? No. If it is part of court, cannot be revised. Other part can be revised. But as far 264 is concerned, both the parts we cannot change. Next one. Measure. Just now I told you. Partial measure as well as total measure. Where it is total measure? 264. Where it is partial measure? 263. Next one. Own motion or application? 263. Only own motion. So 264. Own motion or application. Fee. 263. No fee. 264. 500. Opportunity of being heard must be given in 263. Yes. Is it mandatory under 264? No. Optional. Next one. Nature of order. Ultimately, the judgment, the order given under 263 must be favorable to department, whereas order given under 264 must be favorable to the SC. Time limit. What is the time limit for 263? 2 years. What is the time limit for 264? 1 year. Next one. I am not satisfied against the order of 263. Can I go to further appeal? Yes. Whom you can approach? ITAT. I am not satisfied about order of 264. Can I go to court? No. Because already 264 itself beneficial to the SSC. Then again, how you can go to court of law? You cannot go. That's all. This is the topic called as revision. Okay. With this, we're done with the topic appeal as well as revision. In appeal, the most important thing is ITAT. In revision, most important thing is 264. Okay. Chalo. Our next topic is section number 154. Most important topic. That is nothing but rectification of mistake. I repeat, rectification of mistake. Please follow. Sometimes what happen? When SSE file the return with the assessing officer, then assessing officer will pass the assessment order. But the assessment orders may consisting of some mistakes. To rectify the mistakes, the same authority will issue another order that is called as rectified order. Rectified order. The powers are there under section 154. Who will do the rectification? Answer: IT authorities only can do. Which authority? IT authorities. How many IT authorities are there? Total 10 in number. I repeat, total 10 in number. Already we covered 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Number 1, CBDT. Number 2, CC, C, additional, joint, deputy, assistant, ITO, tax recovery officer and inspector. Nana, all these members are called as IT authorities. So any member can rectify it under section 154. Wait, we can do assessment. Only assessing officer additional to ITO can only do assessment. Next one, who can do revision? Only commissioner can do revision under 263 or 264. Who can do appeal? Separate authority is there. CIT appeal only can do. Correct? Yes. And next one, another person is there. ITAT. Anyone? ITAT can do any revision? No. ITAT can do any rectification under 154? No. Only these people only can do. High Court can do any rectification under 154? No. High Court is not a IT authority. Correct? Next one, Supreme Court can do any rectification under 154? No. Under 154 only one person can do. Who is the fellow? IT authorities. IT authorities. So that's all. What are the condition? Number 1, there must be mistake. There must be mistake apparent on the record. That mistake may be question of law or may be question of fact. That can be rectified by IT authorities. That's all. What is the time limit? Maximum 4 years. Come again. Maximum 4 years. Example. In the year 19-20, we earned the money, income we earned. But 20-21, we filed the return. Whereas 21-22, we got the assessment order. In this assessment order, some mistakes are there. Can we rectify or not? We are in the year 24-25. Yes or no? Check. 22-23, 23-24. Come on. 24-25. Thank God we are in the third year. Can I rectify? Yes. We are in fourth year. Can we rectify? Yes. We are in fifth year. Can you rectify? No. No. That's all. This is the topic called as rectification of mistake. One by one. Start. Who can rectify? IT authorities. Don't confuse. Not ITAT. IT authorities. Next. How many IT authorities are there? 10. Next one. Own motion or application? Both. Sometimes SC will ask. Or else sometimes department will do. Next one. Free na fee na? No fee. No fee. Free. Next one. Opportunity of being heard must be given or not? Maybe, may not be. If the order is passed in favor of SC, then no need to give. It is passed in favor of department, then opportunity of being must be given or not? Yes. Next one. Partial measure or total measure? Partial. Means if it is pending in the court, we cannot change. Other than that, we can rectify or not? Yes. Next one. How long we can rectify? 4 years. After 4 years, can we rectify or not? No. Last question. A assessing officer rectified the mistake. Then they passed the revised order. You have not satisfied. Can you go to court of law or not? Yes. Yes. Correct? Huh? Yes. This is the topic called as rectification of mistake under section 154. Now tell me, how many remedies are available to SC? Remedy number 1, he can go for appeal. Remedy number 2, he can go for revision. Remedy number 3, he can go for rectification of mistake. Remedy number 4, he can go with CBDT. In some cases, we can make an application with CBDT. First one, appeal. Tell me what is the first one? JCIT appeal or CIT appeal. Second one, ITAT. Third one, High Court. Last one, Supreme Court. Which is the final fact finding authority? IT8. Next one. Revision under section 263 or 4? 4. Rectification under section 154. That's all. Tell me, which is the best one, sir? Can I go for appeal? Can I go for revision? Can I go for rectification? Answer choice is yours. If it is small mistake, then you can request sir rectify. That is called as rectification. Next one. Now that is a mistake where you need a superior's permission, superior's authority required. Then you can go for revision. Correct? I don't want to go to revision. I want to go to appeal. Then happily you can go to CAT appeal, ITAT, High Court, Supreme Court. But in appeals, formalities are more. You have to affix the stamps. You have to follow the time limits and all. Correct? But which is the maximum time limit it has? Rectification. How many years? 4 years. Revision how many years? With respect to 263, 2 years. With respect to 264, 1 year. What is the time limit for appeal? Very less. 30 days, 60 days, 120 days, 90 days. That's all. This is the topic called as revision. Friends, next topic, that is IT authorities. Not important for exam point of view. Only one topic is most important, that is called as survey. That is important for exam point of view. But anyhow, IT authorities are as follows. First one is called as CBDT. Next one is called as Director General or Principal Director General, Chief Commissioner or Principal Chief Commissioner. Third one, come on, Director or Commissioner or Principal Commissioner. Last but not least, what is that? CIT appeals. Whereas number 4, additional. Number 5, joint. Number 6, deputy. Number 7, assistant. Number 8, ITO. Number 9, TRO. Number last, inspector. Now there, first one, I want to discuss about CBDT. Nana, listen. In 2 special cases, we can approach CBDT. Important for exam point of view. Number 1, in case of last return, you have to file the return in time, kada? Yes. But if you file last return belatedly, the loss cannot be carried forward. But in one case, we can carry forward. When? If you take the permission of CBDT. They have power to condone the delay or not? Yes. Next topic. In case of return of income, if you file belatedly, compulsory you have to pay interest under section 234A. But no one can waive this interest, kada? This interest is mandatory or optional? Mandatory. But only one person can waive. Who is the fellow? CBDT. Okay, fine. This is one important topic for exam point of view. And the most important area is as follows. Number 1, powers of IT authorities. After that, power to survey. These 2 questions are important. Let's discuss the survey. Ready? Start. Number 1. Sir, today our friend marriage. A sing officer can attend his marriage and can inquire about the expenditure spent. Yes. Yes. Next one. You are constructing very big building. Department can survey notice. Yes. Department can do inquiry. Yes. That concept is called as, come on, what? Survey. Come again, what? Survey. Power to survey. Who can do? Number 1, commissioner can do. Who? Commissioner. Or else a sing officer can do. TRO can do. For limited purpose, inspector also can do. What they can do? Answer, they can do survey. What is the meaning of survey? Listen, our class is going on like this. Immediately, department official may enter and can ask, have you paid the fees? Yes. They can ask how much you are paying the fees. They can ask yes, and they can calculate, and they can check your return, whether you have offered the income or not, they can check. This concept is called as survey. Other example, in Chandana Brothers, RS Brothers, so many customers are waiting. They are purchasing sarees. Department official can go and check whether they are paying the money cash or bank, whether they are getting the bills or not, whether the transactions are recording properly or not, they can check. Next one, you are constructing very big building. They can enter and they can ask, Babu, this is the take door. How much is the cost? They can ask or not? Yes. So department people can do survey. Generally, CA inter or CMA inter students will have doubt. Sir, how department people know all the things? Answer, They will do what? Survey. Now some people doubt, sir, what is the difference between search and seizure and survey? Search and seizure means there are already evidence that you have black money. Okay, and there is an evidence that you are not satisfied with the notices and all. But survey not like that. I'm walking on the road. Casually I can enter your premises. I repeat, casually I can enter. But when proceedings are pending, then only commissioner can enter or other people can enter. Even though proceedings are not pending, still one fellow can enter. Who is the fellow? Commissioners. But assessing officer, TR1 inspector can enter only with the approval of JCIT. Next one, where they can enter? They can enter business place. They can enter business place. They can enter charitable trust. They can enter any place also. I repeat, they can enter your business premises. They can enter charitable trust also. They can enter any other place also. When they can enter? This is the question. Answer, the time limits are as follows. Number one, in case of business place during business hours. Now see the word in next gully, Reliance Jewels is there. There on the board they will write the timings. Correct? Within the set timings only we can enter. That is called as business hours. So business time only you can enter. Next one, other place. Other place means maybe house or something. When we can enter? After sunrise we can enter. But you have to enter before sunset. Don't change it. Okay, don't reverse it. Now after sunrise but before sunset we can enter. Okay, chalo. Nana, this is entry time, not exit time. Next topic, what we can do in survey? Answer, we can inspect the books. Casually I can enter and say, hey, give me the books. I can verify. Next one, I can check the stock in trade, how much you have. I can place identification marks. I can make note of inventory. I can count. And I can impound the books. I cannot seize the assets, but I can impound the books for maximum period of 15 working days. Okay. Next one, I can record your statement and I cannot seize the asset. I cannot seize the asset. This is the topic called as survey. This is the topic called as survey. Now ready, start. Who will do survey? IT authorities. Commissioner can do, others also can do, assessing officer, anybody. But commissioner directly can do, but other people can do only with the approval of JCIT. Which place we can do? Business or any place? Anything. Even event? Yes, I can enter into the event also, but don't disturb the event. Event you can enter and you can do survey only after completion of event. Only after completion of event. Suppose you entered into one marriage function, then you can do survey or not? Yes. When? After completion of marriage. But you cannot do at the time of main rituals. You cannot say apandi. Okay. You can do only after completion of such function. Can you seize the goods? No. Can I impound the books of accounts? Yes. How long we can impound? 15 days. That's all, Nana. This is the topic called as survey. Okay. Chalo. Friends, our next topic is assessment of various entities. The entities are as follows. First one, individuals. Second one is HEF. Next one is AOPBY. Next one is partnership firm. Next one is LLP. Next one is companies. Next one is that is electoral trust. Next one is political party. Next one is charitable trust. Next one is cooperative society. And other topics are as follows. Now that is called as business trust. Next one is called as investment fund. Next one is called as securitization trust. Out of that, the most important A category topics are, first one, company is important, and partnership firm and LLP anyhow somehow important. These are most important, and trust also important. And business trust, investment fund and securitization trust, this is a C category, important but somehow less important, or else you can think as a B category. But other topics are Z category. Okay na? Fine. Or else you can say C category. Other topics are C category. I am not insulting other topics, but I am highlighting this one. For the purpose of A categories, first you have to cover companies. For companies purpose, compulsory you have to cover book profit computation. Sing a song. I R P S E D D D R A F N C Z R. Negative adjustments. A doctor BF STD AIF NCLR. That computation is most important. Take care. Next number, partnership form and LLP. Here two topics are only important. The topic is section 40 small b. What is that? Interest. And in case of LLP, some conditions are also relevant. We will discuss this topic. Follow. First one, partnership form. Nana, partnership forms are subject to AMT or MAT? AMT, not subject to MAT. Next question, what are the conditions to be satisfied for the purpose of interest and for the purpose of salary payment? Okay, that is very important topic for exam point of view. Please follow. Nana, two things we need to discuss. First one is called as payment of interest and the second one is called as payment of remuneration. That is called as section 40 small b. See the word. Salary, interest, remuneration, fees, commission, brokerage, anything paid by the firm to partners. Number one, interest paid. Allowed or not allowed? Allowed, but subject to conditions. Remuneration, allowed or not allowed? Allowed, subject to condition. What are that we are going to cover? Ready, start. First one, in the hands of partnership firm, the deduction will be allowed subject to fulfillment of following condition. Condition number one, payment of interest must be authorized by the deed. If you open partnership deed, in the deed it must be mentioned that yes, partners are eligible for interest. Number two, the payment of interest must be pertaining to the period before execution of deed or after execution of deed? After execution of deed. Next one, what is the maximum interest? 12% per annum. I repeat, 12% per annum. But interest can be paid to sleeping partner, working partner, nominal partner, all partners, because interest will be paid on capital, right? Yes. Not working partner, any partner can be paid. Kada? Yes, this is the topic. But exam question, one item they asked the question like this. Listen, deed silent. I repeat, deed is silent about the interest payment. But deed authorized the payment of interest from August onwards. Means April month silent, May month silent, June silent, July silent. 8th month onwards they amended the deed. Yes, they are eligible for interest. Which month onwards? August. Now tell me, I wanted to give interest payment for throughout the year. Right or wrong? Wrong. You have to pay the interest only from the month in which deed was authorized. Which month onwards? August. But in that attempt, what he did, he has given the interest payment throughout the year. Then what you have to do? You have to add back the entire interest and you have to allow only interest payment from the period of August. What is the maximum interest? 12% per annum. Some student doubt in the class, sir, 6%? No, correct. As far as Partnership Firm Act, the maximum interest is 6%. But as far as Companies Income Tax Act is concerned, the maximum interest is 12%. Okay, chalo. Next topic, last topic of its kind, that is called as payment of salary or payment of remuneration. Allowed or not allowed? Allowed, subject to fulfillment of following condition. Condition number one, it must be authorized by the deed. Same point. And it must be pertaining to the period before execution or after execution? After execution. Next number, working partner or sleeping partner? Not all partners, only working partner. Why we will pay salary to sleeping partner? We will not pay. We will pay salary only to working partner. But our friend doubt, but you are paying interest kada. Even though he is sleeping, his money is not sleeping, his money is active kada. Interest will be paid on capital contribution, but salary will be paid for your work done by you. Correct? Yes. Moral of the story, it is only paid to the working partner, that to individual partner. Company can be a working partner? No. Natural human being only can be a working partner. So you only deserve a salary. Next, last. What is the maximum remuneration? In case of loss or in case of first 3 lakh of book profit, the answer is as follows: 1.5 lakh or 90% of book profit, whichever is higher. But whereas in case of balance book profit, answer how much? 60% of book profit only allowed. Nana, this is as per deed only. Next and last, how to calculate book profit? Don't sing a song. IRP. No. Here, book profit computation as follows. Take net profit. After that, anyhow, some adjustments you can do. Interest, if you have not debited, that you have to deduct. But remuneration, if you have debited, that you have to add back, because remuneration I want to calculate right now. Therefore, remuneration you have to add it back. Then you will get the book profit. On that book profit, you have to calculate the remuneration up to first 3 lakh. What is the answer? 90% or 1 lakh 50, whichever is higher. Balance amount how much? 60%. Correct? Huh? Yes. But for your info, if you have huge profit, you can take huge amount of remuneration. Correct? Huh? If you have huge profit, obviously you can take huge amount of remuneration. That's all. With this, done with the topic called as remuneration and interest payment with respect to partnership firm. Similar provisions are applicable for LLP also. Okay. But in LLP, 3 special points are there that you have to learn. Come on. Who is the signing and verification authority of LLP return? Designated partner. That is one point important. Second one, company converted into LLP. I repeat, company converted into LLP. Then what are the consequences? Number 1, company means MAT is applicable, MAT credit is there. Anybody, that MAT credit can be carried forward or not? No, lapse. And the last question, another important question, start. Company has certain deductions. Let us say preliminary expenditure. I repeat, preliminary expenditure. The preliminary expenditure can be carried forward or not? That is the question. Answer, yes. But not for full year, only for unexpired period. I repeat, only for unexpired period, subject to fulfillment of conditions specified under section 47 subsection 13 small b. If these conditions satisfied, then only the company's deductions can be carried over by LLP for unexpired period. Suppose they have unabsorbed losses. Yes, that unabsorbed losses of company also can be carried forward by LLP only for unexpired period. Only for unexpired period, provided conditions are satisfied. Those conditions which are stipulated under section 47 subsection 13 small b are satisfied, then only we can do. This is the important topic with respect to partnership form as well as LLP is concerned. But they won't ask direct question like this. They'll ask combination question like PGBP plus partnership form plus AMT. I repeat, PGBP, partnership form, AMT. If they ask partnership form computation question, obviously they may add interest topic, means IFOS. They may add capital gain 1 or 2 words also they will ask. Next one, another combination, most popular combination, PGBP plus company plus MAT. This is the first priority topic. MAT plus PGBP plus company topic. These topics they will ask. Okay, chalo. Friends, next one, A category topic, ICDS. Out of ICDS topic, at least you will get minimum 2 to 3 marks. What is the meaning of ICDS? Listen, income computation and disclosure standards. Sir, these income computation disclosure standards applicable only for 2 fellows. Applicable only for boys. Not applicable for girls. There are 2 members. Boys means PGBP as well as IFOS. Boys. Not applicable for she. Salary, not applicable. House poverty, not applicable. Capital gain, not applicable. So it is applicable only for boys. That too, not all boys. Those boys who are following mercantile method. I repeat, those people who are following mercantile method. Okay, ICDS are applicable for those SSCs who are following mercantile method of accounting. That too, it is applicable for computation of income. I repeat, computation of income. Nana, for your final level examinations, PGBP important topic na, IFOS important topic na, so ICDS also important. That's all. But not applicable for salary, not applicable for house property, not applicable for capital gain. Applicable only for PGBP, IFOS, provided You are following cash method or mercantile method? Mercantile method. If you are following cash method, this concept is applicable or not applicable? Not applicable. Next one. What is the purpose of ICDS? Only one purpose. Early recognition of income. Come again. Early recognition of income or delay in recognition of expenditure. Common sense. You are recognizing income at the earliest and you are postponing recognition of expenditure. Ultimately, it leads to high profits or less profits. High. You are supposed to pay high tax or low tax? High tax. Correct? Yes. Chalo. Here next, one by one topic we are going to cover. Total 10 ICDS are there. How many? 10. Nana, one thing I want to clarify. When there is a conflict between ICDS versus Act, which will prevail? Act will prevail. When there is a conflict between rules versus ICDS, which will prevail? Answer, rules will prevail. Income tax rules. If there is a conflict between ICDS versus Supreme Court judgment, which will prevail? Answer, ICDS will prevail. Supreme Court judgment will not prevail. Last one, there is a conflict between ICDS versus accounting standards, which will prevail? ICDS will prevail. Moral of the story, so many Supreme Court judgments have nullified and so many accounting standards are also not applicable here. Okay, so please keep in mind some Supreme Court judgments nullified by ICDS. Total how many ICDS are there? Total 10 in number. I repeat, total 10 in number. Now please follow A. First one A. Number 1, accounting policy. I never told you disclosure of accounting policy. I told you accounting policy. Number 2, valuation of inventories. Number 3, construction contracts. Number 4, revenue recognition. Number 5, tangible fixed assets. Number next, effect of changes in foreign exchange rates. Number next, government grants. Number next, securities. Number next, borrowing costs. Number next, provisions, contingent liability, contingent asset. Total how many number? 10. Important for exam. Out of this, some are more important. Anyhow, the points are as follows. Follow. Ultimate introduction of ICDS. Number 1, who will introduce ICDS? Central government. Number 2, what is the purpose? Computation of income under 2 heads only. Which head? PGBP, IFOS. Is it applicable for salary? No. House property? No. Capital gain? No. Next one, mercantile method or cash method? Mercantile. No separate books are required for ICDS. ICDS purpose, no need to maintain any books. Next one, income always taxable on gross basis or net basis? Gross. What is the purpose of ICDS? Early recognition of income, delay in recognition of expenditure, early payment of taxes. Nana, it nullified so many Supreme Court judgments or not? Yes. Next one. Now, disclosure requirement. I need to disclose. In 2 parts I need to disclose. I need to disclose in written or I need to disclose in tax audit report in form number 3CD. Next point. Accounting standards applicable. Still, ICDS I need to follow or not? Yes. Next one. Presumptive tax people. Presumptive tax 44. AD, AE, ADS. Still they have to follow or not? Yes. Next one. It is not applicable for cash method of accounting. I already told you. Only for mercantile. And is it applicable for MAT? No. Because in case of MAT, I already told you, you have to follow only those adjustments specified in explanation 1 of section 115 JB. Next one. Is it applicable for AMT? Yes. Why? Tell me, in AMT, adjusted total income you have to calculate. How to calculate? First, you have to take total income. Wait. Total income consisting of so many heads. PGBP as well as IFOS. Indirectly, accounting ICDS are applicable for computation of AMT or not? Don't confuse. For MAT, I will take net profit as per Companies Act. Salary, house property, PGBP, not like that. I will take net profit as per Companies Act and do some adjustments. Then where is the question of boys? PGBP, IFOS. Therefore, ICDS not relevant for computation of MAT. But ICDS is relevant for computation of AMT. Logic. Last one. Total how many ICDS are there? 10. That's all. One by one ICDS we are going to cover, which are most important that we are going to cover. Okay, follow. Follow. Number next, accounting policies, ICDS 1. Now here we will follow all fundamental accounting assumption. GAC we will follow. G for going concern. A for accrual. C for consistency. All the things we will follow. But we won't follow two things. What? We won't follow prudence. We won't follow materiality. I repeat, two things we won't follow. Number one, materiality. Number two, prudence. Next one, here another amendment is also there, another change also there. What? Can I change the accounting policies? Answer, as for your accounting standard, yes. But here answer is no. Accounting policies we cannot change unless otherwise there is a reasonable cause. Come again. Unless otherwise there is a reasonable cause. These are the two things. And the last important sentence, whether expected losses are allowed or not allowed, that is the question. Everybody in the class, expected losses are, some are allowed. I repeat, some are allowed, some are not allowed. Which are allowed as for ICDS, the same also will be allowed as for Income Tax Act. But some are not allowed as far as ICDS, then the same also not allowed as far as Income Tax Act. Student doubt, sir, what is that? I will take one best example, valuation of inventory. I repeat, valuation of inventory. Ready, start. Everybody in the class, I purchased some goods. Okay, raw material I purchased. I purchased at the rate of 10 crore, cost 10 crore. But today, unfortunately, because of war between Israel and Iran, the price has come down. NRV today is 8 crore. Anybody in the class? How to value inventory? Cost or NRV, whichever is lower. Now today, you have to record at 8 crore or 10 crore? 8 crore. Until indirectly you are offering loss of 2 crore or not. But honestly speaking, you never got the loss. This is only adjustment, book adjustment, correct? It is expected loss only, no? Allowed or not allowed? Allowed. Because ICDS is very clear. Inventory must be valued at cost or NRV, whichever is lower. Moral of the story, it is allowed as for ICDS. That is the reason Income Tax Act also allow. Correct? Next question. Impairment of asset. I only purchased one building in Amaravati capital, Andhra Pradesh capital for 10 crore. But when Jagan became CM, the value has come down to 8 crore because he said that it is not a capital anymore. Automatically rate has come down. That is called as impairment of asset. Anyone? Impairment of capital asset allowed or not allowed? Not allowed. Correct? Not allowed, yeah. Sir, as for AS 28, that is accounting standard. I am not talking about accounting standard. I am talking about income tax. In ICDS, it is not allowed. Okay. Therefore, what is the answer? Income Tax Act also not recognized. Another example, while computing book profit for MAT computation, we need to disallowed these kind of losses, correct? Diminishing in value of assets, IRP, SCD, diminishing in value of asset must be added back or not? Yes, that's all, Nana. These are the things. And tell me, only 3 changes. Number 1, change number 2 things not recognized. Materiality, prudence. Number 2, can I change accounting policy? No. Unless otherwise there is a reasonable cause. Last one. Expected losses allowed or not allowed? Few are allowed. Which are allowed as for ICDS, that is allowed as for Income Tax Act. Don't say which are allowed as for Income Tax Act, allowed under ICDS ille. Which are allowed as for ICDS will be allowed as for Income Tax Act. Nana, with this, we done with the topic called as ICDS number 1. What is ICDS number 1? Accounting policies. See the differences, ma? As for AS, as for ICDS. In AS, prudence materiality cover. But in ICDS, prudence materiality not covered. Next one. Changes in accounting policies are allowed as for accounting standard or not? Yes. Kada. But not allowed as for ICDS. Next one, expected losses are allowed as for accounts or not? Yes. But some are allowed, some are not allowed as for ICDS. Next one, as for accounting standard, no need to disclose return of income, no need to disclose form number 3CD. But as far as ICDS, shall I need to disclose or not? Yes. With this, done with the topic called as ICDS number 1. Nana number 2, valuation of inventories. Almost all everything is same. Only two differences are there. Start. What is the valuation of inventory? Which model we have to follow? Cost or NRV, whichever is lower. All of you. Entire this topic is as follows. ICDS topic. I request you all please follow. Number 1, ICDS. Number 2, stock. It meant for sale or usage in the production or services. We have to follow FIFO method or weighted average method. And revaluation is anyhow allowed or not allowed? Revaluation is not allowed. But how to do valuation? Already I told you, cost or NRV, whichever is lower. But one thing for sure, this is most important point for exam point of view. In case of dissolution of the firm, don't value at cost or NRV, whichever is lower. You have to value at only NRV. But one Supreme Court judgment, very important point, follow. Firm dissolve. I repeat, firm dissolve. But other partners want to continue the business. Then what is the answer? Cost or NRV, whichever is lower, or only NRV? Only NRV. This is the very, very, very important point with respect to ICDS number 2 is concerned. So this is the final answer. In normal way, valuation of inventory is cost or NRV, whichever is lower. In case of dissolution of the firm, only NRV. But in case of dissolution of the firm, remaining partner continued the business, then what is the answer? NRV. This is the topic called as ICDS number 2. Next one, ICDS number 3. Only 2 points are most important. Number 1, retention money taxable or non taxable? That is the question. Answer, as for Supreme Court judgment, as for accounting standards, retention money is not at all taxable. But as far as ICDS number 3 is concerned, retention money is pakka taxable. Repeat, retention money means when the project is about to complete, now the person contractee will not pay entire amount. They will pay only some of the amount and balance amount they will retain. The retained amount is taxable or not taxable? Answer, as for ICDS, it is pakka taxable. Last question. Losses, expected losses, anything is there. Allowed or not allowed? Not at all allowed. But as for accounting standards, it is allowed. But as for ICDS, expected losses will not be allowed. This is ICDS number 3 major important points. Next one, ICDS number 4, revenue recognition. Revenue 3 types. One is sale of goods, one is sale of services, one is interest, dividend, royalty. That's all. Number 1, sale of goods. How to recognize the income? Only one word. When there is a reasonable certainty about the collection of amount. I repeat, reasonable certainty about collection of amount, then that is allowed. What is the meaning? Listen. One day I sold the goods to Mr. Sai. Now, is there any guarantee that Sai will repay my money? No, na? Then don't recognize. Yes, I have confidence about that person. Yes, surely he will pay. Come on. I have reasonable certainty about collection of this amount. Then can I recognize or not? Yes. So answer, with respect to goods, sale of goods is concerned, the income can be recognized. See the word sale of goods, reasonable certainty about collection of revenue. But services, only one word. What is that? POCM, percentage of completion method. But one small change, if the contract duration itself less than 90 days, contract duration is less than 90 days, then don't follow completion method. Don't follow percentage completion method. Just recognize the revenue only once the contract got fully completed. Okay. Last one, interest. Not like that. Interest will be recognized on which manner? Timely. Timely means based on the time factor. SLM method you have to follow. Whereas royalty and dividend, we have to follow the provisions of the act. Okay, special provisions in Income Tax Act is there. That provisions only you have to follow. This is the topic with respect to revenue recognition is concerned. Next one, ICDS number 10, that is provisions, contingent liability, contingent asset. Anybody? Provisions will be allowed or not allowed? That is the question. Answer: provisions will be allowed when there is a reasonable certainty about cash outflows. If there is a guarantee that we need to repay that amount, it is a guarantee that we need to incur that expenditure. In that case, provisions are allowed. Okay. Otherwise, provisions will not be allowed as deduction. So it is the important question for exam point of view. While computing PCBP income or while computing IFOS income, they will ask one question: provisions allowed or not allowed? Number one, is there any reasonable certainty about cash outflows? Yes or no? Yes, sir. Then it will be allowed. Otherwise, it is not at all allowed. Next and last but one, that is contingent liability, contingent asset. Only one word answer: contingent liability is not at all recognized, whereas contingent assets also don't recognize, but assess continuously. When there is a certainty about collection, then only recognize. Otherwise, contingent liabilities also don't recognize, contingent assets also don't recognize. This is the topic with respect to PCC. P for provisions. Now next one, C for contingent liability, contingent assets. Tell me, provisions will be allowed or not allowed? Allowed. What is the condition? When there is a reasonable certainty about cash outflows. Okay, that is important topic. Next one, some more important topics are there. Government grants. I repeat, government grants, can I recognize or not? Yes, when there is a reasonable certainty about collections, then government grant shall be recognized. Next topic, another topic, borrowing cost. Everyone, borrowing cost, one important point is there. Tell me, qualifying asset related borrowing cost only we need to recognize. All assets are qualifying assets, but with respect to stock in trade, it require minimum time period of 12 months. Then only it is called as qualifying asset. And the last point here, in case of borrowing cost, sometimes what happen, I will have idle funds. That idle funds I will make in temporary investments and I got the interest. What is the treatment of interest? We need to take the net figure or we need to take separately. My doubt is as follows. I have taken 10 crore loan. Interest is, let us say, 18% interest I have to pay. It is my expenditure. Today, because of heavy rains, my work has not continuing right now. In that case, this 10 crore amount I have made in FDs, fixed deposit. Then I got the interest amount of 8%. This is my income. How the treatment will be? Number one, I need to recognize 18 crore as expenditure, 8 crore as income, or else I need to take net figure 18 minus 8, 10 crore as a expenditure. What is the answer? Answer: show separately. I repeat, always show separately. Interest income is taxable. Interest expenditure will be allowed separately. Don't deduct out of the expenditure. Always remember one secret here, one mantra here. Gross income is only taxable. Always remember, gross income only taxable. Okay, chalo. With this, we're done with the topic called as ICDS. Now I wanted to tell you some important chapters related to CMA final exams are concerned. Please follow. Number one, these are the most important topic. First one, trust. Very important topic, trust. In trust, compulsory you have to solve the problem. That too, the pro forma problem you have to learn. Okay. Example, gross receipts. Out of gross receipt, two things we have to deduct. Number one, corpus donations. Number two, anonymous donation. But in anonymous donations, compulsory you have to give the deduction. How much is the deduction? 5% of total donations or 1 lakh, whichever is higher. That you have to take care. After that, you have to set aside some percentage of amount. How much? 15%. Balance 85% only you have to apply. Out of that, you have to apply some application of amount. you have to apply some deemed application amount also you have to do. But recently some new sections has introduced section 115 BBI. That section you have to take care. Okay. So charitable trust chapter, most important chapter. Next, number 2, capital gains chapter. Capital gains, the important thing is rates important. Next, slum sale important. Slum sale means section 50 capital B. Next one, 50 capital C also important. What is section 50 capital C? Immovable property sold for a consideration lower than the stamp duty value. That is important. Next one, 54 exemptions important. Section 54 exemptions important. These are important topics. Next chapter, PGBP. In PGBP, 100% important chapter it is. Section 32 important. Section 36 important. Section 37 important. Section 40 series important. Section 40 entire topic is important. 43B is most important. Deduction will be allowed on what basis? Payment basis. Next one, problems also important. Total income computation problems. Okay, PGBP chapter important. Section 28 important, that is charging section. 41 also important, that is deemed income, deemed business income, most important. Next chapter, number 4. In IFOS, certain points are important, that is interest important, gift also important, gift, and dividend also important, dividend. And most important topic, premium on issue of shares by closely held company. Premium on issue of shares by closely held company. That is also important. Next one, advance money received and forfeited. Advance money received and forfeited. That question also important. Next chapter, in case of set off and carry forward, advanced topics are only important. Advanced topics, that is A, B, D, L. Amitabh Bachchan daughter-in-law. A for amalgamation, B for business reorganization, D for demerger, L for legal inheritance. These topics are important in case of set off and carry forward of losses. Next chapter, deductions chapter. In deductions chapter, the most important topic is 80C important, 80D important. After that, 80JJAA important, additional employment. After that, 80G important, 80TTA also important, 80QQB, that is royalty on books, these are important. But CCD also important, CCD, and latest amendment CCH, Kargil country heroes, that is Agnipad, important. Deductions chapter important. Next chapter, in case of firm and in case of LLP, out of this AMT topic important, but you won't get direct question related to AMT. You will get PGBP combination plus AMT plus 40 small b. This question is important. Number 8, company, the most important chapter, most important, that is book profit computation is important, MAT important. Next, number 9, ICDS important, but not entire ICDS. Comparison important. Just now I told you comparison. Like this, comparison points are most important, ICDS. Next, number 10, Black Money Act important. Black Money Act important. Only those problems which are given in institute material that you can do. That's all, enough. Next, number 12, non-resident topic important. Non-resident. But in this chapter also, especially 115A important, 115BBA also important, 115 BBA. Next one, section number 9 important. Next one, scope of income important. Scope of income. First you should know whether it is taxable or not. Section 9, deemed to receive, accrue, arise in India important. And NRI also important. Next one, TP, transfer pricing. My request, don't do any selection preparation in transfer pricing. Read entire chapter. Read entire scanner questions also you have to follow. Especially cup method important, cost plus method important. Practical point of view, these two are important. And 94B also important. What is that? Bar on interest. But entire chapter you have to follow. Entire chapter. Next one, 14, DTAA. Most important chapter, because if examiner asked this chapter, indirectly you can test your knowledge about deductions, you can test your knowledge about computation, and you can test his knowledge about your tax rates. Kada? So important chapter. Okay. These are most important. Next, number 15, bar versus dispute resolution committee. Out of this, one theory question is important. Okay, bar, board for advance ruling, or else DRC, dispute resolution committee. Theory question important. Okay, now these are very, very, very important chapters. Now, next topic, compulsory you have to do total income problems. Total income problems you have to do. Because of this reason, you can revise all the chapters. And the two, these questions are repetitive in nature. So this is important. But compulsory you have to write working notes. If you have not written working notes, you will not be awarded with full marks. Working notes compulsory. And take proper assumptions and write working notes. This is important. Next, B category topics. That is section 139.5. Important only, but you can give somehow least priority when compared to above topics. 139.4, 139.3, 139.8a, updated return. Next one, 142.2a. Next one, 147. Next one, 132, search and seizure. Next one, IT80, income tax appellate tribunal. Next one, 264, 154. These are B category topic. Important, honestly speaking, A category. But I want to tell you, first you have to read these practical questions. After that, you can come to this next series. But in A category, you can add one more topic, that is equalization levy. Important. Equalization levy important. Okay, fine. And enough. What you have to do is, first you have to take the scanner. In the scanner, you will find so many question papers. But you have to see the most weightage chapters. These are the weightage chapters. Honestly speaking, these are the most weightage. These chapters, you have to prefer LIFO mode. Last question first you have to prepare. And next one, while solving the questions or while reading the subject, you have to follow the latest provisions. Don't see the old textbooks. You have to read the latest one. That too, compulsory you have to write the working notes. Why I'm keep on telling about working notes, you know. Now CA exam, CMA exam, CS exam, compulsory the paper evaluator will get the scheme of valuation. So they will not deviate from scheme of valuation anymore. Compulsory they will follow the scheme of valuation for sure. Therefore in scheme of valuation they will specify each and every point separately, and for this point 1 mark, for this point these many marks, like this they will give clearly. So if I am the paper evaluator, I need to follow the scheme of valuation just like that. Therefore, I am suggesting you everyone, if you have not written working notes, you will never ever get decent marks. Therefore, please write the working notes. But all of a sudden, you cannot write working notes in the exam hall. Therefore, what you have to do, you have to take one textbook or else one author book or else any institute material or your choice, but provided latest one you have to take it and take the last questions, because last questions are based on the latest trend and that is only complex questions. That question you have to take it and you have to read line to line and you have to solve with the calculator as well as paper and pen. You have to do it. But no doubt, some points are very simple, some points are tricky points. For example, in one point, they will ask like this: revaluation of asset. You don't know the answer, but I'm telling you, revaluation of asset allowed or not allowed means not allowed. If you have taken as a P&L debit, what you have to do? Add back. So you learn new point. So that point you have to write the synopsis. Revaluation not allowed, therefore it should be disallowed. But open challenge, yeah, if you go for another 2 more or 3 more questions, the same point will be repeated again. At the time of second revision, you don't need to concentrate about that particular point. Okay. Next, another point. Bad debts recovered. Bad debts recovered. What is the treatment? Number one, once upon a time when there was a bad debt, deduction allowed under section 36. Now when you received back, it is taxable under section 41. But you have to write the synopsis in the running notes. Preparation time itself, you have to write the synopsis. But in another question, they will change the word. Bad debts recovered, but that bad debts earlier not allowed as deduction. What is the treatment? So new point, you have to check it. Another question, bad debts recovered, but earlier partially allowed as deduction, partially disallowed. What is the treatment? So this is the way of learning. Okay, so please stick on to scanner first, plus ABC analysis, plus number of times you have to revise, plus working notes, plus amendments. If you follow this, easily you can score minimum 60 marks. I repeat, scanner in the sense past exam questions. ABC analysis means important topics you have to cover first. Not important topics, important chapters first. Last one, you have to revise n number of times. Don't revise entire chapter. Don't revise entire subject. Revise A category topic n number of times. B category topic less number of times. C category topic very less number of times. Next one, working notes you have to follow. So while preparing itself, you have to read the working note. You have to write the synopsis. Then automatically in exam hall also you will get the habit of writing the working notes and you will get decent marks. Last, follow the amendment. Some students, what they will do, they will take the coaching along with the Jesus earlier. The same book they will follow now also. But nowadays, the subject has completely changed. So you have to follow the latest Finance Act and you have to follow the latest amendments. That is the reason you can take any textbook or any author book, whatever you are comfortable, and follow the LIFO and follow the ABC analysis, and the same book you have to revise number of times. And the last point I want to tell you, one day I met one person called as Goddess Saraswati. Now she has 4 hands. In one hand, she has 4 books. Okay. One is accounts, one is law, one is tax, like this. In another hand, she has one chain. She is keep on repeating. In another 2 hands, she is practicing Veena. Then I asked that person, ma'am, what is that? Then she told me, these books practice number of times. Repeat, these books practice number of times. You have to follow from this end. Don't follow from other end. If you follow from other end, you will think like this: practice number of books. Don't practice number of books. Take one book. That is only Bible for you. That is only Quran for you. That is only Gita for you. Okay. That book only you have to stick on and prepare, revise, and write working notes and concentrate. Easily you will score good marks. Okay. Fine. So thank you. Good luck.